and a double-digit breakout in earnings. It makes sense to consider alternative scenarios. So from your perspective, Constance, what is the alternative scenario that's most likely?
So, I would say there's actually three scenarios, right? There's the no landing, which of course would be the ideal situation where the Fed cuts perfectly presciently. We manage to avoid some months of negative job growth.
여러분
and the economy kind
안녕하세요.
of hums along.
안녕하세요.
Then there's the soft landing, which of course
뉴스
is still a
읽어주는
landing, let's not
여자입니다.
forget, right? So we would be looking at sort of near
오늘도
zero GDP growth for
돈 벌고
quarter two.
왔어요.
And then we'd be able to progress. And then, of course, there's the hard landing, which would be a recession.
좀
And I would actually say
볼까요?
the risks are fairly evenly balanced across those three. There are so many unknowns. I mean, obviously, what's happening in the Middle East, how that's going to impact oil prices, how that's going to
역시
impact
제가 어제 예상대로
there's always that possibility, right,
계속
that you're
올라가고
going to have
있었어요.
a recession. But I do think the soft landing scenario
무당이
is the most
다름없어요,
likely.
진짜.
given
그렇게
the fact that the Fed
얘기했는데
is sort of
어제
indicating
제가
that
한
they're
푼도 못
willing to
벌었어요.
move on interest rates in the
전략을
coming
좀
Constance, I know you're across the markets as
잘못해가지고
well, so let's do some of that too. Equities at all-time highs, credit spreads really tight. We've had a ton of issuance for January. Lisa can go through the numbers. Talk about a
지금도
massive
계속
month
올라가고
for credit
있어요.
issuance for the month of January.
좋네요.
Constance, when you look at those easing financial conditions, do you see that delaying weakness in the economy? Is that sufficient?
That's an excellent question. I think
왠지
it's
오늘
somewhat
또
unclear.
매수로
There are
들어가야
pockets
될
of the
듯.
economy where we know there's significant stress, right? So Class B and C office is under significant stress. We see this surge that we've had over the last several years in apartment building that's pushing down rent prices.
근데
Overall,
사실상 어제 진짜
prices and overall a good thing
되게
for the consumer,
월요일이다
but
보니까
could cause some stress in
어렵죠.
the
들어가기가
residential
어렵고
housing market.
너무 애매한 그
the layoffs
타이밍이
are
좀
coming,
많았기
we think.
때문에
And so, once you start having
결국엔
negative job prints,
졸아가지고
we get to that point,
못 들어왔어요.
that can spiral
오늘은
into some
좀
pretty
다른
negative results for the
전략을
economy.
생각해봐야겠는데
I think it's a very, very tight rope that the Fed
왠지
is walking and that equities are walking,
매수
quite honestly.
분위기인데.
And so, while I'm overall
일단
bullish because I think we're having a huge productivity surge,
일단
productivity
뉴스
surges are unevenly
어떤
distributed throughout the
뉴스가
economy, and there
있을까요?
could very well be significant pockets of disturbance that ripple out and cause a wider problem.
So you're looking for that first move in March, that first rate cut. Constance, with that in mind, when you hear people say that Chairman Powell tomorrow will be non-committal,
재밌는 거
how
뭐가
non-committal can he be,
있는지
given the Federal Reserve likes to do this in a predictive fashion?
Yeah, I mean, look, he wants to keep all options open because, of course, there's always surprises. But I think he also wants to lay the ground so the market isn't completely shocked if the Fed moves in March as we expect. And let's not forget, one of the things that he's mentioned is that policy is very restrictive, right? We've seen that from Williams, we've seen that from other Fed speakers. And so do they need to be very restrictive? Can they move to merely moderately restrictive, still putting downward pressure on prices, but also
저도 제 파워가 좀 필요해요. 저한테 일단 나한테 하고 나중에 시청자분들한테 할게요.
Going into the big one tomorrow. Constance Hunter there of macro policy perspective, looking for that March rate cut, Bramo, ahead of tomorrow's meeting.
I love what you were talking about with respect to just the credit markets being wide open and how that changes some of the weakness that people are talking about. We're talking about almost $190 billion
뉴스를 조금씩 업데이트할게요.
just in January.
참고하시면 됩니다.
Crossing $200 billion, so people are saying is pretty great. And this comes at a time when spreads have hit the lowest for that particular asset class going back to January of 2022. So you put all this together and you wonder how much that's going to actually have an effect on the overall economy ahead of whatever the Fed does or doesn't do.
We talked about whether they would need to survive
그리고
until
어떤
2025.
발표가
It looks like they're getting in front of
있는지
2025 already.
Thrive
알아봐야겠다.
in 2024, right? It
아.
seems like this isn't really an issue.
아쉽네.
I'm wondering how much is
10시
for the lower-rated companies who are seeing some come to
55분에
market.
점심
Is this just a window?
레드복
And are they seeing this
섬의
opportunity
판매
before that
지수
moment?
Taking
발표.
advantage of it big time.
오케이,
Busy
10시
January. What's that
55분
number again?
오케이. 그때까지 들 시간이 있으니까 조금 뽑아야겠죠?
Coming up next in the next hour, Joe Castillo, the CEO of Citizens Bank of Edmund, Nicolai Tangen, CEO of Norway's Sovereign Wealth Fund, and Emily Rowland, Co-Chief Investment Strategist at John Hancock. All of
네, 지원씨 감사합니다. 12시에 구인인원 SB 소비자 신뢰지수 발표. 오케이.
Shaped your strategy for the bank. Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine.
지원 씨 덕분에 감사합니다.
Every weekday at 9 a.m. only on Bloomberg.
A cruise ship is much more than a flotilla of financials and numbers. Naftali Holt showed me around the celebrity beyond, Royal Caribbean's newest ship, rolling out not the red carpet, instead the magic carpet. An example of investment that's yielding returns in several different ways.
Originally, actually, we designed it because we wanted to have a really nice platform for tendering, because sometimes we can't comfort destinations. Functional. Exactly, value functional. And then we looked at it and said, why don't we just make it a really cool feature spot where people can enjoy it beyond the functional space? And we created this bar. It went up and down. How about the Instagram? Can you speak on that? About that?
I can
An Instagram moment with the sunset, having a drink with your friends or family. That's
오케이. 뉴스를 일단 업데이트했고, 봅시다. 지금 상황은 꾸준히 간신히 올라가고 있는데 지금 가격 17,700원이라니. 와. 역시 제가 어제 계약은 낮게 잡았네. 계약은 한 17,632원 정도? 뭐 물론 그때까지 안 떨어졌지. 기다리다가 더 줘야 안 되겠다 싶어서 빠져나갔어. 그러니까 어젠 수익은 빵원. 그렇기 때문에 오늘은 좀 열심히 벌어야죠. 근데 화요일이니까 좀 재밌지 않을까 싶어요. 어제 지원씨 되게 좋은 표현을 얘기하셨잖아요. 그 차트가 약간 잔잔한 파도처럼 이렇게 있었는데 오늘은 조금 파도가 좀 큰 편이었으면 좋겠어요. 과감한 플레이어 하면 그냥 레버리지 아예 바꿀까요? 레버리지 한 1대5? 농담이고 아직은 그런 여유가 없고 저 완전 이제 아직은 곱쟁이라서 최대한 과감하게 해볼게요.
We see inflation peaking and growth peaking.
This is probably that peak Goldilocks scenario. And really the next few months are going to really determine whether that soft landing story becomes the base case.
The probability of recession has pretty much vanished over the last couple of quarters.
I do think that there's improving prospects for a soft landing here. That prospect, I think, has improved materially in my view.
Hard landing looks soft until it's hard. It's going to be hard, I'm sure of that. It's going to happen at the end of the year.
조금 더 떨어지면 들어가셔도 괜찮을 것 같아요. 네, 저도 그렇게 생각해요. 지금 가격이 너무 많이 올라가기 때문에 조금 더 떨어지면 한 몇 개쯤 떨어지면 17,690원? 그때까지 떨어지면 좀 조금씩 조심스럽게 들어가도 될 수도 있어요. 그때까지 조금 기다려야 될 것 같아요.
UPS in early trading is down by more than 6%. Gramo GM higher by 7.5.
And it all had to do with the 2024 estimates, UPS underwhelming by pretty significant margin. How much is this because their packages are just going down, the profit margins are going
제가
down?
얘기하는 순간에 바로 떨어지고
The
있어요.
opposite story, seeing additional profits in 2024. Speaking of certain cost cuts, but defying expectations of a much poorer outlook, even with all the concerns about higher labor costs, about a transition to EVs that is getting stymied, and potentially a more difficult scenario for consumers.
We'll speak to Mary Barrett a little bit later this morning. I think we still need to talk about the future for EVs given the setbacks. We talked about this in a previous hour. It's worth going over again. We've had Hertz dumping 20,000 vehicles, Ford pulling back from production of the F-150 Lightning. Had some news over in Europe.
일단
I
같이
think on the likes of Renault and VW as
기다려보시죠.
well. News not good there at all.
But this also comes as people are saying it is not necessarily completely thrown out of the water, but just delayed in terms of the transition. But I want to hear from GM, how are they adjusting the mix in response to that? Is it still all trucks all the time, including gas guzzlers, because that's what people are buying? And oh yeah, if you have money, they're the ones that are buying it too because no one wants to take out a loan for 7%.
But also dealers not only wrote a letter to President Biden saying this is not working, these EVs are sitting on a lot, but the dealers that sit on the GM advisory board, the Wall Street Journal says they're telling GM people actually want hybrids. They're transitioning slower. They want a mix to make sure that they have that range capability. So, you know, potentially she'll have something to say about that. Maybe they're moving into hybrids.
This is kind of the interim moment for the auto industry, and I think Mary Barrett's pushed back against the idea that you need this because it distracts ultimately from the ultimate destination, which is to get to EVs. Ford seemed to have taken a very different position on this based on what we heard from Mr. Lawler maybe a few months ago.
He had a longer-term ratcheting down of expectations in terms of total deliveries of electric vehicles and manufacturing. I'm curious how much is this also coming at a time where Chinese auto manufacturers have real upper hand. And even though they have an upper hand, they're not necessarily making the profits because they're trying to drive competition out by simply lowering their prices. This is a complicated story, and it's not quite clear exactly how it's going to be won.
Mary Barrett, Chair, CEO of GM, coming up a little bit later on this morning around 10:15 Eastern Time. Let's get a snapshot of the markets for you. Equity futures on the S&P 500 negative here by 0.1%. 5 names, $10 billion of market cap, just unbelievable. We'll hear from the likes of Alphabet and Microsoft this afternoon. And then on Thursday, Bramo, it's Apple, Meta and Amazon.
I mean, this really is sort of the make it or break it moment. A lot of people talking about how top heavy this market is. If we have ridden all of the gains so far on these particular names, how vulnerable are we to a disappointment that moves us in the opposite direction? Basically, everyone we put that question to says they're not going to disappoint, so stop even thinking that way.
Just in case we run out of time, do you want to take a look at the bond market briefly? 10-year yield down a single basis point, big move lower yesterday. Do you want to give us the why?
I would love to.
Sure.
There was a preview of what kind of treasury financing would be necessary this year, and it came in lower than expectations because of tax receipts and other factors that Janet Yellen was looking at.
잔치가 나와야죠.
The sort of supply isn't going to be there to the same degree that people thought, so that means that there was a rally in the bond market.
4.06% on a 10-year, the 2-year 4.32. Coming up this hour, Jill Castilla, the CEO of Citizens Bank of Edmond, on the outlook for regional banks. That conversation starting very shortly. Nikolai Tangen of Norge Bank Investment Management on the AI-driven surge in tech, and I have to say also, Bramo, some weakness in commercial real estate.
It was the first time in a while that they underperformed the benchmark, and it was because of the diversification, how diversification can bite when it really is the consolidation among a few names that's really the winning.
And then we'll get back to that EV story later this hour. Craig Trudeau on GM's better than estimated fourth quarter earnings. We begin with our top story this hour. Regional banks looking to bounce back from a tumultuous 2023, but risks remain.
오케이, 지금 올라가고 있어. 근데 왠지 느낌상 계속 이럴 것 같은데 계속 이 파도 계속 이어질 것 같은데 제일 답답한 거예요 이거.
Very carefully, and I think the lending capabilities that they're going to have and the capacity that they're going to have to lend is going to be very limited.
We can get you a much more stronger story than that with Jill Castilla, the CEO of Citizens Bank of Edmond, who joins us around the table now. Good morning, Jill.
Good morning.
You've got a powerful story to tell. It is not that gloomy. Talk us through it.
It's not. I think relationship bankers that have intimate knowledge of their borrowers and that have been disciplined through these last 5-10 years are not going to see the type of weakness in the commercial real estate market that others are anticipating. I think those that have more distance from their borrowers or outside the banking system, I think that's where we can have
뉴스를 좀 알려주고 싶은데 진짜 재미없어요. 이 뉴스가 재미없고 아마 별로 딱히 중요하지 않은 것 같아서
then maybe smaller type of commercial real estate that maybe office occupied still, but that the lender knew this borrower and
일단 뭐 재밌는 뉴스 있으면 그때 알려드릴게요. 지금은 그냥 음악 드시죠. 긴장을 풀어주고 뒷땅 화장실 가지실까요? 조금씩 갔다 오세요. 조금씩 갔다 오시고 저 아마 조금 있다가 차라도 좀 마실까? 마시면 좋을까요? 그러니까 저도 그 생각했어요. 그 아줌마 눈빛이 너무 살벌하네요.
And also you had more, deposits are non-interest bearing, non-maturing deposits. And so when you have that, there's not, even though you had some loss and some now competitive pressures on the interest bearing deposits, you just didn't have those same pressures as like some of the large regional institutions. And broker deposits also increased quite a bit due to the demand earlier last year. And we've seen that soften quite a bit. Again, it goes back to relationships. And I think whenever we look at having 4,000 plus banks in the United States is a great strength for us, both in having a bank in your location. If you're in rural areas, you may not have access to a bank, you have consolidation. I'm in a suburban area with over 50, 60 banks in a 100,000 person town, but there's relevancy for a small bank because we're the ones sponsoring the football stadium and the Little League games, and we put on big street festival to revitalize our downtown. There's social capital there that you don't find in larger institutions, and you see it even represented in TV or movies, just how important a bank can be. Consolidation yields distance, which I think also yields risk. We're seeing that as we just talked about
떨어지고 있구나. 조금 더 떨어지면 그때 전수 잡고 매수로 들어갈 수 있을 것 같아.
Systemically makes a difference.
Let's talk about some of those relationships, especially at a time where a lot of Fed officials are talking about anecdotes and how important they are to really understanding the economy. How much is the economy slowing? Do you get the sense that your clients, the relationships that you have, are expressing a greater degree of concern than some of the macro data might suggest?
I really don't see that in our locality. I think regionally you do hear that. It does have an impact on small business as we have rates increasing for them, especially those that have variable rates where they're not having a big repricing or refinancing, but this is hitting them at with
찬스일까요?
So they're starting to have that pressure as commercial real estate has the higher needs to be able to service their debt. We've seen rents go up quite a bit. So some of the small businesses
지금이야 찬스일까요?
consumers as well. The higher cost of putting food on the
나만
table
그렇게 생각해요?
and operating a household has been really challenging.
You talked about the strength of being a smaller bank and all of these relationships and the ability to diversify in the way that you want. How vulnerable do you feel to some of the new capital rules that could come down the pike that we keep hearing about in Congress?
Yeah, the new capital rules don't directly impact me because they're targeted for larger institutions, but there will be some type of trickle down. What I'm most concerned about those new rules is where we have greater specificity of whenever it's that this is going to cost you more capital versus it being generally you need to have more capital, is you have unintended consequences. So then you have potentially some transactions that would occur within the banking system get moved out of the banking system and actually could have more harmful impacts to the economy and less ability for regulators to have an impact.
Do you think the proposal meets the moment then? Based on what we saw last year, what was that in your mind? Was that a failure of regulation or oversight?
Just as we need to hold banks accountable, I think regulators are also accountable too. We have really great regulations. We have really great decentralized regulatory structure in the United States, which is a great strength. And I think where we've seen some failures or some vulnerabilities whenever that hasn't been executed well. So that's what I would say is that we really have great regional examiners that are on the ground that understands the local economy, what type of risk banks are taking. And it's just important that they continue to do that. And I think changing the structure kind of can penalize and take that autonomy out, and you then aren't able to assess risk as sophisticated in such a sophisticated manner as you can do before.
What kind of proposal would you like to see? Some kind of deposit insurance reform? What would you like to see?
I think the deposit insurance is also, there's so many different tools with marketplaces to be able to exchange deposit insurance, ability to pledge collateral to deposits, but there's really, to me, there's no need to really change anything there. We have less than, we're right at 5% uninsured deposits in our organization, and when we saw organizations last year be over 90% uninsured deposits, there was no reason for that. There was plenty of tools to be able to use, and you now see banks really shifting and making sure that they don't have that exposure on an uninsured deposit or uncollateralized deposits.
Bramo, we've been talking about this with the regulation. The proposal at least meets the moment of 9, 10, 11 months ago, and the message I keep receiving every single time is probably not.
Not only that, but a lot of people are saying that probably down in Washington they're going to start to agree with this. Morgan Stanley actually started to turn bullish on U.S. banks.
Betsy Graysick,
because she didn't think that the capital rules would be as harsh as some people were expecting. So that pushback is pretty widespread, and maybe some people are already pricing in that it's not going to really get applied as initially proposed.
We'll keep this conversation going. Jill, you're going to stick with us, I'm pleased to say. Jill Castilla there. Let's get you an update on stories elsewhere this morning. Here is your Bloomberg brief with Yahara Akers. Hey, Yahara.
Hi, John. Iran is urging diplomacy as tensions in the Middle East rise, following the death of 3 American soldiers in a drone attack over the weekend. Iran has continued to deny involvement in the attack, which the U.S. has said came from Iranian-backed militia. UPS shares are falling in pre-market trading after lowering its revenue estimates for 2024. The company's fourth quarter revenue also fell short of estimates, with the CEO calling 2023 a, quote, unique and difficult year. It comes as UPS tries to win back delivery business lost during tense union talks last summer. Meanwhile, General Motors reporting better than expected fourth quarter earnings.
제너럴 모터스 주식이 지금 올라가고 있고. 안 그래도 저희가 좀 속보 같은 거 있었는데 오일 주식이 올라갔다는 소식이 있었어. 에이? 뭐야? 뭐야 이거? 개 같은 거 진짜. 아니. 아니 들어가려고 했는데 지금 떨어지면 어떡해. 에헤이 참.
That conversation is coming up next. We'll catch up with Norway's Sovereign Wealth Fund, the CEO, just around the corner.
찬스인가요? 저도 찬스라고 생각했는데 갑자기 또 떨어지네. 뉴스 보면 지금 나스닥은 다른 주식 다 올라가고 있고 나스닥도 올라가고 있고 허허허 지금 해볼까? 일단 들어가 볼게요. 매수로 아이씨 진짜 밀당하네. 이 기사는 뭐야? 이 기사는 뭐야? 아니 이 사람아.
What happened was you were offered a money-losing women's basketball team, and you said, I want to be in the other sports as well. Is that right?
Well, yeah, you know, you got to be smart about this.
알다 모르겠다, 진짜.
DOJ or other authorities.
Could face bigger challenges next.
Was going to keep Green World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Live from New York City this morning. Good morning. Stocks pulling back.
주원 씨, 주원 씨의 조언이 필요합니다. 기다려 마라. 기다려 아니면 들어가.
Under surveillance this morning, the AI-driven tech rally extending into 2024.
You know, earnings optimism can outweigh temporarily, at least, what the impact is on higher discount rates. So we had the big AI boom pushing through earnings for tech stocks last year. Maybe we're seeing a little bit of that enthusiasm at the start of this year.
Earnings from Microsoft and Alphabet due later today. Apple, Amazon, Meta on Thursday. The Norwegian Wealth Fund raising its tech holdings on the back of the AI frenzy. CEO Nikolai Tangen saying this: despite high inflation and geopolitical turmoil, the equity market in 2023 was very strong. Technology stocks in particular performed very well. Nikolai, I'm pleased to say, joined us now for more. Nikolai, wonderful to catch up with you, sir. We've got to do two things, a range of things, but the first two, let's talk about tech, and then we'll talk about commercial real estate. For tech, you said to us recently that your broader return assumptions are lower going forward from here. Does the same apply to this particular cohort of stocks in the US?
전세인가요?
Well, we've had a huge rally last year, and a very large proportion of the returns we had in the fund were from the top 7 companies, right? Now, if you adjust S&P for that, the return was something like 12% instead of 26%, and you kind of have to ask how long that's going to go on for. Now, I'm a die-hard believer in AI and the effect it's going to have on our operations and the world generally, but in terms of valuations of the companies, that's a different question.
There is this issue of how fragile it makes the market to have
다음
such
타임
a
오케이
group of
접수.
stocks driving all returns. JP Morgan recently warned that there was a bigger risk to the overall equity market as a result of this, saying the key takeaway is that extremely concentrated markets present a clear and present risk to equity markets in 2024. Just a very limited number of stocks were responsible for the majority of gains. Drawdowns, on the other hand, could pull equity markets down with them. Do you agree with this? Or do you think that ultimately AI is the only game in town, and it doesn't matter how consolidated
설마 제가
the entire
지금
equity valuation
타이밍을
of the global
놓쳤나?
market really is to it?
Well, the first thing is that this has been going on for a long time, right? It's not something that's happened overnight. These large companies have become stronger and stronger, and it's natural when you talk to these platform companies that it really is a winner takes it all economy.
그러니까요.
And it's amplified by AI because it's so incredibly expensive to train the models that you really have the winners becoming even bigger. So it's not a new phenomenon, and I think it will last for some time.
Winner takes all.
아니다.
Really raises
너무
this question
억울해서
of the purpose
또
of
떨어져.
diversification. And Nikolai,
떨어져.
I'm wondering, especially if the diversification was responsible for the underperformance this year, does that mean that maybe diversification doesn't have the same benefit, and you should just
오케이, 역시 내 말 그대로 지금 더해지고 있어.
Well, we are, even though we are a very large investor, we have to be diversified, right? So we own a bit of all the listed companies in the world. We are participating in 9,000 companies. We have big bond holdings. We got big real estate holdings. I think it's the only way to be as a big and very long-term thinking shareholder.
I saw that real estate holdings dropped more than 12%. Let's talk about that a little bit,
놓쳐버렸어.
Something you said to me a long time ago has always stuck with me. When you're as big as you are, it's not what you're in, it's what you choose not to be in that really counts. Does that apply to real estate going forward from here?
Well, we have a bit more than 2% of the fund in unlisted real estate, and you're right. Clearly, results were negative last year, but there'll be some years when it's positive. So we think could be an opportunity to look to add to some assets. If you are a long-term investor, it's part of your mix.
Would you be actively now looking into real estate, Nikolai, or still too early?
이번에 또 따라야겠다. 조금 또 떨어지면 다시 올라가 대충 그때까지 기다려야겠다.
For longer, when you have that kind of worldview on the macro side of things, on central banks, how does that influence your thoughts on what you need to be in and what you want to steer away from?
Well, I think that inflation could be tougher to get down than what some people think. We are seeing wage demands across the world being pretty strong. This is something that hits all the companies, and typically what we see after a round of wage increases is that the companies raise prices to offset that kind of cost pressure.
늘어질 때까지 타이밍이 좀 걸릴 것 같아서 일단은 저는 티타임 한 15분 있다가 다시 올게요. 아, 그때까지 떨어져야 되는데 아무튼 봅시다. 기다려봅시다.
In terms of regions, with respect to artificial intelligence, but also with respect to just being able to beat inflation. In other words, is U.S. still the brightest place to concentrate more investment?
Well, we have nearly half the value of the fund is invested in the US, and we think we own tremendous American companies. Now, I lived in New York the whole of November. I met with some 30 CEOs, and wow, things are going pretty well there compared to Europe. So it feels like a good place to be with a large part of the fund.
So you'd be interested in increasing allocations to the U.S. versus Europe on the margins, understanding that you remain diversified?
Well, we have been doing that over the last year or so, but we feel pretty happy with the mix we have now.
Going forward, there's a real question around just how much returns are going to be lower and how to beat them, given the fact that the goal really is to just marginally increase returns based on the index. Where do you see the outperformance coming from other than artificial intelligence?
Well, you just have to pick the winners in all industries and all categories. You know, you basically will have winners in the luxury goods industry. You'll have winners in the cosmetics industry. You just have to have portfolio managers who really understand these sectors really, really well and pick the winners in the pharma industry and so on. And we got some great portfolio managers, and that's what they're doing all day long.
You said in January the way to make money in the long term, you have to be contrarian. Nikolai, what's the contrarian bet for you right now?
Well, I have to say, if you want to be contrarian, you walk down the main street of Davos, AI on all the different windows. The contrarian thing now would be to underweight AI.
Are you doing that?
Oh, we're not doing that in a big way. But if you really want to be a contrarian, that's probably what you do, and you probably pile into property stocks.
When you talk about some of the pharmaceutical winners, how much are you betting on the whole Ozempic existence of our future?
Well, it's one of the biggest holdings we have. It's Novo Nordisk in Denmark. It now passed LVMH as the biggest company in Europe. We have big holdings there. They do a tremendous job. And it's really, really exciting what this can do, not only to obesity, but also to all the other various illnesses which are related to it.
Nikolai, what are your thoughts on rebalancing when a name becomes the biggest holding, or at least one of the biggest holdings that you have? Do you just stick with your winners? Is that your approach?
We try to stick with winners. It's, just in psychology, many people want to sell the winners. The way to make money is often just to ride the winners and continue to be in there. And we would typically do that anyway because we are a relatively index-near fund. So that's what we would do.
Nikolai, wonderful to get your input today. Fantastic to catch up. Nikolai Tangen there of Norges Bank Investment Management. Ramo, where do you want to begin? Novo Nordisk, one of the biggest holdings now, given how much that's appreciated over the last 12 months. Real estate, I like this idea that if you wanted to be the ultimate contrarian right now, pull away from AI, pile into property.
He said not necessarily doing that, so I wonder how contrarian he is if he is going into artificial intelligence and also betting on the U.S.
Jill, let's talk about real estate if we can, just a little bit. You mentioned it earlier. Do you have a different view on commercial real estate? And is your view on commercial real estate different to your overall view on CRE across the nation? And what I mean by that is your bank exposure might be one thing, but do you think that speaks to the broader story at the moment?
Yeah, I recently saw a survey of banks that were confident with their own commercial real estate holdings, but not necessarily really confident broadly. And I think it has to do with just that there aren't as many banks in commercial real estate. I mean, as far as like looking at the whole portfolio, only 50% or so is financed by banks. I feel really comfortable with our portfolio. We have always been a real estate concentration bank, and have great risk management tools. As a banker, you have to be an expert risk manager, and so it requires discipline going into higher risk type of lending. And so making sure you really understand, is that service coverage ratio real? Does this value, is this appraisal we got reasonable? What is the value looking like over time?
Does it make you nervous that everybody else thinks their back book is okay and everybody else is the problem.
Yeah, well, it would on the surface, but when you look at the composition of how real estate is financed, there's been lots of deals we passed on that non-banks have financed. And so I think there is a lot of that market mix occurring. Banks have great tools, so we can also re-amortize, we have flexibility when it comes to restructuring rates. We've all been through workouts before, so as long as you go in with your eyes wide open, that you're working with borrowers that know you don't have great integrity, you should be okay.
You're going to stick with us, pleased to say. The broader equity market right now on the S&P 500 negative here by 0.1%. Coming up next, Bloomberg's Craig Trudeau on GM's blockbuster fourth quarter earnings. That's coming up very shortly. That stock is up by almost 8% in the pre-market. From New York City, you're watching Bloomberg Surveillance.
좀 보니까 조금 들어지고 있어, 역시. 그럼 이제 기다려야죠. 네, 지금 찬스를 누리고 있어요. 분명히 있을 거예요. 근데 사실상 여기까지 들어오도 별 차이가 없었을 텐데? 그냥 그만큼 떨어졌잖아요, 지금. 오케이. 지금 뉴스 보면 나스닥 계속 올라가고 있잖아요. 그럼 분명히 찬스 있을 거예요. 그때 찬스 보이면 바로 막 들어갈게요.
You're a famous photographer, you're a conservationist, you're an activist. How would you define yourself?
I think I'm just a human trying to figure out how to be a better steward of our little planet. I am a biochemical engineer by training. I studied marine biology, fisheries, aquaculture. And then I realized that the ocean is very much out of sight and it needs
분위기가
help.
좋은데?
So I became a photographer to be able to communicate with a larger audience. And thank goodness I was good at it.
When
일단
did you
들어가
realize
볼게요.
that actually photography was your passion and you could make a real difference to our world?
You know, I didn't start out as being a photographer, so it was not until 1990-something, 96, when I picked up a camera. And I became a professional photographer soon after.
일단
And it's one of those things that it's like
좀 괜찮은 타이밍인 것 같아서
you put a few sentences together, and one day you might be able to write poetry.
들어가보고 뭐 안 되면 망하지 뭐.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
From New York City, stocks pulling back on the S&P 500, negative here by 0.1%. On the Nasdaq, down by 0.07. The Russell, a little softer.
괜찮아요. 일단 가보는 거죠.
Tons of earnings. A little bit later on this afternoon, we'll talk about big tech through the program. In the bond market, 2-year, 10-year, 30-year shaping up as follows. A 10-year yield down a basis point, 4.06%. Let's call it 4.31 on a 2-year, down by not even a basis point to 4.31. 38, Lisa, after that Treasury refunding announcement of the last 24 hours.
Basically, the Treasury Department isn't going to borrow as much as people previously thought during this year, and particularly during this quarter. And this really does put, or at least alleviate some of the pressure with respect to supply that could have potentially pushed up yields. It's kind of a smart move because you got to think that later in the year, yields are going to be lower just simply because the Fed's going to be cutting, and ostensibly, the economy is supposed to be slowing down.
What's the deal here? Was the bar just too high? They set the bar super high and then they could basically come under expectations? Was it tax receipts, money coming in? What is it?
Yes. I mean, basically, it's everything. When they said the tax receipts came in a little higher, some people speculating that actually that might be the sleeper surprise this year. The tax receipts will come in better because of some of the returns that we've seen in the markets. There are a lot of questions around also whether this is just clever maneuvering, again, because it keeps the pressure off rates, helps the economy, and potentially you could deal with it later.
Well, the numbers are still pretty staggering.
잘못
These
적었어.
are massive numbers. It was coming in below expectations, and then there is still a number which is like out there.
Net $760 billion being
왜
borrowed, which is
그랬을까?
down from the expectation of north of $800
아,
billion.
진짜
$4
왜
trillion
그랬을까?
of bond sales this year just to keep financing, and that only continues to increase.
Amazing. I want to turn to crude just briefly. Take a look at WTI and take a look at Brent as well. Crude shaping up as follows. We're negative 0.5%. Just a surprise, I think, for many of us.
들어질 때마다 아예 아프다.
First thing
아예
you looked at
아프다.
was the price of crude after the attacks over the weekend. Anne-Marie, to see the price of crude down yesterday, down again today.
It's pretty astonishing given what we're seeing in the Middle East and the fact that everyone is also now starting to look at the risks of this extending a wider conflict, because the U.S. is promising to respond to that attack that happened on U.S. troops in Jordan. But also, crude hasn't bounced at all. There's been 160 attacks. There also was an attack on a Trafigura vessel carrying Russian naphtha, and crude didn't move. So this is where we are in the world until things, I think, really start to become very volatile.
Incredible. Let's get you an update. Under surveillance this morning, Iran urging the US to use diplomacy as pressure mounts on President Biden to respond to the attack which killed 3 American soldiers in Jordan last weekend. The US blaming Iran-backed militia for the drone strike, Iran denying any involvement. Lisa's still trying to figure out what the response is going to be from the White House.
Especially because there has to be a response, and at the same time, it's clear that nobody wants an escalation. Well, this is an escalation. At what point is this these attacks? And we talk about 160, 170 attacks on U.S. military personnel in Iraq and Syria since October 17th. You have to wonder, okay, so one slipped through. But the fact is there's been 170 attacks. So what are we talking about here, and how do you prevent some of this?
Well, when you look at potentially what we could see, Secretary Blinken said yesterday they're going to be multi-leveled, come in stages, kind of what John Lieber of Eurasia Group said. But Politico has reporting that the Biden administration is also considering one option, which would be a bigger escalation. And that is attacking Iranian personnel, say in Iraq or in Syria. And that would send serious message.
That's our second story. Markets in China sending clear signals to Beijing that more needs to be done to revive investor confidence. Stocks falling for a third consecutive day, while China's 10-year yield dropped to the lowest level in more than 2 decades. Traders betting the country's central bank will deploy more stimulus to boost growth. China in a very different position, Lisa, to the US over the last year.
Maybe this will be the third contrarian bet for Nikolai Tangent. Go long China, because it seems like that's one of the questions that people have, and how much that's going to hinge on this idea of additional stimulus. What can they actually do, though? If this is an issue of consumers not wanting to spend money, cutting rates isn't going to help. It hasn't been an issue of
exceptional growth.
슬프지 않아요. 아파요. 많이 아파요.
Three-legged stool of global growth right now. Two of the pegs of that just not great right now at all.
And how long can the U.S. continue to be sort of on its island with AI kind of fueled growth? You know, this has been the outlook, which is a reason why people have been surprised continually by the ongoing strength.
Well, let's pick up the strength this morning. GM in the pre-market climbing much higher than I think any of us anticipated, up by close to 8% in early trading. The automaker saying adjusted earnings before interest and taxes for 23 came to $12.4 billion. At the high end of its November forecast, GM expecting auto sales to climb around 16 million vehicles powered by its core business of gas-powered trucks. I should also say predicting some growth in EV sales.
좋아요. 올라가고 있어요. 예, 네.
on Bloomberg TV. Lisa, with a better story to tell based on what we've seen for the sector over the last 12 months.
And surprisingly so at a time when some people had previously come on the
역시
show and said that autos were
해외선물
uninvestable because of some of these uncertainties
재밌다야.
in terms of policy.
여러분 추천합니다.
That's even less relevant because at the end of the day,
스릴러가
people are still
진짜
buying gas-powered
죽이네.
cars. They want their trucks,
진짜
and they're buying
추천합니다.
them at a greater volume potentially or a higher price point than at a time when rates were higher and borrowing costs were higher. So I am curious to hear from her and them how much rate cuts are going to help their sales.
Jill, I was surprised by this. I think you were too.
미국
What does
가자.
auto lending look like for you in the bank?
We've seen less demand for car loans, and so the rates are driving consumers not to purchase whenever I look out on the ground. But there is some demand up there from like I didn't buy a car a few months ago or a few years ago, and so now it's time to buy one. But I think we will see some great demand. There's
그쵸.
demand pent up because the rates
인정하고
have
싶지
been high. We've seen
않지만 저는
consumer debt
약간
go
어느
up as
정도
well, and it being more difficult to
나스닥
have the
중독이죠.
savings that we saw during COVID and even pre-COVID. So this is surprising data for me.
What greases the wheels?
근데
for you? Can you give us
여러분도
an idea of the
혹시
number? We talk about moves of 50 basis
중독은
points, 100 basis
아니더라도
points, 1 full percentage point on Fed funds coming down, and that's going to get things going
제가
again.
거기에
Does that move
영상
the dial
밑에
for you
링크가
when the drop rates
있는데
that much that people start lining
카카오톡
up
채팅방에
to borrow money to buy
들어가시면
cars?
Well, not necessarily by cars. I think we're still seeing a lot of auto financing incentives from the dealers
저를
and
도와주는
from
회사가
manufacturers.
있는데
So I don't really
이
see
회사
that
덕분에
as much
제가
because I think
덕분인지
their other debt
때문인지
is what's
모르겠지만
causing
제가
some
지금
stress. So it's not
해외선물
necessarily
하고
going out and getting
있고요.
necessarily the new
좀
car loans.
재밌어요
On
사실.
these car loans, you would have a higher debt, higher rate associated with that. But
여러분도
the other
해보세요.
demands upon
추천.
the perception of what the rate would be, I think it's keeping folks from purchasing.
Can you give us an idea of rates to borrow right now? What does it look like if we come to the bank to you today? What am I paying? I'm not paying 550, which is Fed funds. What am I paying?
Yeah, you're right at the prime rate, and so you're maybe a little bit less than that. So, but you can still go to dealer finance and get quite a bit lower. And so they're really kind of, and I don't know what GM is doing.
맞아요. 주원 씨도 그 이후로 이 업체 쓰시잖아요.
Strength in GM this morning. The stock's doing better than good.
How much of that is fueled by people
완전
buying all
추천합니다.
cash? That's what I'm curious about.
I know.
At a time when the prices aren't going up as much, because if you are going to have to pay an 8, 9, 10% rate on a car,
어디까지 떨어져?
it's not really going to be that
어디까지
tough.
떨어져?
It's like an apartment in New York City or an EV. It's like one or the other. Bloomberg's Craig Trudell.
Why don't you get a tax rebate?
Craig, let's start here. The strength was a surprise to a lot of us. Craig, where's it coming from?
I do think this is a company that is sort of hitched to that stronger U.S. economy. We didn't think that we were going to see a soft landing, and albeit we've managed to see some real strength in the U.S. This is a company that, as Lisa was saying, is really reliant on big trucks and SUVs. It's not necessarily what generates the headlines anymore. Where we pay a whole lot more attention to electric cars and to self-driving vehicles, and honestly, the execution in those areas for GM has been pretty weak lately. But what we've seen is a company that had some real disruptions late last year with the UAW strikes. A lot of makeup production toward the end of the year after the strike by the UAW. Once that was resolved, and looking forward into the new year, not having as much investment into the self-driving unit,
하고
and
싶어도
of course, not having to worry
못 해요,
about
지금.
a disruption on the
너무
labor
많이
front.
잃어버려서.
You don't have to account for that for another 4 years.
Craig, we were just talking about auto loans and how high they've been recently. A lot of people having underwater loans even with their car values depreciating at a faster pace than their loan. How much do you think the rosier outlook for GM is hinged on this idea that rates are going to be lower and it's going to be easier to borrow to make those purchases?
I think to the point raised earlier, the fact that
발표
GM has an in-house financial lending arm allows for them to
시장 열기 전에 시간도 있으니까 희망을 잃지 않아요.
There's not quite a situation where you can entirely offset the fact that borrowing costs have increased, but there is some ability to have some flexibility there if you're GM or Ford. These are lending units that are extremely strong, and as much as we've seen some weakness in some of the numbers looking at sort of the health of the auto borrower and the fact that a lot of loans we've seen some underwater loans soon after the point of sale. We are seeing some pretty strong demand for cars in the U.S. When we're talking about 16 million unit outlook on GM's part, that's basically peak roughly peak sales volumes for the U.S. And I do think that we've gone through a few years now of customers not being able to go to the market because of the supply chain issues, the lack of supply of vehicles out on the dealership lots. Now that those are no longer depleted, customers are seeing deals out there and deciding to pull the trigger.
Craig, let's talk about hybrids. I think this is really important, where the market is and where it's going. So we're moving away from the internal combustion engine. Policy is pushing us in that direction. The ultimate destination seems to be EVs. The question for the auto manufacturers over the last few years is whether you want to engage in an interim step and lean into hybrids. Some manufacturers do. GM has pushed back against that. Do you think we might see just a subtle shift there in the quarters to come?
I think we're seeing a real aggressive shift there on the part of Ford. And to your point, GM has been a sort of all EV or bust company. I think we've interestingly picked up on dealers really pushing back against going all EV. They really sort of want to be the gatekeepers here, and there is a question of just how much of that is a reflection of what the consumer wants and is asking for, and how much is it a matter of dealers sort of protecting where their bread is buttered. If electric vehicles have parts that break down and that means less parts and service revenue for the dealers, this is not a transition that they want to make, and so how much that is sort of coming into play here for the incumbents is something that we have to look at closely, given how many challenges they've had with executing this transition.
Hey Craig, thank you sir. Craig Trudeau of Bloomberg out of London. Be sure to watch our interview with the GM, CEO and Chair Mary Barrett. Eastern time. We'll talk about that, Lisa. What is the management? You want to skate to where the puck is going? Where's it going to be in a couple of years? Are we going to be stuck here in this interim moment with hybrids and they haven't moved back in that direction quickly enough? Or are we going to be there full scale, EVs?
It has a lot to do with price. And I do wonder, a lot of people saying that it's going to be really horrible for U.S. auto manufacturers if Chinese auto manufacturers can sell without any barriers. At the same time, a lower price point is what's necessary to bring people into the electric vehicle market. So you're between a rock and a hard place because the manufacturing is just too expensive to sell at the price point that many people want. How do you get there? It's not going to be that simple.
General Motors right now, firmer in the pre-market by more than 7%. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg brief with Yahara Hackers. Hey, Yahara.
Hi, John. British distiller Diageo reporting lower than expected sales and earnings. The company has shown impressive growth for years, with successful bets on products like tequila. But recently, demand has cooled in the U.S. and Canada. CEO Deborah Crew speaking to Bloomberg earlier.
We are looking for improvement in the second half on our top line versus what we delivered in the first half, and we're looking at gradual improvement, and that's off the back of gradual improvement in North America.
Meanwhile, JetBlue reporting a smaller than expected loss in the fourth quarter, while its revenue topped forecasts. The carrier citing continued strong demand during peak periods, likely fueled by holiday travel. JetBlue reporting as it undergoes a C-suite shakeup, with Chief Operating Officer Joanna Garrity taking the reins as CEO this week. Meanwhile, its possible merger with Spirit Airlines is becoming increasingly unlikely. Both appealed a ruling blocking the deal. And fans hoping to attend this year's Super Bowl in Las Vegas will have to fork out a record amount, with the average ticket price coming in at $9,800. The most expensive ever. That's just to attend the match between Kansas City and San Francisco. Rooms at some hotels are going for more than $1,000 a night. No word yet on whether Taylor Swift will be in attendance. That's your Bloomberg brief. John?
Yahara, thank you. Lisa says you can blame Taylor Swift for the price of those tickets. They're not going to watch Usher, are they?
Hold on.
You're not paying $10,000 to watch Usher.
Which tells you exactly. I think he has a whole showing.
어김없이 한숨 연애.
Honestly, all I could say is people are going to be writing about this. The Taylor Swift effect that we're talking about, the Beyonce effect, and so this is going to be, you know, the sort of Barbenheimer moment. It's going to be the Swift Bowl or something that we're going to be talking about with the economic reports. I just am suggesting that we might hear about that.
We'll talk more about this a little bit later. Up next on the program, equities hitting new all-time highs with tech earnings on deck.
Valuations might be a little bit extended, but these are also the companies that are growing far beyond the broad market and far beyond the economy.
That's coming up next on the program, live from New York City this morning. Good morning to you all. This is Bloomberg.
The younger generations are more pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this billion spent every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
오케이. 발사, 라켓 발사. 가보자, 위로 가보자. 너무 많이 내려가는데.
Live from New York City, equity futures on the S&P 500.
그만큼 위로 올라갈 수
Like
있잖아요.
this, we are negative by 0.16%.
아무도
Yields totally
모릅니다.
unchanged, 4.0681% on a 10-year. The surprise of the week so far. Crude is not rallying. It's selling off. It was down yesterday by more than 1%. It's down this morning by 0.6%, $76 and about 35 cents. Under surveillance this morning, equities hitting new all-time highs with tech earnings on deck.
In many cases, the Magnificent Seven, or many of the Magnificent Seven, are actually delivering on the promise. So yeah, valuations might be a little bit extended, but these are also the companies that are growing far beyond the broad market and far beyond the economy. What I'm looking forward to, given average valuations and the other 490 names, is can we, and international markets, can we see this broaden out?
Can we? The S&P 500 topping 4,900 with Microsoft and Alphabet due to report after the closing bell. Marko Kolanovic of JP Morgan saying tech earnings will be crucial in determining whether valuations are sustainable right in this. As long as the market stays narrow, heavily concentrated and tech-driven, the US, Lisa, is likely to have the upper hand.
So let's put some numbers on this. Exactly how much they've outperformed. Nicholas Poulos and Jessica Reeve
역시 안 보는 게 나아.
If you take out Amazon,
은근슬쩍 이렇게 보고 있거든요.
S&P earnings would be down 11%.
계속 보면 그때 진짜 멘탈이 나갈 수도 있어.
Big tech continues to rally. It's not just a pipe dream. This isn't 2000. This isn't 1999. This is a matter of companies that are actually getting it done and delivering the profits that other companies just are not seeing in terms of growth.
Let's build on that with Emily Rowland, co-chief investment strategist at John Hancock Investment Management. Yes, it's narrow. Yes, it's problematic in the minds of so many. But Emily, is it a problem when that's where the earnings growth is?
Yeah, it's absolutely critical that tech can hold up here. You look at the S&P 500 growth index, and it's now trading at a 45% premium to its 20-year average. Now, does it make sense that tech and quality more broadly have been rewarded in this environment? You're thinking about companies now that don't need to tap the capital markets in order to grow, and we know the cost of capital is elevated. These companies have tons of cash, of course. AI. Can't say it enough. Productivity is going to be one of the keys to growth, and these are companies that are best in their industry. They've got the financial metrics, but again, they're pushing up against valuations. You know, you look at earnings growth, and flat's the new up. Tech earnings are revisions are up modestly, while the rest of the S&P 500 is decelerating. So this is a big test this week. You guys were talking about the Super Bowl during the break. This is the Super Bowl for investors this week, not only with tech earnings, but with a flurry of macro data as well. I'm sure you guys are having a hard time sleeping at night this week, just like I am.
I don't know. A lot to unpack there. I said fun. But I'm curious going forward about what we're going to see with respect to the vulnerability of a market that is so top-heavy, right? The fact that you've got this level of concentration in these names, the bar just incredibly high for them to continue to really push up some of their forecasts. And if they don't really outperform, that's going to be a problem.
Yeah, Lisa, it's a key reason that we think diversifying away from some of those names is critical. Look, we're not downgrading tech. It still ranks the highest on quality, which is the key factor that we're emphasizing, but we're looking at other areas that are actually trading at a discount. You can find that right now. Areas like U.S. mid-cap equities are trading at about a 25% discount to their large cap counterparts right now. In particular, we're looking at mid-cap equities that are benefiting from onshoring trends and fiscal stimulus. By the way, we are still spending. We're spending quite a bit as far as things like the Infrastructure and Jobs Act and the CHIPS Act and the Inflation Reduction Act. All of that is being funneled into industrial production in the United States right now. I've been on the road a lot lately. The Midwest is absolutely booming. So we're looking to play that onshoring theme by investing in industrials companies, particularly in the mid-cap space here in the United States.
What do you make of the fact that given that strength and given the fact that you're talking about a booming Midwest, we've seen disappointments in earnings really punished in markets, and outperformance has not been incredibly rewarded, even with some of the discounts that you're talking about on share prices?
Yeah, we're certainly seeing that. And again, even though the bar is being lowered here, you know, you look at earnings growth broadly for the S&P 500, it's up only modestly over the past 3 years here. Again, this market has really been driven by multiple expansion. You look just last week and you actually saw earnings revisions come down for the first time in quite a while. At the same time, the prices continued to go up. And again, the macro environment's been such a key driver. This Fed pivot, the soft landing, now we're back to no landing. And I think that's really been the key driver of pushing sentiment higher. Now we're kind of up against that 20 times forward earnings. We haven't been this high in terms of PE multiples since, 2001, 2002. So we're at this place where the macro is really driving sentiment here. But we've got to start to see that fundamental piece kick in order to really see the
아직까진 마이너스고 아직까지 너무 애매한 포지션인데
today, Emily, I want to turn to Jill. The Midwest is booming. Let's put that in the headline. Is that what you see as well? Is this conversation about recession just totally foreign to you?
I mean, it really is. The onboarding of, whenever we look at battery manufacturers coming into states, the small business initiative money that's coming from the Treasury that's yet to be distributed, there is just so much that we need more engineers. We need more. We have this mass influx of people moving to Oklahoma, where I am, and the Midwest, and we still don't have enough workers to be able to fill these jobs that we're anticipating being there, not even the jobs that we currently have.
Emily, let's get to that. If the Midwest is booming and the US is doing so well, why don't I want small caps? Just domestically focused small caps instead of being exposed to this multinational story, and just avoid places like China, places like Europe, which just can't put up the growth in the same way.
Yeah, John, to us it's really about rates and the debt burden that a lot of these smaller cap companies have. About 50%
힘내라, 힘내라. 떨어지면 내 마음도 들어줘.
We do think that the lagged impact of Fed tightening is going to cause challenges, is going to cause margins to compress. We simply think going up in market cap makes sense for investors as balance sheets are better, as interest burdens are lower, and we like mid-cap equities for that reason. Up in market cap, to your point, you're going to get more multinational exposure. We're underweight China. We're underweight emerging market equities. One of my favorite economists, Nancy Lazar from Piper Sandler, told me recently that her favorite emerging market was Middle America. And I thought that was so powerful. So we're really using that as a way to lean into areas not only that are benefiting from these trends, but are also trading at a discount.
I'm not sure how Middle America would feel about that, but I understand it's meant to be a compliment. Emily, we appreciate it.
Yes.
Emily Rowland of John Hancock Investment Management. I'll clarify that for everyone. I think they're talking about the degree of growth, the level of growth that you get in Middle America right now, Pramo.
Not necessarily that things are run well.
Not how developed it might be,
exactly, and that the infrastructure is sort of lacking in its quality. I'm hearing this incredible strength. I'm hearing Nikolai Tangent
생각해보니까 진짜 타이밍을 진짜 못 잡았어.
Is that commensurate with inflation?
역시 저보자. 여러분, 저 같은 실수를 하지 마세요.
I know the White House often listens to this program, so if they are this morning, I'm sure they're hoping that this shows up in the polls sometime soon. Because this is not how people respond to that question, or at least not how they have been responding in the previous 12 months.
And that's partly because you've seen a 19% increase in CPI and consumer prices since 2020. That's tough to swallow.
Jill, it's good to see you. Thanks for being with us. Appreciate it.
Great to be here.
And send our love to Esther George, favourite Fed official, formerly the Kansas City Fed. Just the absolute best.
The best.
Loved her. The absolute best. Jill, thank you. Equities on the S&P 500, slightly negative this morning. Coming up in the next hour, Phil Camporelli of JP Morgan Asset Management, Stephanie Roth of Wolfe Research, and Derek Wood of TD Cowen from New York City. This is Bloomberg TV.
Venture capital. It's been volatile. From bank crisis anxiety to AI exuberance.
조금 더 기다려야 되는데 기다리면서 자원이 또 나빠지고 있는 것 같은데 참
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that
아니 계속 얘기해 계속 올라가고 있었는데 갑자기 떨어지면
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting.
죄송합니다. 내가 맨 가면 헛소리 막 나와요. 제 마음 무의식적으로.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you decide which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think I'm melting. Let's go to a cooler place.
How can we make tomorrow better than yesterday?
You can't waste any more time.
It's our all hands on deck moment.
Around the world, people are working for a better tomorrow.
What we're doing is mind-blowing.
So this would be a carbon-neutral jet fuel.
A little worm that can actually dissolve plastic.
Creating clouds. This is the definition of thinking outside the box. I believe when history is written and we look back at this moment in time, this will be when we started to transform the way we live to inform the future we want. This show is about solutions and the people behind them. My name is Nikolai Coster-Waldau, and this is an optimist guide to the planet.
Jamie Lannister on the runway.
아이고야.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything.
I think the market's already pricing in the rate cuts to a certain extent.
I don't think the Fed's going to move this month. I think that they may send a signal to help people begin to ground their expectations.
They want to send a consistent message to markets that policy is consistently moving in an easy direction.
I don't think we're in a situation where we're going to be seeing a pivot, unfortunately, which I think is what the market is probably been broadly expecting.
We've taken the punch bowl away, and markets haven't fully adjusted.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
In many ways, earnings season begins right now. Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance alongside Lisa Abramowitz together with Anne-Marie Hordern. I'm Jonathan Ferro. Your equity market on the S&P 500 down by something like 0.1%. Nothing against the big banks on Wall Street. It's just this week is the week that really matters. The big market cap tech players report earnings, and that begins, Lisa, after the bell.
I'm guessing they're actually not offended because probably a little less attention is welcome. I am curious, though, to see how much some of the big tech names can deliver after the bell. We do get Microsoft, we do get Google,
여기 들어왔어요.
AMD as well. Interesting to see whether people are going to be looking for some sort of monetization of AI or simply a monetization of advertising, YouTube, and some of the cloud spending that we've seen in the past.
There's something for everyone this morning, so let's talk about what there is for the bulls and what there is for the bears. For the bears, look to UPS. UPS is down by something like 7%. The outlook, not great. For the bulls, GM. Stock is up by more than 7%. The outlook is better. Pick your poison.
There is a lot of stories underneath this. At this point, UPS also is dealing with pretty stiff competition for Amazon, but it's the physical world right now versus everything else. Not getting a clear read on whether there's some sort of recovery or not. Either way, it seems clear that the physical world, when it comes to auto manufacturing and when it comes to certain consumer goods, seem to have been doing a bit better than expected. But again, a pretty mixed picture out there right now.
Listen to what we just heard from a small community bank in the last hour. That the economy is doing really well. From Emily Rowland and John Hancock just 5-10 minutes ago, who actually turned around and said the Midwest was booming.
Yeah, it's unbelievable, especially when you pointed out what's happening given the polls. People continuously say they're not feeling it. They need to more than 5% in the latest morning consult poll of their wages to go higher to combat inflation. But also look at all the fiscal money coming out of Washington on these infrastructure projects. A lot of that you're seeing in the Midwest. So it's a good timeline from now until November.
Now compare that to what you're hearing out of Europe, stagnation. What you're hearing out of China, a struggle. The IMF, by the way, just raising the 2024 global GDP growth outlook to 3.1% from 2.9%. I imagine there is a certain country responsible for some of that shift higher.
Yes, and I think that it rhymes with America. I mean, this is basically the idea of the United States continuing to really drive a lot of growth and artificial intelligence as well. Although, that said, you were pointing this out earlier, John. We're talking about stagnation in the Eurozone. That's a win. It's not a recession.
Yeah, the bar's low.
So we're talking about better than expected GDP results from the likes of Italy and Spain. So at a certain point, all around the world, even the laggards have been doing a little bit better than a lot of people had expected.
Let's turn to the price action. Equities right now in the equity market stateside. Equity futures negative by 0.2%. In the bond market, yields lower by not even a basis point, 4.0662% on a 10-year. Foreign exchange, the euro, 108.45, firmer by 0.1%. And just to finish on crude, I think it's worth going over again. Anne-Marie, to see this negative 0.6%, 76.30, down today and down yesterday.
Yeah, it's pretty remarkable. Amrita said this morning that part of this is the fact that you still have tankers with the supply. Supply hasn't really been impacted. It's just been drawn out how long it's taking to get to its final destination. But there is a risk in the oil market. It can change really on a dime if the Middle East does escalate with this tension.
Crude also lower, 81 87. Coming up this hour,
살려주세요.
Phil Camporelli of JP Morgan Asset Management looking ahead to tomorrow's Fed decision. Stephanie Roth of Wolfe Research on Friday's payrolls report. And TD Cowen's Derek Wood previewing Microsoft earnings after the bell. We'll get Alphabet as well. We begin with our top story this hour. The Fed's two-day meeting begins. Phil Camporelli, Multi-Asset Solutions Portfolio Manager at JP Morgan Asset Management, writing this. We expect rate hikes to start in either May or June, or rather rate cuts, and we expect 3 to 4 25 basis point rate cuts. It's hard to imagine a March cut with a combination of December CPI and jobs, but the narrative could change quickly after new rounds of payrolls and inflation data. Phil, I'm pleased to say, joins us right now. Phil, good to see you.
Good morning.
Let's talk about those rate cuts. They're going to come in March. So you said before, we've moved from the hope of a soft landing to the reality.
내가 넣어줄게 하고.
To reduce interest rates.
Yeah, so I was here the first week of January and I was so happy, right? Because hope is not an investment strategy.
올라가고 있는데 전 이제 안 속아.
I've been really
안
impressed
믿어.
this month. I think this month was critical because we got a very strong payroll number first week of the year. We got a very strong retail sales number, and we got an above consensus CPI number. Also, initial jobs claims in the middle of the month were in the 100,000s. Yet, equity markets continued to make a new high. March, the probability for March went from 85% to below 50, and equities were still able to continue in March. So our take is, good news is good news. It's not good news is bad news. We're done with that, okay? And Chris Waller, I think, said it best 2 weeks ago when he said, as long as, and Lisa, you've been talking about this as well, as long as inflation doesn't, accelerate from here, we will carefully and methodically, those are two very important words, move interest rates down. March just seems a little premature. I think 50-50 is a good probability because, again, we do get payrolls on Friday. We get another CPI number. But nevertheless, they are on the move downwards. And I think that's what's leading to the financial condition easing.
지금 막 나가도 매도로 들어가면 조금 더 볼지 안 했을까?
Yeah, so John, we have our largest overweight to equities in over 2 years right now. Since before that,
그런 방법도 있는데 근데 위험성이 엄청 크잖아요. 왜냐면 제가 딱 매도로 들어가는 순간 갑자기 올라가면 그때부터 진짜 망해요. 다른 말로 얘기하면 안 되고 금지될 수 있으니까.
And now bonds could be a solution as long as all of this kind of goodwill does not lead to an acceleration of inflation.
How are you the most overweight stocks in 2 years? Is it just really on an index level that is really hinged to some of the big tech names, or is it broader?
Yeah, so Lisa, we're staring at the charts. Things like small cap, it's like the mother of all contrarian trades right now if you look at it versus NASDAQ. However, it's so hard for us to compete with the S&P 500 right? It's so hard for any allocation to compete with that. So our largest and highest confidence overweight is the S&P 500. That includes cap weighted. We're looking at the cap weighted versus equal weighted. We know that equal weighted is a decade cheap to cap weighted, but we can't yet look ourselves in the eyes and say, let's underweight those names. So we continue to pile into the S&P.
If Stuart Kaiser were listening to this, he'd say, finally, people all agree with me and that good news is good news, bad news, cut it out with that whole kind of paradigm. But there is this question about what could go wrong, and I'm sorry to be that person, but that's...
John Constant was that person yesterday.
I know, that was actually, truly a bit of a downer, but I'm just wondering, when you look at all of the economic data, what will signal to you, hold on, maybe we need to reassess?
Yeah, so it's the labor market, both ways. Okay, so the left tail risk is recession, the right tail risk is too much good news that then leads to an acceleration of inflation. So it's the labor market, and specifically wages. We have been very, very pleased, right, that when wages topped out at 7% annualized, the average wage growth, Lisa, is like 4.5%. We were on the precipice of a wage price spiral 2 years ago when the Fed started raising rates in March of 2022, where net wages are now at roughly 4.5%. That's sitting right on top of long-term averages. That's the picture of the soft landing. is the wage growth. Now, the other way, if you start to see claims going up to 250, 300,000, very, very close to no jobs created, then we're going to be saying, okay, there's business caution here that we have to worry about, that we would take our equity a little bit down. So we're sitting right in this base case of soft landing.
So you have this 20% probability of recession.
Yes.
So the catalyst for you is the labor market.
Yes.
When would you see this in 2020?
아파요.
So the 20% Anne-Marie sits basically right on top of a normal kind of probability. Every year we come into, it's 15%. You never assign a zero probability to any of that. So our base case is that we don't see it, okay? With what we know now about the inflation data, I think the easing of financial conditions that the Fed is going to bring on actually prevents that from happening. So we are, overweight high yield, overweight equities. These are no recession trades, so we don't expect it this year.
So overweight all of these things, does that mean underweight full faith and credit U.S. government bonds?
Yeah, so we'd rather play offense than defense in fixed income. So our core bond allocation, if I have to wake up every day and try to beat a 60-40 portfolio, we only have 20% in core bonds. So we're underweight core bonds by a pretty significant amount. And replacing that with yield.
어떡해.
You have been underweight the yen as well. Why isn't this rate cut talk lifting all boats?
So, good question. I think the emerging markets have the biggest vulnerability, good or bad, to global growth.
포기할래요.
The growth forecast. I guess we just have more confidence when we're thinking about how do we deploy risk in the developed world, specifically in the U.S. There are stock-specific examples. John, things like Samsung, things like Taiwan Semiconductor. There are stock-specific examples that we're interested in. But from just a pure beta perspective, where are we allocating customer cash? The U.S. is the prettiest house right now.
Phil, stick with us. Phil Camporelli there of JP Morgan Asset Management. The broader market negative hit by 0.2%. About 1 hour and 20 minutes away from the opening bell. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hi, John. The IMF has raised its global growth forecast, citing strength in the U.S. economy.
그러니까요. 완전 컥컥컥커로 가고 있어요.
1% this year. That's up from 2.9% seen in October.
We see a lot of resilience in a number of economies in the US, in China, and in many large emerging market economies, Brazil, India, Southeast Asian economies, Russia. So all of this together, that's what is lifting the growth number for this year.
Despite that, the IMF warns inflation and geopolitical tensions still pose downside risks to the global economy. General Motors reporting better than expected fourth quarter earnings and expecting 2024 profits to grow on improved U.S. sales. GM's expecting demand for vehicles to stay robust, in part due to optimism about a soft landing for the U.S. economy. While GM is struggling to build out its EV line, its legacy business of gas-powered vehicles continues to be a cash cow. CEO Mary Barra saying, quote, consensus is growing that the U.S. economy, the job market, and auto sales will continue to be resilient. And Elon Musk says the first human patient has received a brain implant from his Neuralink startup. Posting on X, quote, the first human received an implant from Neuralink yesterday and is recovering well. Initial results show promising neuron spike detection. Neuralink says it expects to perform 11 surgeries this year. The company's end goal is to one day allow humans to control computers with their minds. That's your Bloomberg Brief. John?
Yahara, thank you. I think Phil's hoping that Jamie Dimon doesn't get any ideas anytime soon. Right?
All I could say is
와,
that how many
힘이
of the
제대로
younger generation want a
빠졌네.
chip laid in their brain? It just sort of like removes the barrier of having to look at a screen.
No, thank you to all of this. Up next on the program, pressure mounting.
지금 잘 안 보이실 텐데 저 토크서클 여기까지 내려갔어요.
To any aggression. And we will hold responsible the people who attacked our troops. We'll do so at a time and a place of our choosing.
이렇게 하면 안 돼요, 여러분.
Walking the tightrope after the deadly
여러분,
attack
저
on US
같은
forces. That conversation coming up next.
안
You're
돼요.
watching Bloomberg TV.
와, 엄청 많이 떨어졌어. 여기서 매도로 들어갔었으면 성공했었을 텐데 저는 파브라서 그러지 못했어.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst?
아마도 잔시 잔 시작할 때 그때 잔스가 나올 수도 있는데 그때까지 시간이 좀 기다릴 힘이 없어요.
Live from New York, 1 hour and 15 minutes away from the opening bell. Stocks pulling back just a touch from all-time highs. Equity futures negative here by 0.2%. Crude is lower. Again, believe it or not, we're down by almost 1%, $76 and about 2 cents on WTI. Under surveillance this morning, pressure mounting on the Biden administration.
Anyone looking to take advantage of conflict in the Middle East and try to expand it, don't do it. We will respond decisively to any aggression. And we will hold responsible the people who attacked our troops. We'll do so at a time and a place of our choosing.
Here's the latest this morning. Iran denying involvement in this weekend's deadly attack on US troops in Jordan. The country's foreign minister saying active diplomacy is underway, writing on X, quote, "The White House knows very well the way to end the war, Anne-Marie. The current crisis in the region is political."
So we're seeing Amir Bilian, the Iranian foreign minister there, talking about the fact that they want the U.S. to put pressure on Israel to end the war in Gaza. Jonathan, though, Secretary of State Antony Blinken shed some more light yesterday on just how dire the region is becoming, saying, "I would argue that we've not seen a situation as dangerous as the one we're facing now across the region since at least 1973. Exactly 4 months ago, on September 29th, 2023, Jake Sullivan, the president's national security advisor, said it's the quietest it's ever been.
Do you think that makes them hesitant when they come to formulating a response now?
I think potentially they decided to claim victory on the region before the end of their term was up. They have been hesitant on a response because this administration has made it absolutely clear they do not want a showdown directly with Iran.
To weigh in on all of this, Elliot Ackerman, the US Marine Corps veteran and a former White House senior fellow, also the co-author of the novel 2054. Elliot, wonderful to get your perspective on this program, sir, particularly after the tragic event over the weekend where 3 US servicemen died. Elliot, your view on what took place and ultimately your base case, if you have established one, of how the US will respond.
어떻게든 버텨보겠어.
Well, I agree with what was just said, that, we've seen a series of escalatory strikes by Iranian proxies against U.S. targets in order to try to leverage the U.S. to apply more pressure on Israel. And that's been going on since the October 7th attacks. And now it's sort of reached a crescendo with 3 dead U.S. service members, and their deaths demand a much more forceful response on the part of the United States. And so, President Biden right now has got to thread the needle on what our response should be. And generally speaking, he can respond in sort of one of 3 buckets. The first bucket being a response against Iranian proxies in Iraq and Syria and even Yemen who've been launching these attacks. The second bucket would be a strike on Iranian targets abroad, military targets. And then the third bucket would be strikes inside.
무슨 사다리 같대.
And so he is going to have to launch a strike kind of in either one of these 3 buckets or a response that
네, 파상에서 파상까지
I think
가는
that's the
사다리.
decision that the administration has to make right now.
Secretary Blinken said it's going to be multi-leveled, comes in stages. So do you think that they will go for the least offensive response and then work up to something more harsher, or they come out with something very strong to try to send a message to Iran and their proxies to back off?
I think they could do a little bit of both. I mean, I think it could be a very forceful response that arrives in the coming days, and I would imagine that most forceful and sort of visual response would be against Iranian proxy groups and the groups that were responsible for this, and potentially uniformed military assets that the Iranians have in places like Syria. But then you could also see sort of a slower, quieter response. Either inside Iran itself, a non-kinetic response, for instance, like a cyber attack inside of Iran, or potentially the targeted killing of high-level Iranian assets. I would say probably not inside Iran, potentially outside Iran, akin to the killing of Qasem Soleimani, the leader of the Iranian Quds Force several years ago.
There's a lot of reporting, I have it on my own account as well from sources, that when the Trump administration did go after Qasem Soleimani, the Iranians were frantic, telling interlocutors in Europe to tell the United States, we are done, we're going to back off, we're going to send some retaliatory strikes in Iraq just for show of domestic force. Would that track on potentially something we could see play out here if the Biden administration was willing to go after, say, someone from the Quds Force?
And I think I think Soleimani is worth reflecting on, because I think that was probably an example where the U.S. response, as you noted, caught the Iranians on the back foot. They didn't think the U.S. would respond so forcefully. And so they, through our escalation, we saw the Iranian de-escalation. And I think that's the type of response that we want to see right now. So the question becomes, what is that target or that set of targets in which our response, the United States response, will give the Iranians pause and say, hey, maybe this strategy with putting leverage on the U.S. strikes, where we think that's going to get them to speak to the Israelis or apply pressure on the Israelis, maybe this strategy either isn't working or has become too painful for us, and we need to adapt different measures and de-escalate these attacks. And I think that is what the administration is hoping will be the result of our response.
Back then, in 2020, the response from Iran to the killing of Qasem Soleimani was retaliatory attacks that did not necessarily kill any U.S. troops, but did cause brain damage. And we heard about similar cases of brain damage or brain trauma, I should say, to certain troops who were still stationed in Syria, in Jordan, in the latest attack. How concerned are you about some of the brain trauma that's happening among some of our 42,000 troops from the U.S. that are stationed in the Middle East amid an escalating conflict?
무당 쪽에서 가면 거기도 망했을 거예요.
In a larger context, right? It's like, we've been fighting a proxy war with Iran, for decades. I served as a U.S. Marine in Iraq and Afghanistan, and as far back as 2004, we were fighting Iranian proxies in Iraq and in Western Afghanistan in 2008. So Iranians have been causing brain trauma and a lot worse to U.S. service members for decades now. And I think now we have 3 dead Americans, and the blood is on Iranian hands. And the most important thing is to adopt a response to make sure we don't see more dead Americans killed by Iranians, or frankly, Americans who are wounded, whether those wounds are, loss of limb or brain trauma. So we need to get out of this cycle. And I think what we've seen is sort of these gradual escalatory these gradual responses from the U.S. Have not worked. And I think the administration needs to respond forcefully and do so in a way that leaves the Iranians pausing and saying, maybe this strategy isn't worth it. Maybe the juice just isn't worth the squeeze on poking the Americans.
I think we're still trying to understand what that actually looks like. And Elliot, I wonder from your perspective whether you think this administration will continue to draw a distinction, a firm line between Iran and Iran-backed groups. When you say Iran is responsible, does the White House see it in quite the same way when they start to formulate how to strike back?
한 25분?
I think they do. I think most administration officials or anyone who's worked in the national security space for a while is pretty clear-eyed about how they see the Iranians. I think probably where there's more disagreement is, what is the button that you're going to push that's going to get you the response you want. So I'm sure, those are the conversations that are happening inside the White House right now. I think anyone who tells you that this is simple or easy and they absolutely know what the right response is, probably not being totally honest with you. It's a very, very complicated decision, and we have to hope that our leaders are going to do the best to formulate a a response that gets us that result. But these are the tough ones that they're dealing with right now.
This is certainly a tough one. Elliot, thanks for being with us this morning. Elliot Ackerman there, US Marine Corps veteran. Phil Camprelli of JP Morgan Asset Management still with us. Phil, this is the question that we've been asking now for months. What's crude doing in the 70s, given the conversation we just had?
그때 또 떨어지면 전 더 이상 해외선물 안 낼 거예요. 해외선물도 안 낼 거고 방송도 안 할 거야. 진짜. 왠지 좀 올라가고 있는데 희망이 별로 없습니다.
So I think crude in the 70s is just one other story. The biggest tax on an American consumer is when gas prices spike.
Yeah.
Gas prices right now are basically some of the most attractive prices that we've seen.
Everything you just said, does that make you hesitant to take exposure to energy stocks when you're thinking about where to take equity exposure right now?
Yeah, we wouldn't be allocated to energy stocks. That's, I think, similar to what the emerging market question is. And if we get a position like we did in 2017, where we saw coordinated global growth and demand for energy, sure. But that's not what we're looking at.
It's not where we are right now, that's for sure. Phil, it's good to see you. Thanks for catching up. Phil Camprelli there of JP Morgan Asset Management. Coming up next, Stephanie Roth of Wolf Research counting us down to this week's Fed decision and Friday's payrolls report from New York. This is Bloomberg.
왠지 희망이 있는 것 같아. 근데 아직까지는 힘이 없어. 설마 분위기가 좀 나아지는 것 같은데 제발 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 오케이 로켓 84 하늘로 올라가자 제발.
Leagues have sort of toyed around with. Should we do something ourselves? Some teams are getting like local media and streaming. How do you see that shaking out?
So I don't think I'm right on this, but my instincts keep telling me this is what's going to happen.
제가 지금
if you remember the WWE,
계약이 좀 올라가는데 그 뭐지 계약수 3개로 바꿨는데 지금 찬스가 좀 있는 것 같아서 계속 올라갔으면 좋겠는데.
I think the opportunity for the NBA with the local teams would be to own all that.
어떻게든 버텨야죠. 찬스가 나왔으니까.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans.
Today's job numbers casting doubt on the Fed's
그러니까
next
완전
move.
망하면 안
Inflation remains
되니까
front and center. And
조금이라도
that's news when
승부를
you want it.
봐야죠.
With Bloomberg News now, get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
그러니까 잘못되면 그게 잘못되는데 지금도 보세요. 지금도
60
털어지고
minutes
있어.
away from the opening bell in New York City. Equity futures right now. This session lows we're down about 0.2%. Here's a snapshot of the market. Equities down. Equity futures on the Nasdaq off by 0.2. The Russell, the small caps lower by, let's call it, 0.5%. In a bond market, 2-year, 10-year, 30-year, just to slice up the Treasury market for you. Unchanged on a 10-year, 4.0681%. On a 10-year, unchanged on a 2-year, 431.59. Nothing unchanged about this market yesterday, Bramo. All about the Treasury borrowing less than we thought they'd have to borrow.
Which is kind of what happened that turbocharged the rally back in November. The Treasury Department came out and said that they expect to borrow $760 billion in net borrowings, I should note, in the first quarter. So here's the question, going forward, is this their tactic? Is this because tax receipts are coming in, or is it because you expect that rates are going to be lower later? So you might as well sell more later and wait and get a discount then and kind of like bide your time now.
Is this going to be an election issue or not?
The Treasury borrowing and sort of the deficit?
Yeah.
Well, everyone talks about it, but it seems like voters are just sort of like, yeah, but we want our entitlements too.
Also, it's an election issue against who? It's Biden versus Trump. They both added trillions to the deficit. So neither of them really has a leg to stand on.
I like that we see through that now. Like, no one buys that anymore. Anyone who gets into power, you're a hawk, a deficit hawk, until you get into the White House and you're no longer a deficit hawk.
Even the hawks right now are not talking about true cuts that could actually make a material difference to the deficit. That just isn't happening except for a bipartisan committee that's basically been ostracized by the mainstream conversation. But here's the question. At what point are people going to care? When you actually have to pay more, when you actually are seeing it in your borrowing costs, and that doesn't seem to be the case right now.
They actually have to go after Medicare and Social Security, and no politician is going to go on television and talk about it. Nikki Haley did talk about what Joe and I...
She tried to whisper it.
And she talked about 65 as being way too young, and then she got hammered on it. Trump ran ads against this specifically. It's a losing issue.
The boomers in the driving seat, AMH. More on that in a little bit later on this event this morning. Iran urging diplomacy as pressure mounts on President Biden's response to the attack on U.S. troops in Jordan. Iran's foreign minister denying his country's involvement and saying the solution to the current crisis is political. The administration continues to blame Iran-backed militias for the drone strike and has yet to outline what a response would be. Anne-Marie, they've been somewhat cagey over the last 24 hours.
Well, of course they're not going to come out and signal to Iran exactly what they're going to go after. But I thought Elliot Ackerman did a really good job in explaining what it could be. Do we go after, say, Iranian proxy missile depots, or do you go for something much harsher, which is what the Trump administration did, which is actual personnel of Iranian officials, say, in Iraq or Syria? That would send a massive message to Tehran.
Hasn't impacted markets at all this week. We were down yesterday, down again this morning on crude by more than 1%. Brent 81.38, WTI 75.90 after a 6% rally just last week on crude. This will move markets a little bit later. Big tech earnings kicking off. Microsoft, Google reporting later today. Apple, Meta, Amazon due Thursday. 5 names, combined market value exceeding $10 billion. Chipmaker AMD also set to report this afternoon, looking to compete with Nvidia in the race, Bramo, to power artificial intelligence.
Given just how much of the market capitalization this is, a real question here going forward about how potentially vulnerable the market is to any downside surprise. Again, I'm struck by what everyone who we've talked to says, which is there will not be a downside surprise, so stop even trying to game that out. This has been the source of strength, and it continues to consolidate revenues with companies plowing a lot of investments, not only into artificial intelligence, but also potentially reviving some of the cloud investments as well.
And as you said earlier, that number's 10 trillion, not 10 billion. Although 10 trillion is just sort of this unthinkable number a couple of years ago.
It's fictional, kind of, so at a certain point, billion, trillion, quadrillion, but this, to me, the size of these is really the reason why people are so focused.
I'll give you another fictional number, but apparently it's real. A ticket to this year's Super Bowl in Vegas will cost an average of $9,800, the highest price on record. Add on another $1,000 for a night at a hotel in the area, plus food, and you're looking at a pretty pricey weekend. No word on Taylor Swift's attendance to cheer on her boyfriend and the Kansas City Chiefs tight end Travis Kelce against the San Francisco 49ers. Are we blaming Swift for this, or are the teams just good and it's in Vegas, and that's why it costs so much.
I feel like a small piece of you is dying as we talk about this, but I do think that there is this feeling that this is swiftly an inflation, and I'm sure that there will be.
Apparently, according to Apex Marketing Group, she's added the equivalent brand value of $331 million for the Chiefs. That's unbelievable.
Isn't that amazing? I think there is more interest, genuinely. I put it on at the weekend, I don't care.
One of my best
put it
friends doesn't care about the NFL. She brought me to a Jets game once only because her dad had access to this beautiful suite. We ate sushi, didn't see a single ball thrown. And now she's finding Kansas City Chief bars just because she's a Taylor Swift fan.
Okay, not to make this too much of a stretch, but isn't this sort of the playbook for a lot of content providers? Is that you need a story, and you need some sort of drama, and then you can charge 70% more for tickets? I'm just saying.
David Beckham, Posh Spice.
Okay.
Oh, it's that all over again?
Well, I think
Except
so.
that I think David Beckham was more known than Travis Kelce.
Maybe globally, but not within the United States.
Didn't we already do that?
No, I reckon actually maybe David Beckham is more well known in America than Travis Kelce before this relationship.
아, 지금 또 떨어지고 있는데 근데 지금이 떨어지면 어떡해. 완전 망했을 거야.
Okay, I mean this is not something we should spend time on. This is first decision of the year, 2 p.m. Eastern tomorrow. Stephanie Roth wondering what she's doing here. Chief economist at Wolf Research expecting it to be a quote snooze. She's calling it for the Fed to begin cutting in the second quarter and continue at a quarterly cadence until troughing at 2.5 to 2.75%. She anticipates the tapering of QT will begin in June and finish by year end. Stephanie joins us now to talk about that snooze. Stephanie, good morning to you.
Good morning.
How boring is tomorrow going to be? How non-committal will Chairman Powell be?
I think tomorrow will be kind of boring. He's going to be data dependent. They have 2 more inflation prints before the March meeting. I still don't think they're actually going to be cutting in March. They're not really in a rush. The data have been pretty good. They'll be talking about the Congress talking about QT, and that will probably kick off in June. The bigger news of the week is probably the payroll.
You think payrolls on Friday? What are you expecting? Because we've heard some people say it's weaker already. And not the headline number, I'm talking about where the jobs gains are coming from. The breadth is just narrower. Is that important to you?
I think that's the one blemish of the U.S. economy at this point. That's the one piece of data that actually gets me kind of a little bit worried at night. Not my base case that this is worrying. I think breadth will improve. But if you look, about 77% of job gains have been driven by healthcare, government, and social assistance. That's not the sign of a healthy labor market, but I do think that the tide will turn in this part of the year.
와, 진짜
Yeah, but let's push that forward.
이거
This idea of a
아니다.
rolling recession moving to
이거
a rolling
아니다.
recovery or a rolling boom.
맞아,
Right? We were
진짜.
hearing about the boom in the Midwest and some of the industrial
앞으로 해외선물
stocks.
어떻게
Do you see some of the
해?
recovery and the strength coming from a couple of key sectors and leaving some of them behind?
Totally. We've seen this rolling recession, which is one reason why the U.S. economy has been resilient thus far. And now we're going to get that economic reverse. Now you'll start to see some of the cyclical sectors start to rebound. Housing is kind of one of the most obvious, but you should get the more cyclical areas that are tied to interest rates should see a little bit of relief here.
Redfin put out this statistic, and I thought that it was fascinating, that home buyers on a $3,000 monthly budget have gained nearly $40,000 in purchasing power since mortgage rates peaked last fall. That's the equivalent of just what kind of shift there has been, given that we have seen rates, benchmark borrowing costs come down. How much further do they have to come down before you start to see real strength in certain sectors and certain consumer cyclicals, and even more strength in the home building sector?
I think if mortgage rates fall by another 50 basis points or so, I think then you'll start to feel even more of that impetus.
어,
You
진짜.
already started to see signs of it. You started to see mortgage tax look a little bit better. You're starting to see signs that the housing market is coming back to life, even with the rally that we've seen so far. And if we just get a little bit more of that, it could really do fairly well.
There seems to be an obsession on Wall Street with real rates and this idea of passive tightening, that as inflation starts to come down and the Fed keeps normal rates on hold, real rates
얼굴
go higher
보여주고
and
싶어도
monetary policy gets
지금
tighter.
너무 힘이
Alan Russell of Deutsche Bank
없어가지고
put
이것
out a really
때문에
interesting piece
진짜
yesterday. I'd love your reaction to it. He said there's also a
다크서클
stimulatory
진짜
impact from lower
무릎까지
inflation. As inflation
내려갔어요.
slides, it won't boost real disposable income. 2, adds to the growth
이런
of real money balances. And 3,
모습이
supports real wealth if asset inflation is turning ahead or
보여주면
running
바로
ahead of
흑역사로
goods and services
돼버릴
inflation.
거예요.
So which effect should the Fed be emphasizing? And what is the
사실
impact
지금
on
나오는
markets?
러버시 딱 제 상태입니다 지금.
Important one is on the inflation coming down. You saw consumer confidence just coming out recently. I mean, people are really starting to feel better, and they're starting to at least acknowledge that inflation is coming down. So I think that's probably the most important part is real incomes are going to really start feeling better, and they already have. I mean, I think the risk to this year is that actually growth could be better than people think, rather than the opposite.
So they shouldn't be concerned about real rates going up. And this passive tightening that the likes of Matt Lazzelli and Deutsche Bank have talked about.
I think it would become a problem if the Fed wasn't willing to pivot, but clearly they are. So the Fed will be cutting this year, and that will offset a lot of that impact.
So where does inflation fall into this? Can we continue to get disinflation if everyone's feeling a lot better and has more real money to spend?
So far, inflation has proven, you mentioned this the last time I was on here, inflation has proven to be somewhat transitory. And nobody likes that word, but that's kind of, it's just taken longer than anybody thought. But now you've had a really strong year for economic growth last year, and inflation is now back down to 2%. There is the risk that inflation could pick back up, but so far it's proven that a strong economy doesn't necessarily mean that inflation can't continue to sort of come back down.
We are seeing some serious inflation in Super Bowl tickets, and I'm wondering whether you're expecting that to go into some of the reports. But seriously, we were hearing about...
Stephanie's nervous about where this is going.
No, but like we were hearing...
We're going into Taylor Swift questions.
Hold on a second. No, because we were talking about the Barbenheimer effect, and we were talking about, the Swift concerts and Beyonce concerts. Are we going to start seeing this in some of the economic reports?
Last year we didn't really see the impact of Taylor Swift on inflation, so I think we'll be okay. And by the way, I think that Vegas probably is a big reason why some of the ticket prices are so high.
You agree it's Vegas, right? Vegas is just nuts. It's insane. I've got no idea why. People seem to love going there. $10,000 for a ticket, $1,000 for a night, food, gambling, insane.
It didn't used to be. It used to be that the hotel hotel prices were lower, and then people would just gamble a lot. And I think that they changed that kind of with.
And as you said about Usher, he's been playing in Vegas for a while now, right?
Yeah, he's there. So if you actually care to go see him, then just go to an Usher concert in Vegas. Save your money. You can go to how many Usher concerts?
We're here to save you thousands,
6 or 7.
Just in case you really wanted to see Usher.
I appreciate that.
At the Super Bowl. Is anyone going to the Super Bowl just to watch Usher?
Literally, honestly, I keep going back to this. My kids don't know Usher. And what, are you surprised? Honestly, they said, who's Usher? Is it ushering a concert? And I was like, no, it's the singer Usher.
Kind of surprised.
They're not the target audience.
But that's exactly it. That's a good point.
Our wallets that they're after, and that's what the advertising is about. It's like when Dre did the halftime at the Super Bowl, and we all felt really old, right? Because we were the target audience now.
We knew all the words, but
아파.
our nephews and kids did not.
Precisely. Stephanie, it's good to see you.
See you too.
Stephanie Roth of Wolf Research, thank you very much. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahara Hackers.
산소가 부족해.
Hi, John. More signs of waning demand for EVs, with Volkswagen pushing back plans to seek outside investment for its battery unit. Europe's biggest car maker is also facing doubts it can make its own batteries at scale, according to Bloomberg sources. Renault also scraps plans to publicly list its EV business this week. JetBlue reporting a smaller than expected fourth quarter loss, while its revenue tops forecasts. The carrier citing continued strong demand during peak periods, likely fueled by holiday travel. JetBlue reporting results as it undergoes a C-suite shakeup. Chief Operating Officer Joanna Garrity taking the reins as CEO this week. Meanwhile, its possible merger with Spirit Airlines becoming increasingly unlikely. Both companies appealed a ruling blocking the deal. The PGA Tour is reportedly close to receiving an historic investment from billionaire sports team owners. Steve Cohen and Mark Lassery are among the group of investors set to inject about $3 billion into the league. The deal may not initially include Saudi-backed Live Golf, with talks still fluid on how to include the rival organization. That's your Bloomberg Brief. John?
Yahira, thank you. Coming up next on the program, Microsoft's massive expectations.
저 망했습니다. 여러분 저 포기하겠습니다.
That's coming up next. You're watching Bloomberg Surveillance with numbers from Microsoft and Alphabet after the closing bell. Equity futures on the S&P 500 negative here by 0.25%. The cash open about 47 minutes away.
You're a famous photographer, you're a conservationist, you're an activist. How would you define yourself?
I think I'm just a human trying to figure out how to be a better steward of our little planet. I am a biochemical engineer by training. I studied marine biology, fisheries, aquaculture. And then I realized that the ocean is very much out of sight and it needs help. So I became a photographer to be able to communicate with a larger audience. And thank goodness I was good at it.
But when did you realize that actually photography was your passion and you could make a real difference to our world?
You know, I didn't start out as being a photographer, so it was not until 1990-something, 96, when I picked up a camera and I became a professional photographer soon after. And it's one of those things that it's like learning another language. You learn a few words and then you put a few sentences together, and one day you might be able to write poetry.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West, only on Bloomberg Television. Context changes everything. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
This is Bloomberg.
성애를 엄청 많이 봤어.
Breaking news. Usher
56만 원이야.
Making a commercial break.
아,
For us, is that right?
Yeah, it seems that he broke down during his final Las Vegas residency, December 3rd.
Okay.
That's when Entertainment
Which is
Weekly
why the
posted
tickets
that.
cost so much, because if you missed the tour, of course.
Exactly.
Perfect sense now. Equity futures on the S&P 500 negative here by 0.2%. Yields unchanged, 4.0681% on a 10-year. In about 44 minutes, an opening bell. Looking ahead to tech. Before we get to tech, we need to talk about earnings out already this morning from GM and UPS. The outlook for UPS not great.
제발
The outlook for
올라가자.
GM better than expected. GM up by 7%. Lisa, UPS is down. Let's call it 5.6%.
And GM really highlighting the theme that we seem to be hearing all through this morning, which is incredible bullishness on the United States. I mean, honestly, one person after another coming out and just talking about how they see this continuing. GM seeing strength in North America. This is not about necessarily global strength, and this is about strength in selling their bread and butter, which is gas-powered trucks. And that seems to be something that people want to buy again at a time when maybe you've got pent-up demand, rates are coming down, and the economy is chugging along.
I'm looking forward to catching up with Mary Barrett later. What would you like to know from the chairman CEO of General Motors?
What can go wrong, how worried they are about Chinese competition, and what they see in terms of the outlook for EVs, for electric vehicle production. Do they expect to ratchet it back down more? Do they expect to do hybrids? Hasn't been the case so far. How are they sort of positioning for that?
On this call, she's talking about it's true that there's uncertainty in the EV market because they haven't seen that growth in demand, but she's still saying that they're going to sell about 250,000 EVs this year. The Stellantis CEO says he's pulling money back on EVs until we figure out who wins the U.S. election. So I would
That's
love you to
interesting.
ask
Wow.
Barr that.
Wow. You heard what Elon Musk had to say from Tesla last week. That quote that you pulled, I think is really important too. That we'll get demolished here in the United States unless we have big tariffs to stop Chinese competition.
혹시 가능성이 있을까요? 저는 그렇게 생각하지 않아요.
Something's got to give, right? And at a certain point, you can imagine tariffs are going to continue, but what do you do with the innovation and, frankly, the supply chain lithium here in the United States?
Check out this headline from UPS. It's cut 12,000 positions for a $1 billion cost reduction.
Wow. I mean, that's a lot of positions after some of the union negotiations and some of the higher wages that they're paying. There's a real question here after they outperformed. Is this a more macro issue, or is this an Amazon competition issue? The fact that people are perhaps shipping in a slightly different way, John?
They've got two very different stories to tell, both GM and UPS this morning. UPS is down more than 6% in pre-market trading. Under surveillance this morning, Microsoft has some massive expectations.
The biggest hardware business we happen to have is our cloud. We stream from the cloud, just as maybe in the past we were known as an Office company or a Windows company or a cloud company. I think going forward we will be. We have a Copilot, we have a Copilot stack in Azure.
Here's the latest this morning. The tech giant reporting after the bell expected to see a jump in revenue boosted by growth in demand for cloud services and personal computers. Derek Wood, software analyst at TD Cowen, writing this: Microsoft appears well positioned in key secular growth markets, particularly public cloud and its Azure platform, which we expect to be the company's main growth driver. Digital transformation trends should continue to benefit every facet of Microsoft's commercial cloud. Derek, I'm pleased to say, joined us right now for more. Derek, the tailwinds for cloud, can we start there? How strong and powerful are they into 2024?
Well, certainly that is the big focus, the Azure growth. That is their largest business today, about a $50 billion annualized revenue business. We're looking for 27% growth. That's also the highest growth rate of any of their products. What we got from last quarter, coming out of the September quarter, was that cloud optimization headwinds really seem to be past us, and core IT spend is coming back, and then there's an incremental tailwind coming from AI. AI is expected to produce over 3% of the growth, or about $2 billion in annualized revenue on Azure this upcoming quarter. So we're all eager to hear how things are going, what the outlook's going to be going into the March quarter, how they're feeling about budget loosening, over the next 12 months, and really a continued improvement in the Azure growth rate. In September, Azure growth accelerated 1 point. We think there could be some incremental upside in the December quarter as well, and we could see a path for continued acceleration.
Derek, on the cloud business itself, is that the pie getting bigger? Are they getting a bigger share of the pie at the same time?
So first, the comparison, AWS is about a $95 billion run rate. GCP out of Google is about a $35 billion run rate. And Azure is $70 billion right now. And their growth rate is by far the highest of those three. So they are certainly gaining share. That has been the case for a while. And of course, cloud spend is taking over more and more of IT. There's still a lot of workloads that are on-premise that need to move to the cloud, especially in the financial services vertical. So I think it's a bit of both.
How much do you expect, Eric, monetization of the whole AI craze that we hear from absolutely everyone we're talking to? How much is that going to be important in these particular earnings?
Well, so I think the first order of monetization is coming through Azure. That's really the platform where companies are coming to build large language models, develop new applications, pay Microsoft for the infrastructure to do that. And again, we said there's probably going to be about $2 billion in incremental annual spend on Azure. The next line is going to be around the Office business and the new Copilots they've released. Copilots came out generally available in November, so we're really only going to have a very small part of the quarter where we're going to see incremental revenue. Commentary looking forward is going to be important. But I do think the Copilots will take time. I think legal has to go through and really analyze the risks of using some of these models. There's just going to be testing by different work groups. I don't think there's going to be some mad rush to see big adoption for Copilot, but I think gradually over the next 12 to 18 months, we'll see adoption rates build and build.
Derek, how high is the bar for Google, given that they don't have the same kind of market share for their cloud offering that Microsoft does or AWS of Amazon does, and the fact that some people suggest that the Google search engine is the most disruptible of all technologies, given some of the ChatGPT technology?
Right. Well, I don't cover Google. That's by our internet analyst. But last quarter, they did see big deceleration in their cloud business. So I think this quarter, people are going to be looking at what the trend rate is from here. But they did drop below Azure growth rate for the first time in the September quarter, and that put Microsoft and Azure at the top. In terms of what Microsoft is doing with Bing and the ability to bring OpenAI and ChatGPT technology through the search engine, I don't think we've seen a lot of incremental share gains for Microsoft. I think it's really tough to break the Google domination in search. We'll be looking for some evidence of that, but the expectations for Microsoft Bing to gain a lot of share from Google is pretty minimal today.
Are you curious about what they say about OpenAI and how much that partnership is going to kind of fuel what comes next?
Yeah, I mean, there's been a lot of questions. I mean, the New York Times bringing litigation to OpenAI and Microsoft. there's some regulatory reviews on the partnership between those vendors and a few others in cloud and AI. I doubt that's going to get brought up much on the conference call. I think we'll just see more press releases, down the road. But it'll be interesting if Microsoft feels like they need to, strike some other partnerships with other content providers to avoid, litigation that's coming from the likes of New York Times. That could be something to touch on, but it hasn't been that topical in the investor community.
Interesting. Derek, we've got to leave it there. Thanks for being with us, sir. Appreciate the preview. Derek Wood there of TD Cowen on Microsoft and Alphabet reporting after the bow. Then on to Thursday, we'll hear from Amazon, Meta and Apple. That is $10 trillion.
발표 1분 전.
More than $10 trillion of market cap. I've been saying billion all morning. Just not used to saying trillion.
얼마나 떨어질지 보자. 보고 도저히 안 되면 저 포기하고 그냥 막 먹으러 갈게요.
Mary Barrett, just speaking on the earnings call, said GM will develop plug-in hybrids to cut emissions. So we've got the sequencing here. You go from the internal combustion engine to full EV. Is there something in between in the interim, which is ultimately going to be hybrids? And we've seen the demand for hybrids start to take off. We've seen some companies, Ford, really leaning in that direction. GM has been hesitant to do
오케이,
so.
55분인데
To me, is something we can talk about with Mary Barrett a bit later this morning.
Very much so, given the fact that if people kind of get an upper hand, it's also a way to distinguish the U.S. market from China. In terms of the supply chains, as well as some of the advantages.
제발
Also,
혈과
the dealers who are dealing with these customers sitting on her advisory board have been pushing executives to offer a hybrid. And then the Wall Street Journal reported this, and then she comes out and says, we're going to do it.
This goes back to something we've talked about over the last few weeks. It's not a reality check for the ultimate destination yet, but it certainly is when it comes to the pace at which we get to that ultimate destination. We've got to slow down. That seems to be the warning coming from many different places.
And this headline suggests not only slow down, but maybe even shift gears a little bit about how to wean people into this area.
Didn't John Kerry himself say it's not a light switch?
He did say that. He said that more than 13 million barrels a day of crude production was necessary, I think, as well. Coming up tomorrow, don't miss this. Bruce Kasman of JP Morgan, Sebastian Page of T. Rowe Price, Wei Li of BlackRock, and former Fed economist.
Transfer a self-directed individual brokerage account over to Robinhood and receive a one-time match bonus of 1%. The larger the transfer, the larger the match. You transfer, we match. Offer ends January 31st.
안돼.
What happened was you were offered a money-losing women's
안 돼요.
basketball team, and you said, I want to be in the other sports as well. Is that right?
Well, yeah, you got to be smart about this.
We're operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to over-invest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports,
오늘따라
the
발표대에서
athlete
좀
spirit,
반응이 별로
building
없는데.
a sports team that can perform at the best, but also talking a lot about the explorer spirit, how can we really tap into new things, continue being disruptive. We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
The younger generations are more, of course, pay more attention to sustainability, And so they are looking at brands that are greener, but you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
From New York City, for our viewers worldwide, a very good morning. I'm Manus Cranny in for Jonathan Farrow. So equities can't get a bid from GM. The £800 gorilla is in the room. It's called tech. What will it do? Fill or kill to the bid? This is Countdown to the Open.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, the Open, with Jonathan Farrow.
Coming up on the show, it is the busiest week for the earnings season. It heats up with big tech in the room. Traders await the next Fed decision, the U.S. jobs report, and the President of the United States, Joe Biden, faces mounting pressure on the conflict and to confront Iran. We begin with a big issue, big tech.
It's definitely one of those action-filled weeks.
An important week, huge week for Mag 7.
A big Mag 7 tech earnings.
All the mega cap companies, Amazon, Apple, Alphabet report. It's really about the earnings numbers.
40% of the S&P market cap reported.
By and large, we've seen 2024 estimates hold up very well.
Tech earnings are supposed to be up in double digits.
When you think about what has been holding up the market, has been propelling us higher, it's those big tech companies.
From a profitability perspective, tech is likely going to be the sector that can deliver.
I think they are going to be the leaders for earnings growth.
We certainly do hope that those companies deliver. And look, I think there is a decent chance of that.
여러분 역시는 아니고 제가 생각했던 거는 반응이 별로 없는데 발표도 했는데 도저히 없어 반응. 그나마 지금 좀 올라가고 있어. 오케이. 근데 도저히 안 되겠다. 오늘 완전 많았기 때문에 일단 좀 기다릴 수밖에 없고 지금의 상태 그냥 빠져나가기엔 좀 완전 나가리다 보니까 저 그냥 이 그대로 남길 거고 그냥 1시간 반 정도 다시 올게요. 그냥 식사해야 되니까 일단 기다려볼게요. 에이 여러분 참 저 같은 실수하지 마세요. 저 지금 빠져나갈 길을 기다려야 되니까 이따 다시 올게요.
Earnings estimates at 10 or 11% are reasonable, and tech should continue to lead on the earnings side.
Okay, they best not disappoint. You saw what happened last week with one or two of the stocks. Kathy, let me bring it to you. I mean, it's nirvana for you in the bond and the fixed income world. You've got a quarterly refunding, borrowing requirement that's going down, and we think we're at the peak of these auction sizes. Is that a short-term boost to a longer-term problem?
Well, our view is much like Russ's. A lot of good news is priced in, so there's some risk that things don't go according to the plan. But overall, we do think we're on solid ground in the fixed income markets. We have never really worried too much about the auction sizes because the auctions will come and they'll go, and somebody will buy them. And domestic households have been more than happy to buy U.S. Treasuries between 4 and 5%. I think the focus of the areas we might worry about are corporate bond spreads, very, very low, about the narrowest they tend to get. historically. So there is some risk, I think, if the equity market doesn't hold up as well as expected, that we could see some widening in spreads on the corporate bond side.
Interesting, it'll be on the corporate bond side, as you say. We just keep rolling up for rich 4s and 4.5% in terms of yield. So it is all about big tech, and it is about the earnings shifting into high gear this week. Alphabet and Microsoft will kick off the Magnificent Seven results. That is after the closing bell. Let's bring in the Bloomberg team to discuss. We have Mandeep Singh and Anura Rana. Mandeep, a good morning to you. Let's kick it off with you. I mean, this is sort of the moment when we really understand what's going on with advertising, what's going on with cloud, what's going on with the overall sentiment in AI. What does it mean in the prism for you?
Well, the mood of the moment is generative AI, and I think in Google's case, they've had a strong moat in search, for almost 20 years, and they have almost 90% share, which right now people are questioning whether the generative AI wave is going to hurt their search market share too. So to me, the key is they keep outperforming on the search. The consensus numbers are around 12%. So they should exceed that. And then YouTube, I think, will be where the upside will be relative to consensus, because what we saw with Netflix is streaming hours continue to be great, and YouTube has that subscription plus ad monetization, which I think will drive upside, because for 2 billion users spending more than an hour a day, they definitely have the engagement more so than all the other streaming players.
Yeah, well, it's certainly going to be a benchmark in terms of the appetite for advertising. If we talk about Microsoft, Anurag, this is going to be how much more are you outside of AI, or is it all going to be about AI within the Microsoft numbers?
Yeah, from Microsoft, it's going to be how much is cloud going to grow and how much contribution of AI is going to be there. I think consensus has growth at 27% for Azure. I think they need to beat that number by a big amount and also give a strong guidance, because the stock's done so well in the last few months, so expectations are very high. I think 27% is an easy target to beat, but by how much? And that's going to dictate, how the stock does tomorrow.
Okay, well, we'll keep an eye on both those stocks. Mandeep Singh and Anurag Rana waiting for the countdown to big tech after the bell. Kathy Jones and Russ Koistrich are with me this morning. Russ, take it to you. You still believe in mega tech. It continues to post strong earnings, and it is your largest overweight. We are walking into this tech reporting season, though, completely unclothed. Protection against downside is very, very low. Are we walking naked into this reporting season?
Well, look, I think, as we were talking about a moment ago, expectations are high, and clearly this is a trade that a lot of people are in. That said, I'd say two things. One, we do believe a lot of the drivers, whether you're talking about AI, whether you're talking about the further adoptions and evolution in social media, in search engines, these are longer term factors. They're not something that goes for 6 or 12 months, particularly AI, the impact on the semiconductor space. We think something that has legs. So again, you may want to trim your exposure, but it's something we still want to have in the portfolio. And that said, we have actually balanced out the portfolio a bit. We are still long tech. We're long mega cap tech. It is our largest overweight. We've been balancing that out. We've been balancing that out with what I would call high quality cyclicals in airlines, in autos, in parts of industrials. And the logic there is we have a decent economy. And while tech is certainly not cheap, other parts of the market are. You still have an environment where a lot of that premium valuation has been driven by a handful of names. And when you go below the surface and you look at different sectors, you find that many of them are trading below that long-term median. So we have actually trimmed back a little bit of our exposure in some of the winners from 2023 with adding to high-quality cyclicals to try to get a bit more balance in the types of exposures we have in the book in 2024.
And Kathy, we'll talk more about the Fed and QT in just a moment, but there's an interesting word that Russ uses there, which is about balance, trying to find balance in that equity portfolio. For you, balance in fixed income. You talk about the credit spreads. I mean, they are tight, and some would say price to perfection. If there's a bit of a backup, it may come in high yield. Where is balance for you in the fixed income to credit allocation?
So we're neutral. In other words, we haven't gone overweight or underweight on credit. And we are concerned that those spreads are so tight. And obviously, if there is a disappointment in earnings, if there's a disappointment in the economy, or even in Fed policy, I think you would probably feel it in the lower credit quality area. So we're a little bit cautious on high yield. We haven't gone underweight, but we are a little bit cautious in that there isn't a lot of room to maneuver here if there's a disappointment, either on the kind of macro side or for the underlying companies. And the story has been, well, the lending has still been there, and with some of these companies can extend, make it to 2025 when rates are lower. But you are looking at much higher financing rates for a lot of companies with the lowest credit quality. So that is a big concern, particularly if the economy stumbles or if the Fed doesn't accommodate as quickly as possible.
I mean, I think that is the risk, and if that's the evolution of thought, we'll get a little bit more opinion on that in just a moment with Mike McKee, and we'll reset with Fed Day for tomorrow. Kathy Jones and Russ Koistrick staying with me. Joining me to look through the stocks ahead of this opening bell, Abigail Doolittle is with me. GM is on fire. Abby, what else have you got?
It is absolutely on fire. We have GM popping by 7 to 8% the last time I looked. They put up a very solid beat for the fourth quarter, beating bottom line estimates by 7%, revenue by 8%. They expect profits to continue to grow this year. SUVs are real cash cows. This as they are committed to investing in EVs. Super microcomputer, take a look at that gain, up 10.4%. They put up a big sales beat. They raised their fiscal year revenue guide, and apparently the good results are helped out by improved supply. Plus, yes, you guessed it, AI-driven demand. UPS, though, not so much. Although it is off the lows, the stock now down 6.2%. They missed fourth quarter estimates. They reduced their guidance. They're cutting 12,000 workers. All of this on sluggish package demand and higher labor costs, Manus.
Yeah, we're just looking for those canaries in the coal mine, Abby, aren't we? 12,000 jobs to go at UPS. Abby, thank you very much. We'll touch base with you a little bit later on. Coming up in the show, we're counting down to the Fed. It continues.
I don't think that it's going to be a snoozer. And what we expect him to do is to lay the ground for why a March rate cut makes sense.
That conversation coming up on Bloomberg.
I think I'm melting. Let's go to a cooler place.
How do we make tomorrow better than yesterday?
You can't waste any more time.
It's an all hands on deck moment.
Around the world, people are working for a better tomorrow.
What we're doing is mind-blowing.
So this would be a carbon neutral jet fuel.
A little worm that can actually solve plastic.
Creating clouds. This is the definition of thinking outside the box. I believe when history is written and we look back at this moment in time, this will be when we started to transform the way we live to inform the future we want. This show is about solutions and the people behind them. My name is Nikolai Coster-Waldau, and this is an optimist guide to the planet.
Jamie Lannister on the Roomba.
bond market volatility we've had with every little second tiny minutia of data and information, I don't think that it's going to be a snoozer. And what we expect him to do is to lay the ground for why a March rate cut makes sense, right? We have PCE on a 6-month annualized basis already at their target, core PCE already at their target on a 6-month annualized basis. They have already laid the ground for looking at balanced risks. And as we know, the job market is softening. We're seeing a narrowing in the sectors that are hiring.
That was Constance Hunter, Senior Advisor at Macro Policy Perspective, speaking a little bit earlier on Bloomberg. And the Fed's two-day policy meeting, it kicks off today. Investors are bracing for a rate decision at 2 p.m. tomorrow, followed by probably the big event, Chair Powell's news conference. Mike McKee is here to tell us what we can expect. Mike, good to see you. So the bigger event is probably the language rather than the decision.
Well, it's going to be interesting to see, and I'm not sure how Constance defines a snoozer, but it may not be as exciting as the refunding in the morning, and that may not be exciting either. All of a sudden, the plot has changed here. The Fed not expecting any surprises because certainly there's not going to be a change in interest rates. Now, likely news, we'll probably see a change to the tightening bias, no more how much more we have to raise rates. But then comes the question about, do we get anything that moves the markets? Do we get guidance on rate cut timing or guidance on the balance sheet? Probably not in the statement. Will Jay Powell give us something? That's worth watching. Now, the borrowing needs tomorrow, the quarterly refunding announcement is going to be interesting because if you look at what we have been borrowing quarter after quarter, and there's a bad quarter in there because of the debt ceiling issue, but you look at the latest numbers for the first quarter of this year and the second quarter of this year, they're lower than had been anticipated by the market. And so now the market is thinking maybe Treasury doesn't have to do as much. There is an issue with refunding tomorrow, and that is whether or not the Treasury Department decides to sell fewer bills. They ramped up bill selling after the debt ceiling issue to try to rebuild the Treasury General account. Now they've really started to bring it down. And also, how high do they let that Treasury General account go? Those will be key questions tomorrow. There'll be a couple of other key questions as well, but maybe not market moving unless we get a change in auction sizes, because Treasury is not going to be borrowing as much money as they thought. And if we get a continued decline in bill funding, and they're going to tell us about that, then there is a plan to start buying back off-the-run treasuries, and they did say they would give us a report on timing for that in the refunding announcement tomorrow. So Manus will be watching for that. So the people who are on the bond desk do have to come to work tomorrow. Whether they get surprises or not, we don't know.
Well, let's hope it's not a snoozer. Mike, thank you very much. It makes for a very dry wall painting in that case. Kathy Jones and Ross Kostrich are with me this morning. Kathy, well, who knows what tomorrow's going to be, but it certainly has the potential to be a snoozer, but you say it's more of a potential to shift to neutral. So how do they do that?
Yeah, I think there's a couple of mechanisms, as Mike mentioned. One will be changing the language, taking out the business about, how much more tightening there might be. So keeping a much more neutral, balanced risk approach. I don't think that they're laying the groundwork yet for a March rate cut. I would say May is more likely. That's at least what we have penciled in. And that's because they do have to address the quantitative tightening program. We've heard from Lori Logan of the Dallas Fed that they're looking at, shifting that to tapering the pace of that because of liquidity needs. And so that has to be introduced. Usually I would think that they'd want to introduce that before introducing rate cuts. And then there's the issue that the economy is doing fine and it's not urgent to cut rates. So I think anyone looking for an indication that we're getting a March rate cut might be a little bit disappointed, because I'm not sure that they'll want to hone in that precisely yet. So a couple of steps to be had. First, talk about tapering quantitative tightening, the tightening bias off the table and go to balanced risk, and then address the underlying economy and the financial conditions, tightening financial conditions versus easing financial conditions. So there's a few things to do, and then finally there's the rotation. We have new members, as we get every year on the Fed, and I'm not sure they want to walk out the door and make a big statement at this stage of the game. You know, this is the first time this particular group has gotten together, so unless it's urgent, why would they make a big splash?
Yeah, hold their powder dry. Now, Russ, you say we're going to go into this world of maintenance cuts. This is about the balancing act between real rates for you, and that's the most pressing issue. So maintenance cuts with no dramatic slowdown is your base case.
We do expect the economy to moderate, normalize this year, but yes, I think what we're talking about here is not the Fed cutting because they're seeing significant weakness or signs of imminent recession, but again, making marginal adjustments as we see inflation decelerate. And if that's what we're looking at, that is an environment where the Fed is not under any particular pressure to start immediately. They're not necessarily under pressure to go to 50 basis point cuts. It's one where they can be measured. And again, we have an economy where Q3 and Q4 GDP prints were both, very strong. We've got a labor market that is softening, but still very solid. Wage gains are decelerating, but still well above the level that's consistent with the Fed's inflation target. So the notion that they're going to begin very quickly, that they're going to go aggressively, that's not what we see right now. We think it's more likely they start, again, I agree with the notion of a May or June cut, and 3 or 4 being a more likely schedule than going 5 or 6 times.
There was one thing that I have noticed, and it's this debate. I'm looking at the 5-year break-evens, Kathy, specifically. 2 years are ticking up about 30 bips higher than we were in December when we last had the last Fed meeting. Seasonality can play a lot, I'm given to understand, by the team when it comes to the 2-year to the short end. But at the slightly longer end, the 5-year, I mean, that's also moving higher. So we have this discrepancy between a very well-behaved why don't I just take a drink of water and make all our lives a lot easier? We have this discrepancy between the 5-year, and what's going on with the PCE, which is sub 3%. Does that jar for you? And I'll have some water.
It's not necessarily jarring. You do get some movement around in the 5-year forward and the inflation expectations numbers implied in the TIPS market, and liquidity does get to be a bit of an issue there. But I would say the overall picture has been that inflation expectations have been really well behaved in this cycle, perhaps more than anyone would have anticipated given the spike in inflation that we got. What we are seeing and have seen throughout this cycle is relatively tame intermediate to long-term inflation expectations. And I think the Fed can take some credit for that and some comfort in that, in the sense that we're not seeing things really diverge quite dramatically. And I'm on the same page with Russ. May or June, start a gradual, keep real interest rates from spiking up anymore and doing more harm to the economy, but sort of a gradual approach. As long as we're in a good place with the economy, I think the Fed really needs to, or really wants to take this gradually and find their way. Jay Powell talked about driving down a foggy road. I think it was a foggy road, and not being able to see well ahead of him. He loves those auto metaphors. And I think that there's still a little bit of fog on the road ahead, so the Fed can take it gradually.
Well, Russ has a lot more clarity than Powell, and I like this, Russ. You said for the first time in over a decade, FI fixed income can contribute meaningfully. So just very, very briefly, how much more meaningful addition in fixed income would you make at this stage in the year?
Well, I agree with Kathy's comment before. This is a harder time to add, particularly in high yield or IG. A lot of what we have in the portfolio, we bought in 2021, 2022 when spreads were much wider. But the short answer is whether you're talking about IG, high yield, securitized, parts of EM, it's been 15 years since you've been able to rely on the credit portion of your portfolio to make a significant income contribution. And we think in that sort of multi-asset spread portfolio, you can get 6.5%, 7.5%. That's a big difference from what we were talking about 5 years ago. So we have had meaningful positions in our multi-asset portfolios with the goal of getting a nice tailwind in terms of the overall total return.
Russ, thank you very much. Kathy Jones, Russ Koichtrek, with their views on fixed income and equities. Coming up, your morning calls. Troy Gajewski joins me for this full investment service for you ahead of the opening bell.
Transfer a self-directed individual brokerage account over to Robinhood and receive a one-time match bonus of 1%. The larger the transfer, the larger the match. You transfer, we match. Offer ends January 31st.
Regional sports networks. There's a lot of the business that seems to be collapsing. Leagues have sort of toyed around with, can we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it?
Peacock, yeah.
And that was really smart too, because they were able to leverage that number as high as possible. So they always zagged where the money was and where the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
Time for your morning calls. Look at some of the analyst recommendations on the street. First up, UBS upgrades Spotify to a buy. The analyst says the stock has room to run as efficiency gains play out. Next up, Oppenheimer downgrading 5 below to perform rating. That's on slowing growth dynamics. And finally, Wells Fargo downgrades Western Alliance to equal weight. The analysts say the company's current results guidance leaves little room for error.
The reception, the acceptance of Purosang has been extraordinarily high. We had to stop the order for a while because we had to understand how to manage the supply chain. So there is a strong traction of Purosang all over the world.
How much do you worry about increasing production and therefore becoming, I guess, less high-end luxury?
We are making 13,000, 14,000 cars per year. We will not grow a lot in the future because we want to grow more for value, not for volume. And maybe one number, You know how many cars Ferrari did we put on the road since the beginning, since the first one? 250, 260,000. So 250,000 cars in a market where there are million and million of cars every year.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Looking at futures, just dipping into the red before the cash bell rings. We are nervous ahead of these big tech earnings. You've got Alphabet and Microsoft tonight. They will define the trajectory of how much AI you are prepared to pay for. There you go. We're rolling over to slightly dip on the opening. That is the opening bell. We are nervous. The 800-pound gorilla of tech can fill or kill on risk. These are the rest of your markets. You're looking at Euro-dollar up 1/8 of 1%, despite the rhetoric around easier ECB. The ECB may perhaps cut more and earlier than the Fed. You're looking at 10-year yields ticking down ever so slightly. Again, you have this narrative in the bond market that the quarterly borrowing estimate was cut yesterday. What does that mean for the auction sizes? And crude ticks up by 1/4%. We'll have more on Aramco's ambitions and production in just a moment with Will Kennedy. But stocks are what we're here to watch at the open. Pfizer is ticking away. The company is beating the analyst estimates. The government is returning fewer doses of its COVID treatment than predicted. Abigail Doolittle joins me with that. Abby.
Well, man, it's very important about that profit is the fact that it's a surprise profit. The street had actually been looking for a loss of 19 cents. Instead, they put up a very small profit. And as you mentioned, it had to do with the fact that the government did not return as many of those Paxlovid COVID-19 treatments as expected. But overall, for Pfizer, after dropping 43% last year, it's about looking to the future. And interestingly, that means looking to oncology. They, of course, acquired Seagen for, I believe, $41 billion. So they were able to maintain, reiterate, reaffirm their full year view. So perhaps some expectation that they have the numbers right after a very difficult, again, 2023 as the COVID-19 treatments to some degree disappointed. And now we'll have the focus on cancer treatments into today. Again, after that 43% drop last year, down 5%. I'm betting, Manus, that Pfizer investors really hoping that 2024 is going to be a bit brighter.
Okay, Abby, thank you very much. So we've got Pfizer up just under 3%. Stick with the earnings. AMD will report after the bell with a focus on chip demand and AI. What else can we talk about in this world? Katie, what have you got for me? What's the curtain raiser?
Well, there's a few things to look at when it comes to these AMD results after the bell, especially given Intel's weak forecast that we heard last week. Investors will be looking at demand for computer processors. But of course, Manus, there will be a lot to say when it comes to AI and really AMD's push into AI infrastructure. Specifically, investors will be looking for any news around AMD's new MI300 accelerator chips, which just began shipping. And remember, these are the chips that are designed to challenge NVIDIA's models. And as such, you have Susquehanna writing that while they expect guidance there to actually disappoint, it's going to be the most important piece for investors in this print, given that MI300 update we're talking about, because investors really waiting to judge the upside for AMD when it comes to AI. So the stakes are really high here. And when it comes to AMD's valuation as well, that is really in focus. It was actually downgraded by Raymond James today to an outperform from a strong buy. So they still have a lot of conviction on this stock. But the analysts there say that the stock is already implying around 20% unit share for the MI300 among AI GPUs. So again, stakes are very, very high. We're going to see what AMD actually delivers in just a few hours.
Katie, thank you very much. We'll count down to those numbers with you. Let's turn to the automakers. GM beat on the expectations for profits this year and an improved outlook on US sales. Isabel Lee is with me, and this is Mary Barra really tallying the market. Perhaps the worst is behind us on CapEx in EV and indeed the outlook for the US.
The worst is indeed behind us, and this is really interesting, Manu. So General Motors forecast adjusted EPS that beat estimates for 2024, and for the fourth quarter, it also projected a forecast that beat estimates. And this is quite interesting because the bullish outlook stems less so much from an uptick in sales, but more on the belief that the worst is behind us. Remember, last year, GM was one of the companies that was really affected by the UAW strike. So GM said adjusted EBIT for all of 2023 came in at $14 billion. That's on the high end of their November forecast. And the current year, they're seeing adjusted EBIT in the range of $12 billion to $14 billion. So that's also just shy from their November high of $12.4 billion. Evercore said this is one of the most dramatic ways to start the year when it comes to guidance, while Jefferies said that this shows GM management is running, quote, a tight ship. Shares of the company is surging, and now it's up almost 8%. So the guidance this year is really based on strong profits, but it really shows that it's spurred by optimism about a soft landing, which is in stark contrast from the caution that Mary Barra and the company expressed last year, Manas.
Indeed, Isabel, thank you very much. Keeping an eye on GM. Tune into Bloomberg TV and radio a little bit later on. We have that interview with Mary Barra in terms of her outlook on China and is the worst behind in terms of the narrative for EV capex. Completely different story now. UPS, the shipping company, missing estimates, really as a result of higher labor costs and lower package demand. UPS also announcing it will cut 12,000 jobs and ask workers to return to the office 5 days a week. Simone Foxman, it's a lot to digest within the UPS numbers.
Yeah, that's right, but I think CEO Carol Tomei summing this up well. 2023, she called it, was a unique and difficult year, and that she's focused on controlling what we could control. And that news about those 12,000 job cuts expected, UPS says, to yield $1 billion in savings this year. Remember, put this in the context of that $30 billion agreement that the company struck with its union of Teamsters over the summer. That is a 5-year agreement, but expected to significantly increase those wage costs. When you dive through the numbers here, fourth quarter sales missing estimates, revenue down 7.8% year on year. Average daily package volume also down a similar amount on a year-on-year basis. Analysts really focusing immediately on the 2024 guidance, though, which also missed expectations. Revenue now expected to be $92 to $94.5 billion. The estimate was for 95.7, so well above what we actually are seeing from the company. Annual sales will just rise about 1.1%. That was after a 9.3% drop. So we're really not seeing that rebound that many had anticipated. Again, challenges after that labor agreement, those drawn-out talks, winning back business that UPS lost during the summer is going to be a key challenge looking ahead. And then, of course, macro pressures. People are going back to the store. They're not ordering as much to their houses anymore. But Jefferies, which has a buy on the stock, saying, you know, Wall Street's expectations were too high. Last year, the company set its own expectations too high. So this new guidance may set a floor for expectations and could set up a beat and raise. But clearly, we're not seeing that enthusiasm in the market today, with shares down now close to 7%, Menace.
Okay, Simone, we'll keep an eye on UPS. So what have we got? We're going to count down to jolts, jobs, and of course the Fed. And my next guest says this: the latest data series on the US economy continue to roll in, and are collectively painting a mind-bendingly rosy picture of the U.S. economy. I thought it was all joy out there. Troy Gajewski joins me now from FS Investments. Troy, a hint of skepticism in you there, but I go on to read the rest of the note, and you are max bull for the next 12 to 18 months. Is there nothing can blind me in this light? Good morning.
Hey, good morning. No, I mean, max bull would be a very strong statement. I mean, the point of that strategy note was just to articulate, the wonderful journey we've really been on as an economy here the last 6 to 9 months, where, You know, even we last May, when banks started to fail and bank lending was stagnating, and obviously the Fed was draining their balance sheet and it just hiked up rates at the fastest pace in history, thought the probability of recession was at least marginally above 50% over the next 12 to 18 months. But if you think of the data that's rolled in here the past 9 months, what you see is an incredibly resilient economy. Obviously, the labor market continues to be somewhere between warm and red hot. It's cooled from white hot to warm to red, but that's important in order to bring inflation down. You know, business fixed investment continues to be very strong, driven somewhat by fiscal stimulus. States and municipalities, for the most part, are in very good shape, and labor hoarding is a real thing. So, you know, from an economy standpoint, you know, and as a firm, we're very focused on private credit and middle market private equity. You know, what we've been rooting for is the Fed to hike as aggressively as possible and keep rates as high for as long as possible without cratering the economy. And here we are. And so at one point we referred to it as the dare to dream scenario. And now it's really a base case. It does make us a little bit nervous that that's more consensus now. And then, of course, you have the economy, but then you have capital markets. And really the problem for investors now for markets is, you know, equities are at very elevated multiples. Yes, earnings should be reasonably strong this year, but it's unlikely to get more multiple compression. And if something goes wrong from a liquidity standpoint, you could have some downside, particularly with money supply still shrinking. And then in fixed income, as your guests were discussing before, you know, a lot of the juice that was there, you know, by October is no longer there because the 10-year dropped from 5 to roughly 4%, and you just don't have that much upside left. So, you know, there's the real economy and there's markets. The real economy is in relatively good shape. It's just going to be a lot harder to generate the returns this year like we saw last year in 2020 or 2021.
So where does that drive the liquidity that's going to come to bear, Troy? Because we've got money market fund money, we've got institutional money. As you say, if I'm fully juiced on quoted markets, do I then reach into private markets more aggressively and more dynamically? Is that what you're seeing from the client side?
Yeah, so I think the biggest challenge for all investors, whether you're a large institution or a small retail investor and everything in between, is, you know, when you think about the cash piles that have built up here the past, 3-4 years, you have, roughly 2.3 trillion more in money markets, you have another 4 trillion more in commercial bank deposits. And that was a logical step because there was a lot of uncertainty and obviously you were finally getting paid something for cash. And so now the challenge is how do you deploy that intelligently at a time where risk is fully priced in markets? And, fortunately, there's a whole host of what we refer to as Northwest Quadrant Efficient Frontier strategies where you can incrementally take more risk and significantly boost returns, whether it's senior secured commercial real estate lending, middle market corporate lending, middle market private equity is probably the greatest example of where you can go for growth without taking undue risk right now. So that's the challenge for all of us is how do we gradually deploy those cash piles in a way that's not taking undue risk, but still generates either a high single digit or low teens return. And because the asset class has become so much more democratized, you don't have to be a sovereign wealth fund or a large major endowment to benefit. Even in many cases, credit investors or smaller can benefit. So it's a really wonderful transformation of the industry. No need to reach for too much risk. There's plenty of options out there that can achieve your asset allocation goals.
It's interesting. I mean, Apollo obviously launching new, slightly more retail-oriented, if you can call it retail-orientated products, perhaps for the high net worths. So every day we're just banging on about Big Tech Magnificent Seven, and we talk about the premium. You've got various notes out talking about the premium of Mag 7. Today it's Kalanovic talking about premium, 34% premium to the rest of the index. You would warn that the potential for my upside here is perhaps more limited than a spook and the risk on the downside. So you wouldn't necessarily increase allocation to that kind of collective at this juncture. Is that correct?
Yeah, so when you think it through, to Marco's point, is, almost an incredible perfectionism priced in. We're not big buyers of sell growth, sell the Magnificent 6 or 7, or the 6 plus Tesla, because they're great companies. They have great free cash flow generation. It's just the market's been incredibly distorted and those multiples are so elevated that you really need continued good news in order to provide any upside. And it's just unrealistic to get further multiple, expansion. But in the event that there's some free cash flow disappointment the next several quarters. You can see another retracement like we had August, September, and October of last year. This time not necessarily driven by higher back-end yields like we got then. This time driven more by fundamental disappointment on free cash flows.
It's refreshing to have gone through sort of 6 or 7 minutes and not talked about the Fed, but let's finish off with it.
They're kind of important, right?
You know what? Actually, I'm just going to rip up the script. I'm going to skip the Fed for tomorrow, and I'm going to jump to jobs on Friday, which is, you talk about the job market going from white hot to just warm, but it still bodes well for the consumer. But yet you are worried about the consumer's capacity to deal with a wobbly moment. So just talk to me briefly about the consumer. We've got jobs and we're paid well. Consumer remains strong?
Yeah, so the consumer, again, I think it's really important to unpack it and think about it from a standpoint of where the consumer is today versus 12 to 18 months ago. So, the job market has certainly cooled. And again, that was very important from a standpoint of constraining inflation and eventually having this, soft or no landing type environment. But obviously the savings rate has come down dramatically. It's roughly half of what it was pre-pandemic, as an example, from, a 7 handle to a high 3 handle. A lot of the excess savings that everyone expected to be run down by the summer of last year, there's still several $100 billion left, but the clock is ticking on that. And so what that basically means is in the event of some unforeseen shock, there's less shock absorption capability in the U.S. consumer to absorb it. And this is very, very important in 2022. Remember, pretty much every contributing factor to GDP went negative. Federal government spending, business fixed investment, the housing market, trade, inventory, but the consumer was still incredibly robust. At this stage of the game, there's more fragility there, particularly in those that have more floating rate debt and have been constrained by higher debt service costs. So, it's not a moment to be Pollyannish or assume that the probability of recession is zero. I mean, the probability of recession is still... It incrementally rises. I get it, the hint of caution. Troy, thank you so much for being with me this morning. Troy Gayeski with his thoughts on the markets. Coming up, tensions are simmering in the Middle East.
We'll respond decisively to any aggression. And we will hold responsible the people who attacked our troops. We'll do so at a time and a place of our choosing.
We're live to Washington with the very latest on the response from the United States of America on Bloomberg.
Transfer a self-directed individual brokerage account over to Robinhood and receive a one-time match bonus of 1%. The larger the transfer, the larger the match. You transfer, we match. Offer ends January 31st.
When you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
I know one of the reasons you're here in Marrakesh and in Africa because you see the enormous potential this continent has as a source of renewable power for electrolysis, right? That's the process by which hydrogen is extracted from water. Tell us about Africa's potential.
Africa's potential is the best in the world, and it's Africa's shot now. It's Africa's turn. What will stop Africa rightfully taking its turn will be lack of progress on technology. Companies and governments around the world choose Fortescue because we are the world leaders in technology, world leaders in next era electrolyzer design, cables, solar, all the tech which is moving our world on from having to rely on dinosaur era fossil deposits of oil, coal and gas to simply today's era of machines which make machines, to harness all that beautiful renewable energy and give all the mobile energy, all the fixed energy this world could ever need by many times. Those countries who resist that are denying Africa their opportunity. And I'm saying, stop it. Let's get in behind Africa.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Friends in Luckwell Thursdays at 9:30 a.m. only on Bloomberg. Context changes everything.
Anyone looking to take advantage of conflict in the Middle East and try to expand it, don't do it. We will respond decisively to any aggression. And we will hold responsible the people who attacked our troops. We'll do so at a time and a place of our choosing.
The U.S. Secretary of State Antony Blinken there weighing in on this weekend's deadly drone attack in Jordan. And the pressure is mounting on the Biden administration to find the appropriate response, tough enough to deter Iran and its proxies without sparking a direct warfare with the Islamic Republic. Katie Lyons is with me. So what are they saying in Washington? You've some real hawks calling for aggressive action, but really this administration needs to thread the needle and find a response that delivers a message without heightened conflict, direct conflict between the United States and Iran.
Yeah, Manus, it's a very fine line to walk. The Admiral John Kirby, the spokesperson for the NSC yesterday, said there is no easy answer here because on the one hand, you are exactly right. It isn't just about retaliation for this attack that killed 3 U.S. troops, but making sure another attack like this doesn't happen again because we have seen more than 150 attacks on U.S. soldiers in the Middle East by Iranian proxies since October 7th when the war between Israel and Hamas began. So they want to deter these things from happening in the future. That may mean a stronger response than the strikes we've already seen the U.S. conducting against Iranian proxies like the Houthis, for example, but calls from some members of Congress to actually strike Iran directly may lead to concern about escalation in the Middle East. Of course, Iran, for its part, says that diplomacy should be the way forward here and that the White House knows that as it has tried to distance itself from this particular attack. One other factor to keep in mind here, Manus, is there are active negotiations happening right now for a ceasefire agreement between Israel and Hamas, stopping the hostilities for a certain period of time, perhaps 2 months or longer, in exchange for the release of hostages still held by Hamas, which of course is an Iranian proxy. And other Iranian proxies like the Houthis have said that they are acting in support of Hamas as it has this ongoing conflict with Israel. So if we were to see some kind of ceasefire agreement, even a brief one, that could lead to a cooling of tensions overall.
Katie, thank you very much. Katie Lyons there, tracking the very latest nuances in the Middle East. Let's stay on that track. Saudi Aramco announced an abandoning of their plan to boost oil output capacity, raising the questions about oil demand. Or does it? Will Kennedy, we're very lucky to have you in situ in New York this week, our senior executive editor for Energy and Commodities here with me. Look, when you sat down in the seat, I was trying to tie big threads together. You said, no, Manus, this is Aramco cutting back on the original targets of 13 million barrels a day. It's a pragmatic response.
They haven't said exactly why they're doing this. They just announced that it was happening. And look, it's fair to say that it was quite a dramatic U-turn. This had been a widely trailed plan to invest billions of dollars to increase the kingdom's capacity. And they've suddenly said, no, we're not doing that. But I think we need to look at where they are today. They are producing just 9 million barrels a day of oil. It looks clear from the market balances, and demand is part of it, sure, but supply from shale and elsewhere is another part of it. They're not going to be needing to produce and supply 13 million barrels a day anytime soon. So at a time when the kingdom needs money to finance other plans and it gets a lot of money from Aramco dividends, it probably makes sense for them not to spend these billions of dollars on going to 13 barrels per day, maybe keep some of that cash, maybe up the dividend, we shall see, and redirect some of that money elsewhere. So I think it's a realistic recognition of where the market is today and what the demand for Saudi oil is globally. It's only 9 million barrels a day right now. It isn't going to get fundamentally to 13 million anytime soon, and maintaining that kind of unused capacity on your books is an expensive thing to do.
It is indeed. I'm just looking at what RBC reckon. They think that the overall budget could come down by $5 billion in terms of the original numbers in the Aramco statement. Let's see what they say in March. Will Kennedy, thank you very much. Context around the Aramco ambitions and plans. Some sector price action for you this morning. Let's get back to Abigail Doolittle. Abby, what have we got?
We're looking at a tiny decline right now for the S&P 500, pretty evenly split beneath the surface. Not a lot of drama, as John would say. Energy down about 0.5%. This, of course, is oil is about flat. We have the financials up about 0.4%. Right now, we have slightly more sectors starting to turn down. On the month, though, let's take a quick look at one sector that's going off of the charts, and that, of course, is the stocks. The S&P 500 semi and semi-cap equipment company index up 12%. Really quite a January so far, Manus.
That is a whopper, isn't it? Abigail, thank you very much. Hopefully the chip stocks will deliver. Coming up, the market-moving events that you need to keep your eye on for your trading diary, right here on Bloomberg.
Pretty much. I mean, one of the things, we have this great connection about the love of baseball. And the reason why Warren and I got to know each other is he insured my contract for 252. I reached out to him and I said, Warren, now that we're business partners, maybe I can come see you in Omaha. I thought I would never get an email back. And Debbie, who's been with him for over 40 years, wrote back and said, how's October? I said, I'll be there. We're not going to the playoffs. And that led a series of 5 or 6 years where I go back to Omaha. And he said, Alex, you always want to be a gentleman. You want to be a great baseball player. And then the 2 rules of investing are, 1, never lose money. And number 2, don't forget rule number 1.
Speak with your trading diary for the rest of this week. Today we're going to focus in on Alphabet and Microsoft. After the bell, Wednesday it is the Fed decision. Of course, Thursday takes you to the Bank of England. How dovish will Bailey be at the Bank of England? Will there be a vote for a cut? Amazon, Apple, Meta report earnings as well. And finally, it is the big show time. Jobs, payrolls, wages. How hot is the US economy? That was down to the open.
I think I'm melting. Let's go to a cooler place.
How can we make tomorrow better than yesterday?
You can't waste any more time.
It's our all-hands-on-deck moment.
Around the world, people are working for a better tomorrow.
What we're doing is mind-blowing.
It's supposed to be a carbon-neutral jet fuel.
A little worm can actually solve plastic.
Creating clouds. This is the definition of thinking outside the box.
I believe when history is written and we look back at this moment in time, this will be when we started to transform the way we live to inform the future we want. This show is about solutions and the people behind them. My name is Nikolai Coster-Waldau, and this is an optimist's guide to the planet.
Jamie Lannister on the Roomba.
Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Romowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
Transfer a self-directed individual brokerage account over to Robinhood and receive a one-time match bonus of 1%. The larger the transfer, the larger the match. You transfer, we match. Offer ends January 31st.
Business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. Alex Steele. She's on assignment in Florence. Not Florence, South Carolina, but Florence, Italy.
How did we not get that?
How did we not get that? I have no idea, but she gets it. She's over there. Some energy company is apparently based there, so she's at their annual meeting. So anyway, she'll be back later in the week. But we got John Tucker hanging with us for the next couple hours. Coming up, we're going to check in with Dana Peterson, chief economist at the Conference Board. I'll get a breakdown on some of the economic data. Consumer confidence came out this morning. Ira Jersey, Bloomberg Intelligence, is going to join us. He's the rate strategist there. A little preview of what we might hear from the Fed tomorrow when it reports at 2 p.m. Wall Street time conference. With all the reporters and stuff like that, with the speech at 2:30 Wall Street time. And then at 10:20 this morning, just in a few moments, Bloomberg's John Farrow is going to sit down with Mary Barra, the CEO of General Motors. So we'll get a sense of what's happening at GM, their earnings were reported, and how they're managing this transition to the electric vehicle marketplace. So we'll get all that. And let's kick this hour off like we like to do, Mr. John Tucker, with the Bloomberg Business Lab. John.
All right, let's start because we are data dependent with the JOLTS job opening survey. This is the job opening labor turnover survey. It indicates lots of strength in the U.S. labor market because we had over 9 million job openings. This was the month of December. The expectation was for something like 8.7 million, but again, 9 million, 26,000 job openings according to the job.
Where is everybody? They're not working.
I got the youngest one out the door yesterday for a job interview. Good. So I have yet to hear back, but keep your fingers crossed, everybody. As a result of this, let's go right to the yields. The 2-year before this report, it was down 2 basis points. Right now, popping a little higher, up 1 basis point right now. The 10-year, that's unchanged at 4.07%. As far as stocks, S&P 500 right now 6 points lower. The first of the so-called Magnificent Seven tech mega caps reporting earnings today. This is going to be after the close. Major test of whether the rally in stocks is sustainable, along with Microsoft, which just hit an historic $3 trillion market value. We're going to hear from Google parent Alphabet. Both are set to post record revenue for the quarter. Joe Quinlan at Bank of America remains bullish of equities.
We stumbled into the year early January. Now we're off to the races after a very strong November, December. So any pullback here, a breather would be good. Kind of reset, rebalance, and kind of put more money to work. So I wouldn't be disappointed in a pullback here because we'd be a buying opportunity.
Yeah, right now the major averages, they seem to be on hold until we get those earnings. Down right now, 33 points lower. That's down less than 0.1%, 38,303. Again, the S&P 500, 5 points lower. The NASDAQ 100 right now down 68 points. That is down 0.4%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Paul.
Okay, John Tucker, you're sticking right where you are, dude, for the next 2 hours. You're a confident guy, John. The consumer confidence number just came out from a conference board. Man, spot right on the forecast. Wow. Came in at 114.8. That was right in line with expectations, and notably, it was a lot higher than last month, which was revised down to 108. So nice pick up there. Let's break it down with somebody who kind of knows what's happening here. Dana Peterson, chief economist at the conference board, joins us via Zoom. Dana, it looks like a solid number. Put it in context for us.
Absolutely. We have the highest reading on consumer confidence in 2 years. A lot of it was led by the present situation where consumers are feeling good about their jobs, they're feeling good about the business situation, but also consumers are thinking that maybe we won't have a recession, and that also contributed to expectations which were above that threshold that usually signals recession.
Yeah, before you came on, Dana, we did the JOLTS job opening survey. More evidence the labor market is just cooking along. How much does that play into this?
We think it plays a huge role. Consumers continue to say that the labor market is good. Even most of last year, they said the present situation was fine with regards to the labor market. Many of them are working. Companies are not letting people go because they're concerned about labor shortages. And so that's been benefiting the consumer and definitely supporting their finances and their incomes.
And Dana, it's interesting here. We're getting, as interest rates come down, like just take the mortgage rate. Mortgage rates are coming down off their peak. They're still a lot higher than probably people would like, though. But everybody's got a job but wants one. Where are you looking at this economy to get a sense of really where it is and where it might be going here?
Sure. So, you have to look at the economy, look under the hood. So there are definitely areas of weakness. The housing market is still pretty weak. As mortgage rates have come off, but they're still much higher, almost double what we saw pre-pandemic or even during the worst of the pandemic. Businesses are not investing that much, and we don't think government is going to be as big of a stimulator. But when you look at consumers, many of them are working, as we said. Their real incomes are rising as inflation is falling, and so that's definitely propping up spending. But the key issue is, can they continue to do so? And we're not sure about that given the amount of debt that's being piled up right now.
Okay, and these numbers also, to some extent, because they are good numbers, might actually be inflationary. You did mention consumer spending, right?
Well, the interesting thing is that in the write-ins, consumers continue to complain about inflation and prices. So the price level is high, even though inflation prices aren't rising as quickly as they were. But the good news is that inflation expectations continue to fall in our measure, and that's a signal that consumers are thinking that inflation is going to continue to decline. And so it might not be inflationary, despite the fact that we have seen some pretty strong consumption, especially in the second half of last year and in the last 2 months of last year.
Can you explain why those inflation expectations are important? Do they tend to be sort of self-fulfilling prophecies?
Well, it can be. If inflation expectations are too high, then people say, well, I'm just not going to spend because I can't afford it, and I probably won't be able to afford things in the future. So with the expectations falling, that means consumers are thinking, oh, I'm going to get some relief later on, so that means I don't have to put my life on hold while I watch prices rise even faster.
So, Dana, at the conference board, are you guys thinking there's going to be a recession in 2024 or not? How do you think about that?
Well, we do think the likelihood of a soft landing has definitely increased, but there's still risks out there that you could have a recession. It's probably going to be short. It's probably going to be shallow. Why do we think that? Again, consumers no longer have the massive supports from stimulus checks. Also, many consumers are financing their purchases with debt. At some point, that's going to come due and they have to pay it back. We also think that some businesses may come under pressure and start letting people go, and that will definitely put a dent in confidence and also spending. But the key thing is the labor market. If the labor market doesn't weaken much further, then you're probably going to see people continue to spend, and we'll have that soft landing that the Fed is looking for.
Are all the consumers created equal, or do you break this down into certain groups geographically or income-wise?
Yes, we do. And in fact, every income group, with the exception of the wealthiest group, were more optimistic in January. So that's definitely interest rates to be lower, and they expect the stock market to be higher going forward. So, the folks who tend to have stocks are the wealthier folks, but the point is that every age group was feeling better in the month. So for the most part, consumers are much more optimistic now than they were a few months ago.
Can I just, real quick, the political implications, what does it mean for a Joe Biden presidency?
Well, I will say the election is months away, and that's kind of like an eternity, right, in terms of political terms. But, the key thing is, it's probably going to be domestic issues and things like the border and spending that may cause consumers to come out there and vote one way or the other. But certainly if, the economy does take a bit of a swoon, we think it's going to be in the middle of this year. And by the time we get to the election season, the economy should be recovering. And that's good for either candidate, really.
All right, Dana, thank you so much. We appreciate that. Dana Peterson at the conference board. Again, consumer confidence data coming out today. Pretty darn strong here. We have, in addition to all the economic data we have this week, in addition to all the earnings we have this week from some big tech companies, we also have a Federal Reserve meeting tomorrow. And I think I saw Michael McKee with his bag heading down to the Acela station.
Well, there's a Michael Barr on the Fed, too.
I know, exactly. We're all
not
over
the one
place.
you were thinking of.
No, exactly. Bloomberg Intelligence Chief U.S. Interest Rate Strategist Ira Jersey joins us from Princeton, New Jersey via Zoom. So, Ira, I guess tomorrow, obviously the rate, any movement in the rates is not expected tomorrow. What are you looking for in tomorrow's release and in the commentary from Fed Chairman Jay Powell?
Yeah, tomorrow's going to be a very busy day for those of us in rates land. We not only have that Fed meeting, but also the quarterly refunding announcement from the Treasury Department in the morning before that. So at the Fed, we're going to be listening for nuance. I think the statement probably doesn't change very much, but Jay Powell, I think, will probably need to guide the market as to whether or not they think there's going to be a cut in March or not. He's going to probably say every meeting is live, but at the same time, some meetings are more live than others, I would say. So I think that if the Fed is thinking about cutting in March, he really has to make that not abundantly clear, but I think he has to make it a little bit more clear that they're going to be cutting in March. The other thing that I think that to listen for Jay Powell is what's the path thereafter. So the market is not pricing for what Governor Waller mentioned a week and a half ago or so, which is we're not going to necessarily go at every meeting. We're going to go slow. We might only cut 3 times this year. The market doesn't believe that they're going to do that. The market thinks that the Fed going slow is cutting 25 basis points every meeting once they start. And so it's going to be hard maybe to jawbone that, but I think Jay Powell will try to tomorrow.
What's the big worry at the Fed? Some sort of, Arthur Burns bumble? You cut now and then inflation comes roaring back and you look like a moron?
I think that's part of it. I think that the other issue that the Fed has is as they try to calibrate the Fed funds rate is a feeling among a lot of economists and I think a lot of people at the Federal Reserve that as inflation comes down, you have the real Fed funds rate, so the Fed funds rate after adjusting for inflation continues to rise, and that will be too restrictive and tighten financial conditions. But I think the bigger issue that the Fed has right now is that financial conditions, instead of being tighter, even though that real Fed funds rate has been going up, they've actually been easing. So you have credit spreads that are very tight. You have consumer lending rates that, while they're much higher than they were, they've come down significantly from their peak. And in large part, that's because the market is expecting the Federal Reserve to cut interest rates very aggressively starting in May and then continuing to cut into 2025. And that's adjusted a lot of the different borrowing rates and a lot of the other things that go into different financial conditions measures. And because of that, that's one reason why I think that the Fed wants to say, okay, we're going to go slow because they don't want to ease financial conditions even more and have another inflationary impulse. So like you said, John, like that's really the fear that the Fed has, is that they might be the cause of yet more inflation in the future and that the job's not done. And you're going to hear that again, that the job's not quite done, but we're happy with the progress made so far. That's going to be probably the opening line from Jay Powell when he talks about monetary policy and inflation.
Hey, Ira, earlier this morning we had Claudia Sahm on, Sahm Consulting, formerly of the Fed. She says the Fed's already too late. They should have already started cutting rates. Is that widely held out there, or how do you think about that?
Yeah, there were some people who certainly, and some investors who think that they should be, just because the economy has slowed significantly, and you have seen that, that gap widen between inflation and the Fed funds rate. But then there's a whole slew of others who look at the real economy and look at what happened with retail sales. You had the JOLTS data that was just out a couple of minutes ago that showed that job openings actually increased in December. The quits rate, though, kept on falling, so I think that there was kind of a mixed picture there in terms of the job market from that reading. But nonetheless, the economy seems to be holding up decently right now. So again, like if the Federal Reserve is behind the curve, as Ms. Sahm suggested, then certainly we don't see that in the hard data. We do see it in other things, like some of the survey data. But again, like you just had on Dana from the Conference Board, the Conference Board survey of consumer confidence was decent today. So again, there's all these mixed signals right now. Mixed signals usually do lead to a turn in the economy, but it's much slower this time than you might have expected it during prior cycles. And I think a large part of that is we still have a big fiscal impulse, right? We still have deficits that are going to be approaching $2 trillion this fiscal year and over the next couple of fiscal years. So that will keep the economy a little bit more robust than it would be normally. And then secondly, you still have consumers that don't have any lack of appetite to spend. So I think that there's a lot of good things still going on in the economy that are going to delay, I think, a recession and a major downturn until much later this year, and maybe even into 2025.
All right, you brought up fiscal, Iris, so let's talk about the Treasury cut. What did they do yesterday? They cut their quarterly borrowing estimate, which, I mean, to me, on the surface, that sounds pretty good.
Yeah, so it's a good thing. They cut it by about $55 billion. The Treasury Department, what they do is they have a forecast for a quarter ahead, and they almost always get it at least a little bit wrong, right? We all don't forecast perfectly what's going to happen. So they cut the borrowing estimate for this quarter primarily because it looks like revenue has been coming in a little bit stronger, meaning tax revenue has been coming in a little bit stronger than they anticipated, and spending has been about flat, and the fact that
we can spend more.
well, maybe that's part of it, but it does mean that deficits are going to be running a little bit lower than we initially anticipated. It was pretty close to our estimates. We were actually a little bit lower than that. We were one of the lower people within the consensus. A lot of people thought that they were going to be around $800 billion in net borrowing. We thought it would be under, closer to 700. It kind of came in the middle of that. So that means that the Treasury Department probably won't issue as many T-bills as we thought, but they still, we think, will increase the amount of 2-year notes, 3-year notes, all the way out to 30-year debt, issue a little bit more of that, because right now they're issuing a ton of T-bills compared to how much they're issuing of other debt. And there's only so much appetite that's going to be out there for short-end paper, especially once the Federal Reserve gets going and starts to lower interest rates.
And Ira, just on these auctions, remind us again, like, who's buying this stuff?
So it's mostly domestic investment funds. When you look at Treasury auctions like last week we had the 5-year and the 7-year. So you have investors who are just saying, okay, look, we're not going to buy the 7-year. The 7-year went terribly. Excuse me, the 5-year went terribly. The 7-year did okay, because I think people are preparing themselves for the Federal Reserve cutting interest rates, and usually longer-term debt does better when the Fed's cutting interest rates. So you have people going out and buying that. Look, savings is still high. There's still relatively high savings rates compared to what we had a decade or so ago. So there's still people that have money to put to work, and with interest rates closer to 4% instead of 0, Treasuries are an attractive option instead of buying maybe riskier assets that have a chance of default. Maybe if revenues slip or profitability slips because you think that there's going to be a recession, then you rotate out of other fixed income instruments into Treasuries, and also just put your incremental savings into Treasury securities.
All right, put on your politics hat. You guys in the Treasury markets, you must game all sorts of things, like if there's something unexpectedly happens in the election that your candidate doesn't win, but the other guy does. Have you gamed that? What are all the different possibilities?
Yeah, it's interesting because the conventional wisdom might be that if there's a Republican in the White House and Congress, that maybe they'll be so much more fiscally responsible. That actually historically has not been the case. That typically when you have one party that controls the White House and both houses of Congress, deficits go up, right? Democrats spend more money, Republicans cut taxes, but both of those have the same net effect of increasing budget deficits and increasing the amount of Treasury supply that needs to come out. And quite frankly, there's probably very little at this point over the next year or two that can be done to quell the $2 trillion-ish of deficit that's coming, regardless of who's in the White House. Our expectation, I think the most important thing that's going to come out of this election is not even the fiscal stuff. It's really who's going to be the next Fed chair, right? If Joe Biden wins the presidency again, maybe Jay Powell will be reappointed. I think that's pretty unlikely if Donald Trump or another Republican were to win the White House, that Jay Powell would wind up staying in his seat.
I mean, we have to remind everybody, Jay Powell was Donald Trump's pick.
Right, and quite frankly, when that came out, I was pretty surprised that Donald Trump picked him, because Jay Powell is kind of a mainstream Federal Reserve governor, or was at the time. I had expected Donald Trump to pick someone who would be more definitively dovish than a mainstream economist or a mainstream person. I can't call Jay Powell an economist, but nonetheless, the next Fed chair might be the most important thing from a Treasury market and from a rates market point of view that's going to come out of the election cycle. So who do people say might be their pick for Fed chair? Might be one of the more interesting things that comes out of the election. If people are asked that at a debate or in a town hall or something like that, I would certainly be interested to know, is Jay Powell likely to be reappointed, or if not him, then who else?
But I always thought, my conventional wisdom was that, yeah, the president makes the pick on the advice of pretty much everybody on Wall Street, because if he gets that wrong, you can just kiss your you-know-what goodbye.
Yeah, but there are a number of people who I think Wall Street would be okay with, but there's people along the spectrum, right? Like, if you chose someone like Lyle Brainerd over Powell, then you get a slightly different outlook on there. Governor Waller versus Jay Powell, again, like you have just some nuanced differences in the policy outcomes that you might actually get, just because those people have different opinions. So, if you wind up with, you go through a whole slew of former governors or former Federal Reserve regional Fed bank chairs, like James Bullard, for example, is out there, and he might have even a different take, and might be more hawkish or dovish than some of the other potential picks. So, and I think all of those, if they're known quantities, could probably Wall Street would probably be okay with them. It's just a matter of what price level you get. If you pick a more hawkish person, then maybe stocks go down, but it's not that the market's not going to function, and it's not that the Treasury market is suddenly going to implode because you picked one person who was more or less a dovish mainstream person or a hawkish mainstream person.
All right, Ira, great stuff as always. Really appreciate you checking in with us. Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence, down in our Princeton, New Jersey offices. We've got the Fed coming up tomorrow, 2 p.m. Wall Street for the statement, 2:30 for the press conference. Michael McKee from Bloomberg is down there. We're ready to go to cover that press conference. So we'll have to see how that goes. Again, expectations are not going to do much tomorrow, but the question is how about the March meeting. General Motors, they released some numbers. The stock's up 6.8% right now. Bloomberg's Jonathan Farrell sits down with GM CEO Mary Barra to get the latest on General Motors and its move towards EVs. Let's listen.
Katie, I'm pleased to say, joining us in the Bloomberg Surveillance studio alongside me is GM CEO Mary Barra on the latest results, with GM stock at the moment positive by about 7%. Mary Barra, the General Motors Chair and CEO, joins us now. Mary, wonderful to catch up with you. A better story to tell this morning. Let's start with that story. What's underpinning these higher profits for 2024?
Well, if you look at the strong 2023 results, we had very strong internal combustion engine sales, and we had strong EV sales from our Bolt EV and EUV. But as we go into 24, we're going to build on that strength, and we think 24 can be another strong year because we're going to be building many more Ultium-based EVs. We had a constraint with modules. We have addressed that. We're on track for the first month, and by the middle of the year, that should be well behind us. So that's going to allow us to build many more of the existing vehicles, like the Cadillac Lyriq and the GMC Hummer EV, the Silverado EV work truck, etc. And then this year, we're also going to be launching the Chevy Equinox EV along with a Sierra EV. So we have many new EVs coming out. And so it's going to be a strong year for us from an EV perspective as well. And we've indicated that in the second half of the year, we expect our EV portfolio to be variable profit break even.
Mary, let's talk about the EV market, because you are optimistic and constructive. At the same time, there have been some setbacks over the last few months. I'm thinking of Hertz. They need to dump 20,000 EVs. More recently, a competitor, Ford, had to cut the workforce making the electric F-150s. What do you think is behind the slowdown in EV growth more broadly over the last few months, the last few quarters?
Well, there definitely is a slowdown of EV adoption, although a transformation of this magnitude was never going to be completely linear. I think one of the important things is continuing to build out the charging infrastructure, but it's also about having purpose-built, ground-up EVs that have all the performance requirements. Because as we continue to grow in the EV market, and outside analysts expect that this next year, even the lowest is that it'll be an EV penetration of 10% versus this year of 7%. So although it's slowing, if we were to grow from 7 to 10%, that would still be significant and a record year for EVs. And to participate in that this year, we're well positioned with a portfolio of purpose-built EVs.
Mary, you and I have always talked about where the market is and where it's going. There was a belief for a while that we could move from the internal combustion engine to EVs, and now it feels like there's an interim step towards hybrids. You've been reluctant in the past. On the earnings call, you entertained that idea. What's changed your mind?
Well, again, as we're going through this transformation, a lot has changed. I think, a few years back when we made that statement, I think we thought we'd be farther along on the charging infrastructure, across the entire country. But I also think the regulatory environment has changed to be even more stringent. And so as we get there, we think now hybrids are going to play a role. We already have the technology. It's been deployed in other regions, so we'll apply it in North America at a time frame that we think is important, primarily from a regulatory environment, as we move forward.
Can we talk about that time frame just a little bit? How quickly can you get those cars to market, given, as you've just said, you have that technology ready to go?
Well, we're going to be launching those vehicles, the hybrids, in key segments of our portfolio, but we haven't put specific plans out. We'll be filling that in more later as we move on, because 2024 is really a year to focus on our EV production. Again, we've seen since last September, the Lyriq, as we've been able to build more vehicles, demand keeps growing. We've even had a strong January that's matching, we believe will match December, even with all the weather challenges we've we've seen throughout the country. We have 100,000 either orders or reservations for our EV trucks that we're going to fulfill between 24 and 25. So again, when you think about new purpose-built EVs, I think we're in a different position than some. If for some reason we don't see that EV demand materialize, we've got the flexibility with 2 plants that can build both ICE and EV.
That just raises the question again, Mary, how quickly you can deploy that. Is that something you can do in a quarter, something that has to take place over the space of a year? How long does that take?
Again, we're not giving specific details on when the hybrid vehicles will come out. That will follow later, but it will be timed, not because we have such strong EVs right now, it will be timed later when we see hybrids playing an important role in meeting the regulatory environment.
You'll have to forgive me for sounding slightly combative, but I'm just trying to understand myself. So Mary, help me understand just a little bit more. If EV's really strong, why are we entertaining hybrids? If that's the ultimate goal and it's going to be a distraction, why entertain hybrids?
Well, as I've said, we've seen EV demand slowing. We think there's still an opportunity for General Motors, but we think, if you think about it, we're 7% this year, getting all the way to 100%. There's going to be a lot of adoption, and there's some customers with their use cases are more comfortable with a vehicle that has 2 propulsion systems, the electric and internal combustion engine. And so we're responding to that. A lot is what is going to guide this is related to getting a robust charging infrastructure. So we're keeping our options open, and we're going to, look to what the market wants. We've already seen hybrid demand go up and down over the last few years. So, I don't think it's going to be, a long-term stable growth either.
Got it. You've always been pragmatic about the situation. Let's talk about the situation with competition as well. The Tesla CEO Elon Musk said just last week that Chinese automakers will demolish their global competition without tariffs. We noted in the last few months that GM sold fewer vehicles last year in China than in the US for the first time, I think, since 2009. Mary, how difficult is it to compete in China at the moment?
Well, the China market is under tremendous change. There's over 100 domestic EV companies that have started up. I think important to note, many of them are not profitable. We are changing our business, and we need to get more EVs out that can compete. But I think when you look at the intense price competition that you're seeing in China right now, that's not sustainable for any company. And so we're positioning for where GM has to be to compete in a very different market with many more domestic EV competitors. But we still think there's a place and a growth opportunity there as we move forward. But it'll be different than it was, 3, 4, 5 years ago.
You've said you're evaluating your business there. Could you help us understand a little bit more what ultimately that statement means? What does that mean to evaluate your business on the ground in China?
Well, we have to evaluate with how much the market is changing and with the different competition. We have to understand where can GM play and win, and that's where we'll deploy our capital. We have a very strong partner with SAIC, and so we're going to work with them together. We have been to make sure we have a strong business going forward. That's getting Ultium EVs launched there, and we're considering other products as well. So more to come on the China story, but we're going to make sure we set up the business with this very dynamic market to succeed.
Mary, let's talk about competition domestically at home as well. That statement from Elon Musk that ultimately Chinese automakers will demolish their global competition without tariffs. Do you have a position on that? Do you feel the same way? Is that something that the automakers in America need to be able to compete successfully? We need to put the barriers up?
Well, I think across the board, when you look at how do you win in this business, it's by having beautifully designed products that meet customers' need, that have the right functionality, right software, right technology at a very competitive price point. And that's why GM has been so focused on taking cost out and being more effective with our capital. And so that's what you need to do to win. I would say that you do need a level playing field. And I believe with our portfolio in many of the markets we compete around the globe, if there's truly a level playing field, we have a strong portfolio and we're going to do well.
The stock is doing well this morning, higher by about 6 or 7%. I wanted to finish up here. You've had some run-ins with activist shareholders during your tenure. You've got plenty of experience with this back in 2015, I think, 2017 again with David Einhorn. Are you at all concerned about investors losing patience with some of these bets on technology, with Cruise, on the EV transition as well, and ultimately facing that altogether again? Or do you think the capital return program announced only a few months ago, together with a share price performance and a better outlook, will keep those people away?
Well, again, we've got to run the business well. Last year, we had some disappointments in EV, and I think that created some cause for concern, as well as some of the challenges at Cruise. We're addressing both of them. I think this is going to be a breakout year for Ultium-based EVs, and we're going to demonstrate that this year. We have taken the steps necessary, and the underlying technology of our autonomous technology with Cruise is strong. And so we're revising the plan that will work very closely with local, state, and federal regulators as well as first responders. So I think there's a very strong growth opportunity there. And just let me say, from an autonomous perspective, you know, the benefits of autonomous are safety. When you look at and saving lives, when you look at today, I think some of the latest statistics show that 90% of fatalities on U.S. roads are caused by human error. So this technology holds great promise for safer travel. So we're going to continue to invest in that, but we're going to be measured and make sure what we deploy, we're going to generate returns on. So it's ours to execute.
Mary, I know you're non-stop this morning and you've got to run. We appreciate your time here at Bloomberg. Thanks for being with us. Mary Barra there, the General Motors Chair and CEO.
That was John Farrell, Bloomberg Television, interviewing Mary Barra, CEO of GM. Just looking at the stock, and we've talked about this before, John, it's just amazing. And if you're not an auto analyst or auto investor, you know, it's just amazing the differential here. Tesla trades at, 60 times earnings, 60. And GM and Ford, and it's trading like 5 times earnings. It's just amazing the differential.
Think about how long they have been around and what they have done, right through like gearing up for World War II instantly almost, and changing all their machining.
Yep, it's just extraordinary, and but it's always been that way. And I know when Tesla first came out, the auto analysts were so frustrated because it's like, wait a minute, this is a car company. You can't trade it this way.
No, it's a technology company, they would argue. So who knows? But the big news there with Mary Barra, GM is they're not throwing in the towel on all electric vehicles. They're just going to start with the hybrids. So I think that's kind of a concession that maybe the network for charging is not really mature in the country, not up to speed. And I know if I buy a car, I don't want to be sitting in the swamps of Jersey looking for a charge.
Yeah, that's definitely
and
not
a hybrid
the case.
would do it for me.
I mean, again, I just bought an ICE car, an internal combustion engine, and I just glanced at the EV model of what I was buying, and it was like a 40% premium. Yeah. And I'm by no means a tree hugger, so the value there is just not there. I mean, 5% more, maybe, but it's, so anyway, there's a whole bunch of issues there. So the auto industry, kind of a tough time here trying to monitor that. All right, we're going to reset here a little bit. We'll get a Bloomberg Business Flash from John Tucker. We'll reset some news, and then we'll come on back. John, what do you have for us?
All right, so stocks kind of fluctuating right now. We did get some data earlier. The Labor Department reporting the job openings nationwide rose in December to the highest in 3 months. Labor market still on fire. So this highlights a sturdy labor market, a buoyant economy. It did send yields higher. Now, as for the other risk assets, right now the S&P 500, 4 points lower. That's down about 0.1%, 49.23 on the index. The Dow Jones Industrial Average, 56 points lower. That's down 0.1%. The Nasdaq 100 right now down 43 points. That's down 0.25%. So after yesterday's record close for the S&P 500, traders in something of a holding pattern until we get earnings. Of course, the first two of the Magnificent Seven technology stocks, they're going to report after the close of regular trading today. That's Google parent Alphabet as well as Microsoft. And with some of the guests coming up, we'll be previewing that as well. And that is your Bloomberg Business Flash. Time now for news from around the world. And for that, we head to Washington and Bloomberg's Amy Morris. Hi, Amy.
Hi, John. Thanks so much. Iran is urging the Biden administration to use diplomacy. The U.S. weighing how to retaliate against a deadly attack on a military base in Jordan. 3 U.S. soldiers were killed and dozens more were wounded. And now, concerns that the U.S. could be drawn into a war in the Middle East. Secretary of State Antony Blinken called out those rebel groups.
They may say that they're doing that somehow in response to Gaza, but every action they're taking really is to perpetuate the conflict and to expand it.
Secretary of State Blinken says the U.S. will respond decisively to any aggression against American troops in the Middle East, while at the same time working to prevent broader escalation in the region. Iran denies involvement in the strike, but is bracing for some type of military retaliation. More on possible U.S. response with Bloomberg's Rosalind Matheson.
There's been a bit of an effort, it seems, by Iran to put some space between itself
and this attack on U.S. soldiers. We do know there have been back channels continuing between the U.S. and Iran throughout. Also, we know they're passing messages to each other, so at least those lines of communication remain open. But as you say, at this point, given what happened in Jordan, the U.S. will feel compelled in some way to respond.
Rosalind Matheson is Bloomberg's news director for Europe, the Middle East, and Africa. After spending more than 15 months in charge of the safeties on the nation's roads, National Highway Traffic Safety Administration acting administrator Ann Carlson stepping down. Carlson says people should take the warnings for autonomous vehicles seriously and will continue to be vigilant on the road, even with autonomous cars.
One of the big messages we want to stress over and over again is that drivers need to keep paying attention, but also that a vehicle needs to be designed in a way that doesn't lull a driver into believing that the car can take care of every situation.
During her tenure, NHTSA put an emphasis on safety with autonomous vehicles, including pushing for companies and automakers to report crashes involving automated systems and creating a database for investigators to keep track. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Paul and John.
All right, Amy Morris, thank you so much. We appreciate that. As always, John Tucker and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So you can go to youtube.com. You can search Bloomberg Radio. You can search podcasts. Anything would get you there. We're also on Apple CarPlay and Android Radio. So you got one of those new cars, John, got the big screen. It's basically your iPhone pops up on that screen, and any app you've got, boom, it's right there.
Would you please just watch the road and drive?
Exactly.
Stop looking at your screen.
Exactly. Good point there. All right, I don't know what to do with this market because we had it just rip there in the last couple of months of 2023 on that Fed pivot. We've had some pretty solid economic data so far this year. The earnings, okay. We'll see with some of the big tech companies this week. But the question is, where do we go in 2024? So let's check in with somebody who does this for a living. Nimrit Kang joins us. She is the Chief Investment Officer at North Star Asset Management, joining us via Zoom from the town of brotherly love, Philadelphia, PA. I'm a huge fan of Philly. Nimrit, thanks so much for joining us here. Again, I don't think a lot of people kind of saw that move higher in stocks, in bond prices at the end of last year. Maybe some people thought that pulled some of the performance from 2024 a little bit forward here. So as we finish out a pretty solid January here, Nimrit, what are you telling your clients for 2024?
Yeah, we tell our clients to focus on what they know with a lot of certainty. What we've seen in the last 2 years, Paul, is a round trip, right? Last year was a pretty strong year for the markets, but it was on the heels of a pretty dismal 2022. So we really did a round trip here in the last 2 years. And, when we think about broadly for our clients, we expect to be in this era of heightened uncertainty and volatility in the financial markets. We are coming to a reversal of several big trends that have been in play for a number of decades almost. The big one is the monetary cycle reversing. So in this environment, we just want our clients to remain focused on what they know with a lot of certainty, which is understanding and clearly communicating what their financial needs are going to be over the next 5-10 years, and then setting appropriate strategic asset allocation based on that.
Okay, with a monetary cycle reversing, first of all, what's your expectation for the Fed? The meeting, the two-day meeting ends tomorrow.
John, as much as I would like to kind of speculate what the Fed is going to be doing and how exactly they're going to say, we take a little bit of a longer term view, and we do think there's an upward pressure on the rates, right? I mean, we do have record deficits going on, record debt, and at the same time, our governments have to grapple with some of these big societal, ecological challenges. So there's this continued upward pressure on spending, aging demographics. If we take all of that into account, we do think that, the 10-year between the 4 or 5% range is a more normalized kind of an environment going forward. Now, within that range, it fluctuates all the time based on every single word out of the Fed about the speculation on what their next move is going to be. Just in 2023, I was looking at the data. The low point for the 10-year was a 3.3 and a high point was 5%. That's a big move for
what's usually, it's a very stable asset class, right?
Yeah, it is. It's interesting. And one of the things I was thinking about, when putting a portfolio together for 2024 is on the fixed income side, I was so surprised that the best performing fixed income category in 2023 was high yield bonds. How do you think about high yield bonds in this environment where it looks like we're going to have rates coming down?
We take a little bit of a differentiated approach. So on the credit side, we want to be in very high quality bonds, where basically there's a contractual obligation to get the money back. And we take more of the credit or company risk really on the equity side. So that's how really we think about it. On the bond side, we prefer to construct a very laddered portfolio, diversified across maturities, but really in very high quality government guaranteed debt.
And Nimmer, are you 60-40 or have you changed those allocations?
Yep. John, the allocation really depends on every client and their individual needs and their investing horizon, right? So we do think that equities have a very strong role in the portfolio as long-term capital appreciation. We do think fixed income here is providing a pretty nice yield income here for a lot of people who are looking for that part as well. But the actual allocation depends on where the clients are in their journey.
So, my friend here, John Tucker, he started 2023 long and overweight, the Magnificent Seven. He's just doing this radio thing because he loves it. The rest of us have to work on our portfolio in 2024. Do I chase those big tech names? And again, we're going to see a lot of them start reporting earnings tonight. Do I chase them, or do I just say, missed that boat? Let me go look at maybe a sector that's not participated?
Paul, our approach is to really identify these long-term companies that are solving some of the secular problems and stay invested in them, take opportunities like the market volatility to really size the position appropriately. So, you talked about the Magnificent Seven, not all seven of them, but, for a very long time, we have held on to some of the holdings in there from the technology because we saw them playing a very vital role in solving some of the problems, mainly related to empowering small businesses, communities, entrepreneurs all over the world. Now, when we think about, the sectors that have run up, yes, technology has far outperformed. On a 2-year basis, though, believe it or not, Magnificent Seven, just on a 2-year basis, is up only 14%. So not as ridiculous as it seems just based on 2023 data. But that said, we do think there are plenty of opportunities elsewhere in other areas as well to continue to tilt the portfolio towards those types of compounders as well.
I want to get to some, can you do individual names?
Yeah, absolutely. So one of the, area that we think there's a long-term secular problem is related to water. There's a huge issue around scarcity of water resources, but even just in the US, our water infrastructure was built in the 1950s and 60s. So there's a huge need to upgrade this water infrastructure to make sure that we're getting the safe quality drinking water that is so essential. Just EP estimates there's $700 billion of investments needed over the next 20 years. So when we have thought about that, we have tried to get exposure to a number of companies that play a very important role across the water infrastructure value chain. So specific names like Xylem. Xylem is very prominent in valves, meters, things like that.
What's the ticker symbol?
XYL.
XYL. Yep. And it's, Xylem especially has a big market position, leading market position in wastewater treatment. Again, a big area of long-term growth and where we think there's major societal problems that need to be solved. Another name, a small cap, only $700 million in revenues, is Badger Meters. They make your utility meters. There's a big upgrade cycle going on from upgrading that manual meter that needed to be read to more of those smart meters, which can be read remotely. So that's another small cap company, long-term tailwinds. The company just reported excellent 2023 numbers, double-digit revenue earnings. Going forward, we don't expect them to have that kind of a growth, but high single-digit through the cycle is a pretty reasonable expectation. And the last one I'll leave you with is Veralto. VLTO is the ticker symbol. It's a spin-off from Danaher, very high-quality company. 60% comes from water quality type of businesses. They analyze the water quality coming out of our streams, rivers, but also have treatment solutions such as UV filtration, some of the other treatment solutions as well. So again, these are the companies that haven't kind of had the rip-roaring returns we have seen from some of the household names, but long-term, very important demand for their products and solutions.
Not the sexiest names in the world, Paul.
No, but those work. I mean, so when you identify a theme like water, for example, Nimrod, do you and your team, do you screen across the sector for valuation, sales growth? How do you then identify individual names once you've identified a theme?
Exactly. So one of our themes in our portfolio is just related to ecological limits, right? We've had years and decades of extractive growth, and we think that, our natural resources are scarcer, and we're going to have to learn to cope with these problems. Water falls under that. We identified that a long time back. And knowing that, then we're looking for high quality compounders within that are solving for that, solving that particular problem. And when we talk about high quality compounders, Paul, it's your traditional companies that have strong balance sheets, revenue growth, free cash flow margins, good deployment of capital, good management track record, all of that same kind of criteria there. On valuation, we take a longer 5 to 10 year view, and we use cash flow based valuation to understand what is the true valuation based on the earnings potential of a company like that.
Hey, what's the number one thing on the minds of your clients?
When we talk to clients, again, it's different, but it's really around understanding that, yes, we just live in this era of a lot of uncertainty, heightened volatility. Last year, this whole thing around AI really magnified and gave a really new leash to life for these magnificent 7 names. But longer term, people just want, our investors, our clients are concerned about making sure that they have their financial assets can help them meet their financial needs and goals, right?
Yep.
And taking a balanced approach and a very risk-aware approach towards constructing those portfolios for them.
All right, that's how the pros do it. Nimrod Kang, thank you so much. We appreciate it. As always, Nimrod Kang, Chief Investment Officer, North Star Asset Management, located in Philadelphia, PA. I asked Eric Altunis, who's a Philly guy, what's his favorite cheesesteak he's go to. He said Jim's. So that's a local. Yeah, Jim's. You got Geno's, you got Pat's. He's a Jim's guy. So, I mean, you can't go wrong anywhere you go there, I think. So, I should do a lot of time down in Philly. Good place. We'll be back in just moments. This is Bloomberg.
your company news headlines on Bloomberg Radio.
And I'm John Tucker, right here with Paul with company news. Walmart, of course, they're the biggest retailer in the world. They're testing digital labels, so these light up when activated with an app. So when you start working there as a greeter, you'll have to know this. The device is already used by employees at a few dozen stores where they flash green to help the shelf stockers and blue to assist, I don't know what blue is, to assist product pickers fulfilling online orders. Walmart planning a pilot for customers later this year. These lights are possible after a years-long effort behind the scenes in which Walmart's been automating the warehouses that supply stores and online merchandise. So the goal is to improve profitability as well as productivity, and maybe get rid of people like you, the greeters.
Exactly.
The first human patient, of course, to receive a brain implant from Elon Musk's startup Neuralink, recovering well, and the initial results of the procedure, at least according to the company, are promising. On X, Elon Musk wrote that Neuralink's first product will be called telepathy. It'll enable control of your phone or computer and through almost any device just by thinking. So it's really primarily aimed, at least in the initial stage, to people who are handicapped paraplegics. Is that hamburger you're eating tied to a former southern slave plantation that's now the country's largest maximum security prison? The Associated Press followed unmarked trucks packed with prison-raised cattle rolling out of the Louisiana State Penitentiary, where men are sentenced to hard labor and forced to work. But turns out they are supplying a Texas slaughterhouse that feeds into the supply chains of giants like McDonald's, Walmart, as well as Cardinal. The AP says prison labor is tied to hundreds of millions of dollars worth of products. And that is your company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, looking at these markets right here, a little bit of red on the screen here as we wait for some of the big tech earnings after the close from Google and others. S&P off about 0.1%, same for the Dow, the NASDAQ off about 0.5%. The Russell off about 0.9%. Yields a little bit higher here. We have the 10-year Treasury up about 2 basis points, 4.09%. WTI crude oil, it's up 1%, $77.55. Continued concern for the supply of Middle Eastern oil. Bitcoin up 0.5%, 43,400 on the cryptocurrency. Right now, let's head down to Washington, D.C. World and National News with Amy Mars.
All right, thank you, Paul. A push to impeach Homeland Security Secretary Alejandro Mayorkas is gathering steam with House Republicans. The House Homeland Security Committee is meeting at this hour to debate those 2 impeachment articles against the secretary. Bloomberg's Jody Schneider with the very latest.
They're going to advance articles of impeachment either today or tomorrow, which will cap off this year-long campaign against the secretary. Sets up a historic floor vote. He would be the first cabinet official impeached in almost 150 years if this happens.
Now, the House Speaker says that they intend to move ahead with that impeachment vote with a full House vote as soon as possible. Bloomberg's Jody Schneider reporting there. She says Republicans accuse Mayorkas of breaching the public trust by failing to enforce immigration laws. Neuralink is a tech company owned by Elon Musk, and they've announced they've implanted a brain chip into a human for the first time, representing what experts hope is a major step into connecting the human brain to computers. This is only the first test. Dr. Lee Kroll, a neurologist and assistant professor at Temple University, says these early results are promising for the field.
This would be a major game changer if they were to be proven to be safe and effective.
If deemed successful for widespread use, experts hope that paralysis patients and others suffering from traumatic brain injury could use a computer to speak using this chip. The International Monetary Fund raised its forecast for global growth this year on better than expected expansion in the U.S. and fiscal stimulus in China, warning of risks from wars and inflation. The IMF's World Economic Outlook predicts the world economy will grow 3.1% this year. That is up from 2.9% in October. The fund kept its 2025 forecast unchanged at 3.2%. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Paul and John.
All right, Amy Morris, thank you so much. We appreciate it. John, here's a story for you because I know you're a big car guy. Lamborghini sees full order books as super rich. Keep shopping. I have to ask you about that. CEO says no signs of weakness in market for supercars. Italian company introduced its first plug-in hybrid last year. So Lamborghini has sold out of supercars until 2026 as the wealthiest consumers show little sign of being hit by a broader global slowdown.
The one thing that's missing in this story, and I don't mean to be critical.
It's a quote from Matt Miller, I think.
Well, a quote from Matt Miller, his take on it, but how much these things cost.
Weren't they like $200,000, $300,000, $400,000?
I think that's just like for the option package.
Oh.
So, but anyway, so it looks like they're facing the same sort of dilemma as we heard from Mary Barra, that they're going kind of like in the hybrid direction instead of fully electric vehicles.
Right.
While they're still exploring that, they're going to wait for others to take the lead on that, and then they're going to try to perfect it when the market for electric vehicles, fully electric, becomes more mature.
You know, I'm not a supercar guy like a Matt Miller, like a Barry Ritholtz, like a couple of my sons, but I would think, having been around them enough to know, part of the value is the sound of the engine.
Yeah.
Like a large part of it. Yeah, the looks, the performance, all that kind of stuff. But if to hear those engines roar, that's part of what you're paying for. And if all I get is a little electric hum, that's not going to cut it.
That's not going to do it for you.
No, and so if I'm Ferrari or Lamborghini,
pipe it in with like, I don't know, it's just like, recorded sound of an engine.
Yeah, I mean, I just don't see how it's going to go in that part of the market. But it's interesting, and I guess it's no surprise. But at the very, very high end, they are still buying with the vengeance, and supercars are just another example. So they see you have to wait till 2026 is the wait list for a Lamborghini. Fortunately, I'm not in the market for a Lamborghini, so no worries there. John Tucker, I don't know. Be patient.
I got my Subaru. It's going
Subaru. This is good.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, this radio program from 10 a.m. to 12 noon every day is entitled Bloomberg Intelligence. We like to lean on some of the research analysts we have around the world, almost 400 research analysts covering 1,200 companies, 200 industries, and we're going to do that. We're going to lean on them this hour. Bloomberg Intelligence senior transportation analyst Lee Klaskow is going to join us to talk to us about UPS. Cutting 12,000 jobs, making everybody come back to work 5 days a week. What's going on in the world of global logistics? Then Tim Craighead, he is Bloomberg Intelligence European equity strategist. He's based in London. We've got him in New York this week, so we're going to have him in studio here to give us an outlook for UK and European equities. And then we'll finish out the hour with Mandeep Singh, Bloomberg Intelligence senior tech analyst. We're going to look ahead to some of those tech earnings after the close today and the rest of the week. Tech's been a bellwether for this group for a long time. Can it continue its leadership position? Check in with Mandeep on that. Right now, let's go to John Tucker for a Bloomberg Business Flash.
All right, as far as the risk assets go right now, I'm going to say the traders are in something of a holding pattern until we start with more of the earnings from the tech companies in particular. Right to yields, the 2-year, which is more policy reactive, that's 5 basis points higher right now at 436. And of course, this comes after the data that we got at 10 o'clock showing resilience in the U.S. labor market, job openings. This is the JOLT survey. Unexpectedly rising in December to the highest level in 3 months. Fewer Americans quit their jobs, so workers are growing more cautious just a bit, even as labor demand, that does remain strong in the U.S. And of course, the first of the so-called Magnificent Seven stocks, the mega caps, report earnings today. That's going to be a major test of whether the rally in stocks at this point is sustainable after yesterday's record close. The S&P 500 down just 6 points. But stocks can continue to push higher, at least according to Brian Levitt at Invesco.
I want to be exposed to equities in an environment after the peak in inflation, after the end of tightening, after the peak in interest rates. It's not to say that every day or every week is going to be glorious or I'm going to be missing out every day or every week, but we're in an environment where over the next few years markets should perform well.
Right now, again, the S&P 500 5 points lower, down just 0.1%, 49.23, and the Dow Jones Industrial Average 24 points lower at 33,308. The Nasdaq 100 right now 63 points lower. That's down 0.4%. We'll check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash Call.
All right, John Tucker, thank you so much. We appreciate that. We are live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube, so you can head over to youtube.com, search Bloomberg Radio, or search Bloomberg Podcast, all that kind of stuff will get you to where you need to go. We're also in your dashboard, Apple CarPlay, Android Radio. What is it? Android Radio.
Do Lamborghinis have this?
I don't know. They should for what they're charging. We'll have to ask Matt Miller, because I'm sure he's doing around Lamborghini. So anyway, you can find us pretty much everywhere you need to go. As John was just reporting a little bit of red on the screen here, let's check in with Nora Melinda. She covers all the markets for Bloomberg News, and she joins us here in our New York City studio. Nora, what are you looking at?
Well, let's kick it off with that UPS news. Just insane. UPS is planning to cut 12,000 management jobs and explore the sale of its Coyote truck brokerage business. This all comes after the CEO is saying that, it's taking offset soft demand and higher union labor costs. So we are seeing a lot of a bit of a sell-off here. We have UPS shares down as much as 8.5%. I know we'll be hearing from Lee from BI very shortly, but this is really the lowest level that we've seen since November of last year and the biggest one-day drop since April of last year.
But the emphasis is that it's going to be management jobs, not the delivery folks you see
Right,
on the street
that seems to be the consensus. As you all mentioned earlier, they are pushing them to be in the office 5 days a week.
That's what we're talking about.
That's what everyone has in focus.
Like,
as if we're not doing it.
People? You can't work from home if you're a UPS delivery
But I mean, I guess it's management roles. So are they actually, so we have to think about that. But the job reductions actually accounts for about 14% of 85,000 full and part-time managers. This will account for hopefully saving the company $1 billion this year and hopefully more in years to come.
Yeah, we got your package. It's at my house. It's on the port. You want to come to my house and pick up your package?
Exactly. That's how they roll.
That's how we're moving.
All right, Whirlpool.
Yes, looking at Whirlpool, it's currently down about 6.7% today, but it did project that 2024 sales will be weaker than Wall Street expectations. This all comes after the idea that consumers are maybe foregoing appliance upgrades. I don't know what you all have at your houses and if you're really interested in upgrading right now, but a lot of people are really sticking with what they have, is what it seems to be. And this outlook is really renewing concerns about the U.S. consumer and just the resilience that we're seeing in the U.S.
Well, can you even get? I remember during the pandemic, like if you wanted to get a new refrigerator, forget it. If you want to get a new couch, forget it.
Everything backlogged.
Everything backlogged. I wonder if that's normalized.
I mean, I think that we are seeing. We're really just seeing consumers kind of deciding whether or not they actually want to get these upgrades. That doesn't necessarily mean that there isn't expectation for that to be possible, but I think people are really just thinking about how much money that they really have and whether or not they're willing to pour that into an upgrade instead of just sticking with what they have.
I will just opine to jump in here that the most poorly engineered product on the planet Earth happens to be refrigerators. That's across all brands because they all eventually leak. Now think about it. Having a door that has the refrigerator and the ice cubes coming out of that, it's impossible. It's just like physics doesn't allow that to happen without a leak eventually.
I don't care to think about it, but I'll go with your thing. All I know is when we bought the sprawling Jersey Shore estate just this past year, totally renovated kitchen, you open up the freezer, no ice maker.
Okay, well that's what you want. No, I've been told don't get an ice maker and certainly don't get the thing in the door where you can get the cubes in the door.
Right.
And buy a separate unit that just makes ice, put it on the counter.
But what's really interesting here is as we think about the home sale market and we're thinking about existing home sales, since they are at a multi-decade low, that's where they were seeing a lot of those sales. You're seeing it in people who are, as you all say, the used homes.
Yep.
Isn't that what we say? Used.
Yeah.
So we're not really seeing people really interested.
All right, what else you got?
I want to wrap up with Pulte Group.
Yep.
This is a home builder. As you all know, I cover the real estate space, so near and dear to my heart. But we're looking at Pulte Group shares rising as much as 4.4%. This is really the highest intraday level on record for the company, and this is all coming after it saw a 57% increase in orders year over year. And as we know, for home builders, what analysts are really looking for are orders. We're looking at gross margin. That's really what's of interest here. We are seeing a bit of weakness in the margin area, especially as we think about incentives, and we're seeing these rate buy downs. Analysts are really looking this year into 2024 to see whether or not these home builders are really able to sustain themselves without having to do these rate buy downs or offer more incentives.
My big question with all the home builders, where are they finding land on which to construct these new homes?
I know.
I mean, that's got to be their biggest challenge, right?
Well, I know in certain parts of the country, but they're building where, they're not building in like New Jersey.
Right, it really depends on which region that you're looking at.
We have no more land left in New Jersey.
No, thank you. We've got enough. Everybody can leave.
It's all taken.
Yeah, it's all taken. All right, Norma Linda, thanks so much for joining us today. Norma Linda covers all the markets for us. All right, UPS had some, just some disappointments, as Nora was just reporting, laying off some people. Ben Elgin, Bloomberg News, has got a great story out today. FedEx, UPS struggle on EV transition as delivery demand grows. Costly electric trucks and charging complications are hampering progress. I didn't even think about that. Like, they got to go electric too, and if they can't get the trucks and all that kind of stuff, how are they going to get that package to me in 15 minutes?
They're going electric because it's good for the environment, or they're trying to save money?
Let's check in with somebody who actually, we pay this guy to think about this stuff. Lee Klaskow, Senior Transport, Logistics, and Shipping Analyst, one of the best on the street. We got him at Bloomberg Intelligence. He's down from our Princeton Bureau. Hey, Lee, first let's just start with the news at UPS. I love UPS. I love the brown trucks. They deliver this stuff great. What's going on? The stock hasn't done much in a while, and I know they've got some union issues which they resolved earlier, and now they're laying off some people and forcing everybody to come back to work. What's happening at our good friends at UPS?
Yeah, I mean, they're really just reeling from the impact from the labor negotiations they had last year. So running up ahead of those negotiations, a lot of shippers were like, something, I'm not going to use UPS because I might want to use one of their competitors like FedEx or even the Postal Service because I don't know if my stuff is going to be able to get where it needs to go on time. So a lot of that diverted freight, is kind of deleveraging effect on the network, which really weighs on margins. And then, they had the negotiations. They have a contract in place, which is fantastic for UPS and also for the Teamsters. But a lot of the initial costs of that new contract are in year one, and so that's like a real big hit to margins. That coupled with the fact it's taking some time for them to win back some of that share. On today's earnings call, management noted that they've won back about 60% of that share. So it's going to take time for them to get that share back to where it needs to be. And again, these are networks, and when you're talking about freight transportation, it's all about building density. Because the more stuff you can deliver at the same time, the better the margins are, and that's what they're really working on right now. What I thought was kind of one of the more interesting little tidbits of the call this morning is that they think that this year that the small package volume from an industry standpoint is only going to increase like 1%. Which to me I thought was a little pessimistic. But all in all, they're really dealing with tepid demand. They're dealing with rising costs, and they're obviously taking those costs pretty seriously. As you mentioned earlier, they're laying off or planning to lay off or reduce heads, however nicely you want to say it, 12,000 people, and then also they're looking to get. They're putting their brokerage business, which is called Coyote, under a strategic review. Coyote is the third largest freight broker out there. So one of the largest publicly traded ones are C.H. Robinson. People might not know that, may know that name. Also, RXO is another pure play brokerage, is Landstar. There's a couple private ones. A lot of large companies like J.B. Hunt have their own brokerage business in-house.
Sorry for a series of stupid questions, but this is who you're talking to. What is a freight? What's their role, and what do they do? A freight brokerage?
So they're pretty much get together buyers and sellers of freight. So if you think about it, so if you're a shipper and you have a load that you need to get from point A to point B, you might use a broker to find a truck to carry that load. And the broker kind of makes a spread in between what they're charging the shipper and what they're paying the trucking company. What's happened is, it's a very cyclical business. There's great highs and kind of depressing lows, and margins can be very volatile during the cycle.
So this just to back up, this brokerage that they own that they're now getting rid of, you could have gone to them and they could have picked a shipper other than the company that owns them, UPS.
Yeah, so UPS could potentially use its own in-house brokerage to move a trailer load of freight between two of their sorting facilities. Or if you're Walmart and you have an extra load that you need to get from your DC to your Spring Lake Walmart. I don't think there's a Spring Walmart in Spring Lake. You might use them because either the carriers that you're contracted with don't have the capacity, or you're trying to take advantage of cheap rates in the spot market. And right now, truckload rates are extremely cheap. They've been bouncing along the bottom for quite some time. And so shippers might like to leverage that. Intermodal is an example. So, the intermodal space, which is railroads, that's when you see like two containers on top of a railroad. They're facing increased competition because of the loose conditions that are in the spot market. And a lot of those shippers might use brokerage to try to find try to find a carrier to carry their load.
I think in there it sounded like you just said there was a freight recession, or at least implied it.
Well, there has been for about 2 years now.
I mean, how severe is it right
now? The way we look at it, we're probably a little optimistic about 2024, kind of a glass half full, and it's filled with a really good Cabernet. So I'd say we're probably more optimistic than most. We've been saying that we didn't feel that the economy necessarily had to go into a regular recession, and just because you go into a freight recession doesn't mean it's going to lead into a regular recession. The freight recession is really driven by a number of things. First and foremost is they had really difficult comps during the pandemic. You were talking about trying to get a refrigerator. Everything was just gummed up during the pandemic, and so capacity was in high demand. And the problem with getting capacity was that there weren't enough workers to either be in the trucks or be on the railroads or be in the air freight area. So there was a real issue there, and so we just saw like a backup in demand, and then all of a sudden that demand got fulfilled. The supply chain started loosening up. Here we are today. You have moderating economic demand. You have an ISM in negative territory, so the manufacturing economy is not great. You have some difficult comparisons. So when we look at railroads, for example, not to be all over the place, but when you look at railroads, last year was a fantastic year for Canadian grain. This year is going to be a normalized crop, so that's a decline in volumes that the railroads are going to have to deal with. Railroads are Canadian Pacific and Canadian National. Automotive is expected to be strong this year, continued for the railroads, but coal is probably going to be weak because the export markets are probably going to start to cool, and they have some really serious difficult comparison. And intermodal is really a crapshoot. We're pretty optimistic about the domestic demand, which is more truckload competitive, just because the rails have gotten a lot better at improving their overall service. So we started talking about UPS, and somehow
now we've got all across logistics. See, that's because Lee covers the railroads, he covers the trucking companies, he covers the logistics companies, he covers the shipping companies, the big ships on the seas, and he covers it all. So we just call him basically logistics analysts. I mean, you got to get a box from point A to point B, and you want to know how to do it, talk to Lee Klaskow. That's it.
Logistics Lee.
Logistics Lead. There you go. Very good.
With ships, the Baltic shipping rate, or whatever it's called, why it's called Baltic?
Yeah.
Because the Baltic Cafe in London is where all the shippers would get together, and they'd set the rate around coffee or booze or whatever.
Boy, more.
The Baltic Cafe.
There you go. All right, Lee Klaskow, we'll let you go. Get back to work. Lee Klaskow, he's a senior transport analyst and for Bloomberg Intelligence and our Princeton Bureau. I mean, I guess doing decades of newscasts, you learn a thing or two.
Yeah, well, no, it's...
Or you just...
you read a lot of books because you got no life. Watch a lot of YouTube. Especially Bloomberg.
And this is what it brings you. All right, very good. All right, John. S&P 500.
Somebody's going to have to fact check me. I'm pretty sure that's right.
That's it. No one's going to fact check you in this audience. S&P down 0.1%. The Dow absolutely unched on the day. The Nasdaq off about 0.4%. Coming up, we're going to check in with Tim Craighead. He runs European research for Bloomberg Intelligence, and his day job is a strategist. Talking to clients about which European stocks to buy. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Right now, it would appear that traders pretty much on the sidelines until we get some of the other earnings today. Of course, after the close of regular trading in New York, we're going to hear from two of the Magnificent Seven. That would be Alphabet and Microsoft. And we're going to take a deeper dive into that with some of the BI guests later today. S&P 500 right now 3 points lower. That's down about 0.1%, 49.24 on the index. The Dow just turning higher, up 8 points, and breaking that down for you, because I'm curious, the leader right now in the Dow Jones Industrial Average, Visa, JP Morgan Chase, and the biggest drag there in the index that belongs to Boeing. In the S&P 500, You have 4 of the 11 major industry groups. They are higher, being led by financials. The biggest drag that's coming from real estate. The NASDAQ 100 right now, 65 points lower. That's down 0.4%. And again, the S&P 500 is lower, down just 3 points after yesterday's record close. As far as treasuries go, the yields on the benchmark 10-year note right now, that is unchanged, 4.08%. The 2-year, which is more policy reactive, that's 5 basis points higher right now at 4.36 after some of the data we got. Job openings rising to the 3-month high. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. I didn't even write that one.
Just winging it.
Off the top of my head.
Just coming to you live. That's some of the best stuff. I never write stuff out. Now, Carol Miller's a big note taker. She's really super prepared. I admire that in her. She does like notes of notes.
She actually is prepared,
yes,
which is like, I think, what we're supposed to be doing.
I think she does it. She does it the right way, no question about it. John Tucker, all right, stick around here. You're not going anywhere. We got another 37 minutes here. Paul Sweeney, John Tucker here. We're in the Bloomberg Interactive Broker Studio. We're also streaming on YouTube, so head over to that internet thing and type in youtube.com and search Bloomberg Radio, and that's where we are. Let's talk UK stocks. Let's talk European stocks. We don't do that as much here, but we can do it today because Tim Craighead is here. And Tim Craighead is a European equity strategist for Bloomberg Intelligence. He joins us live here in the Bloomberg Interactive Broker Studio. That's important because he's based in London at the awesome Bloomberg European headquarters.
I have never been.
We got to get you. It is super. Yeah, it is just awesome. I mean, and what I like about it, it's just a phenomenal building in the city of London, right by the Bank of England. But when Brexit happened, Mike was over there with the mayor of London saying, no, we're doubling down on London, which I thought was very cool because up until Brexit, a credible argument can be made that London was the world's financial capital vis-a-vis New York. A credible argument after a couple of pints at the local pub, and you can make that argument. Now you can't.
All right, remind me before he leaves, I'm going to ask him about congestion pricing.
Okay, very good. All right, Tim Craighead joins us. Hey, Tim, just give us a sense here. Let's start with the UK here. How did the UK trade last year? How did that market perform, and what's the expectation for this year?
So the UK did the same thing last year that it did in 2022, interestingly enough, which is a big fat nothing. And if you think back in 2022, that was
good.
A stellar performance. It was a hero. 23, not so much, especially with the rally at the end of the year. So far this year, pretty much, again, it's sort of status quo. And our view is that's kind of where we're stuck. It's a funny thing. The UK market has this very odd composition where you've got this big basic material commodity base. You've got metals and you've got oil. You've got a big defensive brand base of companies like Unilever and Diageo, whiskeys, and healthcare, pharma, with GlaxoSmithKline, AstraZeneca. And then you've got a big dose of financials, the big banks like HSBC. Those three, you always end up with a driver that's good for one, but bad for the others, or vice versa. And quite often, they just sort of mix each other.
Because you don't have that technology thing, which is actually the leader of the U.S. market.
The entire TMT group, so you take the internet and tech and the good media, e-commerce, look at Google, about 1% of the UK market.
What was the best performing stock, individual stock?
Rolls-Royce, if memory serves correct, which is...
This is the engine maker, not the car thing.
The engine maker that feeds into the rebound in commercial aerospace and defense.
The cool thing about Rolls-Royce is like each of their engines has had a name. Like well, going back to like World War II.
Okay. The Merlin.
The Merlin, probably the most
P-51.
famous engine there ever was. They stuck that in, the Spitfire, I digress, and then the P-51D Mustang, and made it the greatest plane in the world.
Yeah, absolutely. Still my favorite fighter plane, the P-51. Well, the Spitfire's right there. F-14 is number 3. All right, Tim. I actually think about this stupid stuff. We digress and digress more. How about Europe here? A little bit broader kind of markets in terms of the weightings here. How are your clients looking at the European market?
So the European market is reasonably well positioned from the standpoint of a diverse sector base. It still doesn't have the technology opportunity set that SAP, AM. You've got basically 4 big tech companies there. If you think about it, 5. One is SAP. We all know that, and it's doing fine. Look at its earnings and its stock price years of late. It's been a really good call. That's one. ASML, which is chip manufacturing equipment. Absolutely a must when it comes to making things for, say, NVIDIA with their chipset. You have to have ASML as equipment. And then you've got semiconductor companies like Infineon and STMicro. And they feed into more energy transition, autos, industrial applications, things along those lines.
But wait, tech in Europe, I want to lose weight. Right? Isn't that where those weight loss drugs come from, or initially?
So that's Novo Nordisk, and obviously Lilly is coming up as a big second here. But the pharma industry, pharma's business is a big business from a European perspective, no doubt. You've got really big consumer franchise. You've got luxury goods, and one of the bigger businesses over there that is different from here is the big high-end luxury auto companies, which are a big play on China. Another difference with Europe versus the U.S. is China is really important over there. I mean,
big buyers of the big German industrial equipment and things like that.
And it's pervasive. The UK has a ton. It's actually the most exposed because you've got companies like Rio Tinto and Glencore and the big metals and mining that feeds in. But you've also got the autos. You've also got the industrials. You've got the luxury goods, and all of that adds to roughly a 450 billion euro revenue business from Europe selling to China. What happens in China matters a lot for Europe, which is a different story than what you have here from a U.S. perspective. You add all that together, Europe is okay. It's a lot cheaper from a multiple perspective than the U.S., but the earnings growth expectations for this year and next year are not as robust as they are here in the U.S., and it holds it back.
Do I have to worry about things if I'm a U.S. investor looking to invest in Europe? Do I have to worry about things like the currency translations,
well,
et cetera?
You do, and it's kind of typical with currency as a double-edged sword. I think the conventional wisdom this year is if the Fed cuts early and first, then you've got a weak dollar scenario to be told. Now, if you're a U.S. person and you're buying European markets, let's say all else being equal, that's going to be good for you because you're going to be carrying, Europe over to here, which is a stronger currency. It actually ends up being negative for the European companies themselves from an earnings translation basis, but it's a different argument.
All right, Tim, you've lived in London a long time. You live just outside of London, so we'll get to congestion pricing. The economy here in the U.S. is good. We had a great GDP print. Inflation's coming down. How's the economy in the U.K.?
Yeah, actually, it feels a lot better than necessarily what the headlines might suggest. I think there are signs that housing prices are possibly stabilizing, certainly like everywhere else. If you end up seeing interest rates coming down, and the expectations are for the Bank of England, as well as the European Central Bank to be cutting, then that could be a good thing as well. But big election cycle this year from a UK perspective. It's going to cause a lot of noise, just like it is here in the US. On the ground, you're traveling, you're looking around, you're going places.
Which you do.
It feels plenty busy.
All right, go to your congestion pricing, because he might not be the right guy.
And everybody should care about this. London did it first, where cars coming into the central part of the city to reduce congestion are charged a fortune. New York City is trying to do that. But all sorts of... are you a fan, or like...
Whether you like what I'm going to say or not, I guess we'll see. I am a fan. I think it is a good thing from
You're
the
never coming
standpoint.
back.
But he rides his bike to work.
Yeah, I cycle.
And not like a mile. He rides like a long way in all kinds of weather.
But it is a case where between congestion pricing, and they are expanding that congestion zone, as well as increasing things like cycle lanes and other elements of public transport, it is an easier place to get around unless you want to drive.
I don't have a choice, though.
See, we're going to get
Well,
John,
I'm going to take my bicycle at 2 o'clock in the morning from New Jersey.
come through the Lincoln Tunnel. That's what
but you don't have to worry about
No,
it.
we're gonna work with somebody we know and get so John can expense his congestion pricing. I think I know somebody who can help out with that. Tim Craighead, thanks so much for joining us. Tim Craighead, European equity strategist. Oh, by the way, he's also the director of research over there in Europe, so doing lots of stuff. Right now, let's head down to Washington, D.C., World and National News with Amy Mars.
Thank you, Paul. President Biden says he holds Iran responsible on the deadly drone attack on U.S. troops in Jordan, saying that Iran is supplying the weapons and that he has decided how to respond. He did not reveal his plans. Now a warning from the U.S. to those tempted to attack troops in the Middle East. Secretary of State Antony Blinken.
We will respond decisively to any aggression. And we will hold responsible the people who attacked our troops.
Blinken said the U.S. response would be multi-level and sustained over time. He says the administration is working to prevent broader escalation in the region. Donald Trump and Nikki Haley are planning dueling fundraisers in South Carolina next month ahead of the state's GOP primary. They're catering to two very different audiences, as we hear from Bloomberg's Jody Schneider in Washington.
For former President Trump's fundraiser on February 20th, our top Republicans in South Carolina, the governor, Senators Lindsey Graham and Tim Scott. Haley's list is largely pulled from the business community, and this is the state in which she was governor for 2 terms.
Bloomberg's Jody Schneider reports Haley has raised $5.5 million since Ron DeSantis left the race this month. A source says she has several more South Carolina fundraisers planned before primary day, February 24th. A massacre in a remote area of the Mojave Desert apparently stemmed from a dispute about marijuana. San Bernardino County Sheriff Shannon Dykes describes the area where 6 people were murdered.
In the last year, our marijuana enforcement team served 11 search warrants in the immediate area where the murders took place. And they served approximately 40 search warrants to the west of that area that we call the Shadow Mountain area. So this is an area known for illicit marijuana.
5 suspects were arrested in connection with that shooting. Authorities have not said if the killings were cartel related. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. Major averages right now unchanged to mixed. The Dow Jones Industrial Average at 32 points higher. That's up about 0.1% right now. 38,366 on the index. S&P 500, that is dead flat right now at 49.27. The NASDAQ 100, 61 points lower. That is down 0.4%. In the S&P 500, you have 1, 2, 3, 5 of the 11 major industry groups. They are higher right now in the green, being led by financials, and the biggest drag in the S&P 500 as far as the industry groups go, that belongs to real estate. Schlumberger, that's one of the individual laggards in the S&P 500. That is down about 8.3%. The biggest drag in terms of index points there. And at Macro Policy Perspectives, Constance Hunter reminds everybody, there's a Fed meeting this week. She says, pay close attention.
And I don't think that it's going to be a snoozer. And what we expect him to do is to lay the ground for why a March rate cut makes sense, right? We have PCE on a 6-month annualized basis already at their target, core PCE already at their target on a 6-month annualized basis.
And, of course, turning to the market, stocks entering the day, coming off another record high from yesterday. Earnings focused today. 30 companies overall in the S&P 500 reporting. And after the close of regular trading, the first 2 of the Magnificent 7 will be opening their books. And, of course, we're going to preview that in just a moment. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Business Flash. Paul.
John Tucker, lucky for you that Mandeep Singh just darkened the door, because otherwise I was going to interview you for the next 7 minutes.
We could keep this thing going for another 20 minutes, talking about refrigerators and Lamborghinis.
Exactly. Thankfully for all of us, Mandeep Singh joins us here. Mandeep is a senior tech analyst for Bloomberg Intelligence. Mandeep, I look at these stocks, and they've always been great performers, and you could always say the bar is high. Boy, the bar is high this time, I kind of feel like. Just seeing about the performance of these stocks, particularly in the last half of the last year, continuing into this year, they've reasserted, the tech stocks have really reasserted their leadership in this market and pushing some valuation boundaries, I would think. So we've got, who do we have tonight? We got Microsoft, we got Google. Let's start with Microsoft. What's kind of the key thing here you're looking for?
With Microsoft, they're the only ones who have actually quantified the Gen AI tailwind. So they said for the Azure business, Gen AI was like a 2 to 3 percentage point tailwind last quarter.
Really? Okay,
yeah.
So that's material.
And then they launched Copilot, so we know they're trying to sell Copilot subscriptions to Office 365.
What is Copilot?
So this is like an add-on to your Office suite where you can use this Gen AI chatbot that sits on the side and asks questions in terms of just facilitating whatever you're doing in your Word or your PowerPoint or your Excel.
You have to talk to me like I'm your golden retriever. Will you explain to me exactly what happens at the intersection of the cloud, or in this case, what do they call it, Azure, and artificial generative AI, or whatever it is?
Yeah, look.
How do you make money and all that stuff?
Yeah, so that's where, this is a pretty expensive subscription. It's a $20 add-on to whatever you are already paying for the Office suite. And so as a consumer or an enterprise subscription, you are paying on top of what you are paying for Office 365. And for a company that's running their workload on Microsoft Azure, so there are 2 sides of it. One is the application side, which is the Office 365. The other is the infrastructure side of it. That's where if you want to kind of design your own AI agent for your website, you run that workload on Azure and you pay Microsoft for running that workload. Instead of having to design everything from scratch, you're using OpenAI, GPT, and Microsoft Azure, which is all customized for you to deploy your AI.
They're the only ones who figured this out?
They were the early ones to do that, and that's where Amazon and Google are struggling, because they will give you the cloud compute, but they don't have that OpenAI integration that Microsoft did 6 months back or 12 months back, and so that's what's their routine about.
So 6 months doesn't sound, or a year doesn't sound like that much of a head start. What can I expect from Google and Amazon in terms of applications?
Yeah, so last quarter, both Amazon and Google said they saw some sequential deceleration in cloud growth. And because companies were optimizing their spend, they were cutting back on IT expenses. Well, if Gen AI is that tailwind that everyone wants to participate in, then they shouldn't be cutting their cloud spend at this point of time. And that's where you're going to figure out real winners and losers. Azure clearly is a winner from that Gen AI workloads moving to their cloud. It remains to be seen, is it coming at the expense of Amazon? Or Google is still a distant third in the cloud market. Remember, Google is like, in terms of the revenue run rate, Google's cloud is like a $30 billion run rate, Amazon is $92 billion, and Azure is $65 billion. So that's where Google should be losing share.
Got to bring numbers.
Well, is this town big enough for 2 gunslingers or 3 or just 1?
I mean, I think it makes sense that there should be more than 2 players, and Gen AI has created that additional tailwind. So I wouldn't be surprised if NVIDIA or somebody else decides to really go big in terms of the cloud infrastructure opportunity, because that AI and cloud go hand in hand when it comes to, you know, how you go about deploying generative AI.
All right, so we've got Google after the close as well. Talk to us about, we'll get to their advertising business, but how does Gen AI, ChatGPT, that technology impact my, you know, where's the closest gas station search?
Yeah, I mean, look, right now, Google is monetizing about 20% of its queries. 80%, they don't show you an ad, but they show you blue links. With GPT, the promise is you get an exact answer. You don't have to deal with links. Everything shows up within the page. Now that's gonna hurt the publishers. If you think about it, publishers come to Google, they advertise on Google to get traffic. Well, if I'm showing everything on the page itself, I'm not getting any traffic to my app or my website. That's huge. I think more than Google, it hurts all the publishers that are not going to get traffic anymore, because that's how you acquired customers. So if I'm showing everything within the search page, that's a big deal.
So who would be a loser in that?
Like all your publisher websites, whether it's New York Times, Washington Post, any e-commerce website. I mean, look, these guys are not doing e-commerce, so you still have to go to Amazon to buy the product. But potentially, that is the promise, that if you conquer search and you show everything within the page, you don't need to route the traffic, and that's going to kill the advertising revenue that you know.
Well, that's Google. That's the business model.
Google.
So why isn't Google down 50%?
Because nobody has figured that out yet, that, you know, showing a summarized answer is how the entire search is gonna, you know, go in that
But
kind
Paul,
of domain.
all the useless knowledge that I sometimes spout off, I'm addicted to YouTube. That's where I get it all.
I know it is. I
mean, that's got to be worth something.
Yeah, that's separate from search. So the YouTube business is just running on all cylinders. I mean, the ad side is like a $40 billion run rate. Compare that to Netflix, which is more $33 billion. And then they have a subscription stream. YouTube subscriptions is north of $10 billion run rate at this point of time. So they really got everything going.
I'll tell you how cool YouTube is. This radio show, Bloomberg Intelligence, simulcast on YouTube. How about that?
Which is great content. I mean, Grant, there's a lot of crap on YouTube, but if you could find Bloomberg, you can go find lectures from some of the great universities and really become very well educated.
All right. So
not that I have, but
all right, I'll pay attention. I'll have a couple of screens going, one for Microsoft and one for Google. All right, Mandeep Singh, thanks so much for joining us. Appreciate it. Mandeep Singh, he covers all the technology along with Anurag Rana. They got a whole team in the U.S., in Europe, in Asia, one of the best technology research teams on Wall Street. They have I think, the definitive report out there on artificial intelligence, large language learning. I have no idea what that stuff's about, but they had put a nice, big, thick, juicy report there. Lots of data, which is kind of how they do it at Bloomberg Intelligence. They show you what's going on. They don't tell you. They show you with the data, and that's how it's done at Bloomberg Intelligence. So appreciate getting a few minutes of Mandeep's time. S&P 500 absolutely unched on the day. That's all you need to know. This is Bloomberg.
Now, your company news headlines on Bloomberg Radio.
And I'm John Tucker, the Bloomberg Newsroom. We're actually sitting here in the studio with Paul with your company news. Let's start off with, unfortunately, these are job cuts, so we'll go down the list. Starting with, you heard this earlier, United Parcel Service plans to cut 12,000 management jobs and explore the sale of its Coyote truck brokerage business. The CEO is trying to offset soft demand and higher union labor costs from that agreement that they came to. The jobs reduction, that's about 14% of 85,000 full and part-time managers. They say that's going to save $1 billion this year and more in later years. And then you have Nomura Holdings. They're cutting about 60 staffers. The firm's continuing to seek ways to cut costs across its investment bank. This is a response to the ongoing slump in deal-making and capital markets activity. And this isn't really company news. It's more like college, university, and personnel news. But I have to do it, Paul, because of the quote that's listed in here. Ken Griffin, who's one of the largest donors to Harvard University, says he won't support the school financially unless it makes significant changes. He also accused elite U.S. colleges of producing what he calls whiny snowflakes instead of future leaders. And TikTok testing a feature that could make all posts shoppable. The social media company's latest move to create a multi-billion-dollar U.S. e-commerce business. The new feature is so it uses technology to identify objects in a video automatically. We'll see how that's going to work. Then it encouraged viewers to find similar items on TikTok Shop by clicking into a page of products. This is according to screenshots and posts that on the app that we viewed at Bloomberg. And that's your company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, looking at these markets here, the Dow and the S&P kind of unchanged right now. The NASDAQ off about 0.4%. Yields come in just a little bit. The 10-year Treasury 4.07% on the commodities front. WTI crude oil up 1.4% again today, just below $78 per barrel. Gold a little bit higher here, $2,035 an ounce. And Bitcoin up slightly, 43,475 for the cryptocurrency. Right now, let's head down to Washington, D.C. We'll get world and national news with Jim West.
All right, thank you, Paul. A committee vote could come today or tomorrow to advance articles of impeachment against Homeland Security Secretary Alejandro Mayorkas. Democrats are rallying in his defense, as we hear from Bloomberg's Jody Schneider in Washington.
Basically, these articles accuse him of failing to enforce U.S. immigration laws and breaching public trust. Democrats are fighting back, saying that this is an attack over policy and that they're elevating this much beyond what it should be.
Bloomberg's Jody Schneider reporting from the nation's capital. Neuralink is a tech company owned by Elon Musk, and they've announced they've implanted a brain chip into a human for the first time, representing what experts hope is a major step into connecting the human brain to computers. This is just the first test, but Dr. Lee Kroll is a neurologist and assistant professor at Temple University and says this could be a game changer.
I really do think that in my lifetime as a physician, I'll be able to use this type of technology to help my patients, and I cannot wait for that day to come.
If it is successful for widespread use, experts hope that paralysis patients and others suffering from traumatic brain injuries could use a computer to speak using this chip. Ohio could begin executing inmates using nitrogen gas under a new bill backed by the state's Republican Attorney General, ending a years-long unofficial death penalty moratorium. It would require the nitrogen hypoxia pioneered in Alabama last week be used in cases where lethal injection drugs are not available. Ohio hasn't executed anyone since 2018. This could be the week we see a verdict in Donald Trump's civil fraud trial in New York. State Attorney General Letitia James wants a Manhattan judge to order the former president to pay a $370 million fine for falsely inflating the value of real estate to get more favorable loans. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Paul and John.
All right, Amy Morris, thank you so much. We appreciate it. Well, John, The Walt Disney Company's got some activist investors circling Mickey Mouse. One of them, activist investor Nelson Peltz, believes Walt Disney can achieve profitability in streaming by bundling its ESPN Plus online service with a larger player interested in sports such as Netflix. That's according to people familiar with the matter. Peltz's Tryon Fund Management will publish a so-called white paper detailing its investment thesis and recommendations for Disney in the weeks after the entertainment giant's next earnings report on February 7th. That's according to people who asked not to be identified discussing non-public information. Would that be of interest to you, getting Netflix plus the ESPN together?
I'm not.
And would you pay more for that?
I'm not paying anything.
You're not
I
paying
don't pay anything for any of these services.
So you got the rabbit ears up.
Yeah, no, it's just like, no, I have cable. I'm maybe cutting the cord soon, and just, everything's streaming on the internet. It's got to be free. So.
Well, we'll see what that. Tryon will also argue that Disney's financial forecasts, including plans to spend $60 billion on its theme parks over the next decade, are too opaque, and that its management structure should be simplified to eliminate redundancy, and that Wall Street needs more details on Chief Executive Officer Bob Iger's recent cost cuts. Tryon, which controls close to $3 billion in Disney shares, is seeking 2 seats on the Disney board for Peltz and for Jay Rasulo, the former chief financial officer of the company.
The common denominator that just sort of pops off the page, Nelson Peltz also had some problems with PepsiCo, right? And now it's Disney.
Yep.
And the CFO at PepsiCo was Hugh Johnston.
Yep.
And now
he's at Disney.
He's at Disney.
Yep.
So he handled Nelson Peltz at his previous job. So now it's deja vu all over again.
Exactly right. Stock of Disney is up about 7.5% on a year-to-date basis, off just about 0.5% today. So a lot of action there. Bloomberg's Balance of Power with Joe Matthew from Washington, D.C. That starts right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Joe Biden has made his decision on a response. Welcome to the fastest show in politics, as the president says Iran was responsible for supplying the weapons used in last weekend's deadly attack on U.S. forces in Jordan. We're going to get the latest from Bloomberg's White House team. Jordan Fabian with us here in studio in just a moment with insights today from Michael Knights from the Washington Institute for Near East Policy. A border deal has yet to emerge in the Senate. Have you noticed? The House, though, today set to begin the process of impeaching the Homeland Security Secretary. We're going to have much more on all these stories from our signature panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us for the hour as we continue on the radio, on the satellite, and on YouTube with a look at Wall Street. Charlie Pellet takes care of that for us from New York. Hey, Charlie.
And hello there, Joe. We have got the Dow higher, S&P building on yesterday's gains. Little change, but now advancing again at 49.28 on the S&P. We've got NASDAQ down 63 for the NASDAQ Composite Index. That is a drop right now of just about 0.4%. Earnings news, lots of reports. General Motors beat Wall Street expectations for the fourth quarter and does expect profit this year to grow on improved sales as the U.S. economy chugs along. But the automaker's more bullish outlook stems less from an expected uptick in sales in its home market and abroad, from a belief that its biggest problems in 2023 are in the rearview mirror. Job openings are up, along with consumer confidence in America's economy. And with that story, here's Bloomberg's Vinny Del Giudice.
The Labor Department reports job openings nationwide rose in December to the highest in 3 months, highlighting a sturdy labor market and buoyant economy. That strength is also boosting household hopes. The Conference Board's Consumer Confidence Index rose to a 2-year high this month, reflecting a slowdown in inflation and low unemployment.
The United Parcel Service plans to cut 12,000 jobs and explore the sale of its Coyote truck brokerage business in moves that CEO Carol Tomé is taking to offset soft demand and higher union labor costs. Again, recapping, U.S. stocks are trading mixed right now. We've got the Dow Jones Industrial Average up 55, gain there of just about 0.1%. S&P higher by a point, little change, while NASDAQ is in the red, down 60, a drop there of 0.4%. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
All right, Charlie, we thank you. Good to see you. Welcome to the Tuesday edition of Bloomberg's Balance of Power. I'm Joe Matthew in Washington, where we have news. The president leaving the bubble today on his way to Florida to raise money and making news, saying that he holds Iran responsible in the recent deadly attack on U.S. troops in Jordan. Of course, people for the last 48 hours have been asking, what will the response be? He says Iran is responsible, quote, in the sense they're supplying the weapons, unquote. To sort of unpack what he may have meant by that, we're parsing words at this point. Before we talk to Michael Knights, we bring in Jordan Fabian from Bloomberg's White House team. Jordan, it's good to see you. Every word matters in a tense situation like this. Much has been said about the options facing the president. He also went so far as to indicate, as Bloomberg is now reporting, that he's made up his mind. Do we have any sense of what it is?
Well, Joe, it appears there's going to be some retaliation militarily, whether that is against Iran itself or a proxy group, whether they're targeting personnel or weapons, as Joe Biden mentioned in that gaggle, remains to be seen. And these are the tough questions that he has to make in deciding how the U.S. will respond, because, of course, there are major consequences whatever way he decides.
I wonder if he intended to say that. Maybe that was all by design, but it sure seemed like the administration spent the weekend and Monday going out of its way to say we do not want a wider war. Jordan, we're not seeking war or a military conflict with Iran. But when you say something like that in the driveway, it makes you wonder.
Right. So that would suggest, I mean, and he did repeat that too, that he does not want a wider war this morning, right after he said that he holds Iran responsible. So that would point to something more limited, something more like a check-the-box strike like they've done against the Houthis over their shipping attacks. But there's a domestic audience as well. Republicans, some Democrats want to see a very forceful response because 3 Americans died in that attack in Jordan. So will that satisfy the domestic audience as he heads into a re-election?
That becomes the question. Of course, the language we're hearing from Republicans and even some Democrats, but look at the Armed Services Chair in the House, Mike Rogers. Biden's fear of escalation has morphed into a doctrine of appeasement. That is not a narrative that the president can withstand on the campaign trail.
No, his foreign policy has really come under attack. There's a sense that Republicans are trying to put out there that the world is on fire under Joe Biden's watch, pointing to the Israel-Hamas war, the war in Ukraine, and now these attacks on Americans. So he needs to show strength, and that's why he might need to do something a little more than just a token response here.
I'm sure you can speak to the line he's trying to walk here. He's got progressives on the left who are ready to bail on him because they think he's being too supportive of Israel. And he's got critics on the right, like I'm saying here, and even on both sides of the aisle, who think he needs to do more when it comes to Iran. It is kind of the definition of a no-win.
It is, but I will point out, Joe, that is how he won in 2020, was kind of pushing away the extremes in both parties and presenting himself as this reasonable candidate. So if he is in that position where the right and the left are angry at each other, he can kind of try to thread the needle that way. But at the same time, look, the polls show that voters are deeply skeptical of his leadership on the world stage. So he needs to, at least would like to have the Israel-Hamas war wind down. These hostilities against American forces stop.
Spending time with Jordan Fabian, Bloomberg White House correspondent, as President Biden heads out of town. He's on his way to Florida, as I mentioned. Fundraisers in Jupiter and Miami. Tickets going for as much as $250,000. Jordan, will he get an earful on any of these issues at some of these? He's been interrupted at so many events recently. I wonder if this is part of a fundraiser, a choreographed fundraiser that's happening outside of town.
A lot of pro-Palestinian protesters have disrupted him, as you mentioned, Joe. It happens a little less at the fundraisers. Those are a little tougher to get into. The crowds there aren't necessarily sharing the same views as those supporters. Yeah. He could actually might get an earful from the other side of the sort of the Republican arguments that you made, which is he needs to do more to support Israel. He shouldn't be questioning the Israeli government at a time of war. So you might hear from the other side at this event in South Florida.
We heard from the Secretary of State, Antony Blinken, talking about a possible response. And again, while Bloomberg is reporting that the president has made up his mind, we don't know what that decision is. The line from the Secretary, a response could, quote, be multi-leveled, come in stages, and be sustained over time, as opposed to, Jordan, some shock and awe bombing campaign that happens later on tonight. This may not feel like the response that some people get. This could come, to the Secretary's point, in stages.
That's right. And I would look to the response against the Houthis as a possible model, which is there have been multiple airstrikes. They're trying to target their weapons depots so that they don't have the capacity to keep hitting shipping channels. You could see something like that against possible areas where Iran's drones are being destroyed.
Sure. The reporting today, by the way, that this may have been prompted, this attack may have been allowed because of confusion. They thought an American drone was coming back to base when apparently it was the one from this Iranian proxy. Have we had any confirmation on that?
Not that I've seen, Joe, but obviously that would be a concerning intelligence failure if true.
It's a whole new fog of war in the age of drones. It's remarkable. Jordan, thank you for coming in. We rely on Jordan Fabian on this program so often, Bloomberg White House correspondent, with the line from the other end of Pennsylvania Avenue here. As we add Michael Knights to the conversation, I've been looking forward to this. The Washington Institute, Jill and Jay Bernstein Fellow specializing in the military, and a real expert here on the region and the players. Michael, it's great to have you back on Bloomberg. We're talking so loosely about Iranian proxies. I wonder if we can be more specific before I ask you questions about what's coming next. The Houthis have been on the front page. Obviously, people are familiar with Hezbollah and Hamas. Are these the three primary groups we're talking about, or are there more?
Well, in some ways, Hamas is a bit of a newcomer, because they're a Palestinian movement from Sunni Islamic community, whereas most of Iran's proxies come from the Shia Islamic community, and they would include Lebanese Hezbollah, the first and earliest, the Iraqi Shia militias who fought on Iran's side during the Iran-Iraq War, for those listeners who can remember the 80s. And then finally, the newest member of that axis of resistance, the Houthis down in Yemen, who kind of form a southern Hezbollah, like the southern pincer of a kind of a crab claw that the Iranians have got around Israel and the Eastern Mediterranean and the Red Sea.
So what do you make then of what we're hearing from the White House? The president telling reporters that Iran is responsible for supplying the weapons in this attack that took place in Jordan, and that he's made up his mind. Do you have a sense, based on what you've seen already from the Biden administration, what might be about to happen?
I think what's about to happen is that we're probably going to strike inside Iran for the first time since the 1980 hostage rescue
How come?
And that's, the reason being that essentially we've run out of options. We've run out of rungs on the escalation ladder. We're trying to convince the Iranians and their proxies to stop mounting attacks that could kill us in Iraq and Syria, and to stop attacking global shipping in the Red Sea through the Houthis. And they're simply not responding. So that tells us that you can't just keep attacking the tentacles of the octopus. You've got to attack the head of the octopus, the way the Israelis describe Iran's network. And I think that's coming next.
How do you do that and not prompt a wider war? The Biden administration has been so careful to try to not escalate things. Wouldn't that define escalation?
Well, it does, but this is what happens when you run out of road in your existing escalation management strategies. I mean, essentially, Iran and the US have both been what we call escalating to de-escalate, and both of their strategies have not been working. So essentially, we've got two failed de-escalation strategies hitting head on, like two trains hitting each other. And for us now, doing something in Iran is the next step. But of course, if you did something very lightweight in Iran, if you just pecked away at a particular base in the middle of nowhere, a Revolutionary Guard training base, if you went for some radars on the coast, what you're doing there is that you are breaking the seal on the Iranian homeland. You're saying we're ready to do this from now on. We haven't done it for the first 40 plus years of the Islamic Revolution's life in Iran, but we're doing it now. And we're only going to do it a little bit at the start, but next time it might be worse. That could have the shock effect required to make the Iranians back down their proxies, or it might require something even stronger.
What would be the Iranian response to an attack on Tehran or directly on Iranian soil?
If we hit something on Iranian soil, even if it doesn't really hurt very much, they're going to have to hit us back at one of our regional bases, probably Al-Assad in Iraq, which is where they hit us after we killed Qasem Soleimani, their senior general in the region, in January of 2020. They hit us back in Al-Assad. And even though we didn't suffer any killed that day, they rung the bells pretty badly through traumatic brain injuries of, well over 100 troops. So they're going to do something like that. If we hit them very hard in Iran, they might do something a bit more aggressive.
That's just official action from Iran and the Revolutionary Guard. What would become of Iran's proxies, not to mention just lone wolf terrorists who would love a reason to strike at the U.S.?
Well, it's interesting to note that when we hit Qasem Soleimani in 2020, under the Trump administration, which was, about the most painful thing we could have done to them, honestly. They didn't get their proxies to hit us back immediately. They basically said to all of those guys, hold, we'll do it ourselves. This is our business, our revenge to get. And we can do it precisely in a way that probably the Americans won't respond to. And that was true. Trump came out and said, fair's fair, we hit them, they hit us, it's over. And so it may well be that will be their response another time. The problem for the Biden administration is we want this cycle to stop. And ideally we want it to stop before the Gaza war ends, which might happen in February or March, or it might take a lot longer. And so we're trying to work out what's the cold splash of water to the face that's going to make the Iranians find a face-saving way to just turn this off. And we're not sure if it's going to work or if it's going to make things worse.
Well, clearly the stakes could not be higher here. You might have heard me reference Anthony Blinken. He said something else yesterday. I would argue, said the Secretary of State, we've not seen a situation as dangerous as the one we are facing now across the region since at least 1973, and arguably even before that. Would you agree with that statement?
Yeah, I would agree. And, it's hard not to look at a lot of the policies of the last 10 years and, 15 years and say this was really a problem of our own making, honestly, because we failed to stop these kind of threats before they evolved to become so significant a network.
Well, it makes you wonder what future policy is going to mean with the two possible presidents. Let's say that this is a Trump-Biden campaign. What would this mean with the Trump administration less than a year from now?
Well, we know that Republicans are amongst the leading voices who want to move to mainland Iran and begin to affect the head of the octopus, not just the tentacles. So we could say they're more likely to do that in the future. I'll say one thing though, the last 3 years, if you look at the failure to try and rebuild the nuclear deal, and then you look at the increasingly militarized competition between the US and Iran since the Gaza war began, there's no putting Humpty Dumpty back together. It's very hard to imagine any administration, Democrat or Republican, having faith in the idea of significant de-escalation with Iran. Instead, what we're looking at is more of a containment strategy, as we had with, let's say, the Soviet Union, open-ended, or North Korea. It's an open-ended containment mechanism, strategy against a near-nuclear adversary.
You think we'll see some action in the next 24 hours?
Yeah, I'm surprised we haven't seen it already, but I think that demonstrates the Biden administration is not willing to just hit the targets it can find, which is those in Iran. It's looking to hit the targets it wants to hit instead, which are probably some leaders who they're waiting for them to pop up in Iraq or Syria so they can take a whack at them next.
think of that when you see the headlines. Michael, it's good to see you, and I appreciate your joining us. Michael Knight's with us from the Washington Institute for Near East Policy, getting things rolling here on the fastest show in politics. We've got a lot to catch up on next with Nathan Dean, who joins from Bloomberg Intelligence. We'll take a look at what's happening here in Washington and the odds of a shutdown starting a month from this week. That's all they've got to figure this out, and I'm pretty sure not a lot has changed. I'm Joe Matthew in the nation's capital. This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pella. We've got the Dow higher, S&P, NASDAQ, both in the red. NASDAQ 100 index now down by 0.5%. Headline out of Washington, Senate Banking Committee Chair Sherrod Brown is urging Fed Chair Jay Powell to cut rates early this year, saying high interest rates are hurting the small businesses and putting home ownership out of reach for many Americans. Now, policymakers are meeting right now. We get the Fed decision tomorrow. tomorrow, 2 o'clock Wall Street time, Jay Powell's news conference at 2:30. You can catch it live on Bloomberg Television and radio. Stocks trading mixed right now. Dow Industrials up 61, gain there of 0.2%. S&P little change lower by a point. Essentially a holding pattern right now with NASDAQ down 87, drop there of 0.9%. 10-year yield 4.07% with a 2-year now yielding 4.36%. Gold up $2 the ounce to 20.35, up 0.1%. And West Texas Intermediate crude 77.86 a barrel, up by 1.4%. JetBlue Airways among the companies reporting earnings this morning. It is evaluating deeper cost cuts, delaying aircraft, and reworking its flight network in an effort to return profitability in the wake of the near collapse of its planned purchase of Spirit Airlines. JetBlue shares, they are down 5%. Spirit up today by 7.3%. Recapping, S&P down a point right now, little changed. I'm Charlie Pellet. Joe Matthew, that is a Bloomberg Business Flash.
All right, sir, we do appreciate it. Charlie Pellet will have more on the markets throughout the hour. We do that every day here on Balance of Power, on the radio, on the satellite, on YouTube. Next hour, we'll also be simulcasting on Bloomberg TV, and Kaylee Lyons will join the conversation. In the meantime, I have to impersonate Kaylee, talking with Nathan Dean, our friend from Bloomberg Intelligence, about Basel III, which I'll get to. It's good to see you, sir. Thank you for coming in. The fact of the matter is the government is technically set to shut down a month from Thursday, I believe. You've been running odds on this. Nobody's getting along. Donald Trump's on the phone. Border deal on ice. Is this going to be a problem?
No, I don't think it's going to be a problem. I mean, March 1st and March 8th are the two dates you have to worry about. March 1st, for the 12 appropriation bills go up for a partial shutdown. The reason why I don't think it's going to be a problem is March 7th is the State of the Union address, and nobody wants a shutdown, especially when the State of the Union is already as late as it is. But the ultimate reason why I don't think there's going to be a government shutdown is there's really no strategy other than kick the can down the road. And there's nothing holding them to that date. They can easily kick the can. Speaker Johnson has already said, look, we've done it once. Remember last year he said no CRs?
Right.
Well, they did a CR.
We're getting ready for the third one then, right?
Exactly. And so they can go CR and CR up until this April 30th date, where if we are operating under continuing resolution, we have 100% sequester. So that's the date where
automatic cuts kick in.
Correct.
Which was supposed to be a deterrent.
Correct.
Would force them to budget the government.
Yep.
Yet we're coming up on it with nothing.
And ultimately, if they get close and they need to decide that they want to kick that can down the road, they can certainly do that as well.
Okay.
But, because look, Congress is the one that
helps
controls.
when you're writing the laws.
Exactly. They're the one that write the laws. But, that is the date in which I think Congress will have to come together and make a stand and say, look, we have to do something, because eventually they will want to kick the can beyond the elections.
Yeah.
Because they will want to say, I'm done in Washington. I want to go back to my own district.
So year-long CR. Let's get it on.
I think that, I don't think we're going to have a government shutdown. I do think that this border security, Ukraine package, not package, and so forth, could get wrapped up in some negotiation in April. For me, it's never over until it's over, and I think that April 30th date is, once they figure that out, that's where things can be deemed over. But we don't think there's going to be a high chance of a shutdown. And even if there is, we've said it before, scary headlines does not equate to scared markets.
Well, boy, absolutely fascinating, though, that we'd be talking about, I guess, a 2-month, right? They'd bring that right up to April 30. Now we have a real deadline to potentially get something done. The defense hawks will freak out, because that would be a significant cut to defense spending at a time where they want more money.
Yeah, it's almost bipartisan. I mean, you don't touch defense spending. I mean, especially when we have issues happening in the Middle East, 3 American service people killed. I mean, that's not something that anybody really wants to play politics in a town where they play politics. So I ultimately think that they will figure something out to avoid that sequester. I mean, look, anything can happen, and we aren't running odds on that yet. We will in the next week or so with this April 30th time frame, because, like I said before, nobody wants this to happen. Nobody wants to be seen cutting the military spending in an election year. And certainly, I think at a certain point, people are just going to say, I'm tired of Washington. Get me home.
What's the CR that gets the speaker fired, though? I mean, this is the kind of business that got Kevin McCarthy fired. He did vow, to your point, no more continuing resolutions. I won't do it again. Now he's going to be lining up the third with a very loud chorus in the Freedom Caucus who are willing to fire him. Add Marjorie Taylor Greene, I guess, formerly of the Freedom Caucus. She says she's got the motion to vacate ready to go.
Absolutely, but the question I have for them is, who's going to take the place? mean, it took 3 weeks to find Kevin McCarthy's
Does
replacement.
that keep them at bay? I mean, it's not like they're being rational.
I don't think it keeps them at bay, but the question is, what type of politics comes out of this? So we have seen statements from Democratic moderates saying that they would be willing to help Speaker Johnson. Now, that's a big if, and there's certainly going to be a lot of caveats on that. And the question is, if you're going to help out Speaker Johnson, what do you get in return here, especially as they're going through impeachment proceedings with the Secretary of Homeland Security and so forth like that. So I'm not saying that they're going to be there to save the Speaker, but the question is, what type of chaos will come in an election year if you were to try and engage in this fight? Now, I just, look, anything can happen. We could be talking on the show a month from now about the new motion to vacate, and Speaker Johnson could lose his job and so forth like that.
Yeah.
Certainly can't count it out. But there are a majority of folks in Washington on both sides of the aisle that do not want to do this. And they just want to focus on governing, and they want to focus on bills, legislation. Patrick McHenry over at the House Financial Services Committee was complaining about all the lost months they've already had, that they're not voting on crypto bills or stablecoin bills, etc. So, I do think if there's going to be a motion to vacate, it's certainly feasible, but I think Speaker Johnson survives.
See, this is why everybody wants to hang out with Nathan Dean, get a beer at Bobby Vans, talk about politics. This is the same exact conversation that we have with Nathan when we're off the air, right? Now I'm going to do my best impression of Kaylee, because we got an interesting call today from Morgan Stanley. And the first thing I thought, God, good thing Nathan's coming with. Basel III, maybe not as hardcore as we thought. Analysts at Morgan Stanley bullish on banks. They upgraded them today on expectations, as I read on the terminal, pending regulatory changes for higher capital levels will be less onerous than the current proposal. And that's exactly what all these banks are angling for. They're all up today on this. Goldman, Citi, B of A. What do you think of Morgan Stanley's call?
Absolutely agree.
Yeah.
So we've been saying this ever since the proposal came out. So the Basel III Endgame proposal raises capital requirements for about 19% for the largest banks. So the Bank of America's, Morgan Stanley's, if you will. Regional banks, 5 to 6%. Now, in the way that it does, the proposal focuses on 3 provisions: market risk, credit risk, and operational risk. There are holes in those provisions that pretty much, no matter who you are, somebody can find an issue with it, whether it's moderate Democrats or the banks and so forth like that. This proposal came out, and it's going to need substantial changes to get it done. Now, here's the question. Can the Fed actually make all those substantial changes, which we think will happen, which include changing of things like risk weighting for assets for mortgages, consumer loans, and so forth, decreasing that capital requirement number, so we're completely in line with Morgan Stanley and Goldman and the calls there. The question is, can the Fed do that, A, to avoid a legal challenge? I don't think they can do anything to avoid a legal challenge. It's going to come no matter what. And B, can they get it out this year? Because that's what everybody is banking on up in New York at the moment, is they think the Fed cannot get this done in this year. And it's going to get kicked to the can to 2025 and then subsequently be at the whim of who wins the presidential election in November. Until I hear language from the Fed, though, that says that they're considering a delay, I still think that they're going to get it done this year.
I hope Kaylee was in the lobby or somewhere where she just heard me ask you that. Perfect answer. Last one for you. We've talked about safe banking. We've talked about rescheduling. Cannabis, of course. Marijuana. There's a note out today, a release out from Senator Elizabeth Warren's office. She's getting together with John Fetterman on this, and Chuck Schumer's name is on the release as well, urging the Biden administration to not reschedule, but deschedule cannabis. Is there a world in which that could happen?
No.
Okay,
So,
let's move on.
No, when it comes to marijuana, there's 2 things to note, especially for the marijuana investors like MSOS, equity, and so forth like that. These equities jump like 15, 20% on any headline. But for our point of view, Safer Banking Act, 30% chance of passage this year.
Not good.
It's not good. There's not a lot of folks in the House Financial Services Committee, including Speaker Patrick McHenry. Former Speaker, acting Speaker, now Chairman, House Financial Services Committee, Patrick McHenry. I don't think he's on board with this. So the Safer Banking Act, you could see a vote in the Senate, some positive headlines, but it goes nowhere. Reschedulization is different. This is part of the executive branch. So the question there is this a political decision that will help us or help the White House in November? Versus there are a lot of folks over at DEA that have lost friends and family battling marijuana over the last 30 years. So I do think reschedulization is going to happen. We say 70% before August 1st. which obviously will bring some benefits primarily on the tax side. There's this thing called 280E for your tax rate. For a lot of these marijuana firms, the tax rate goes from like 40% down to like 5 to
How about that? It could mean the difference between profitability and not, I guess. But descheduling, what does that even mean? It's treated like water? It's milk? What is?
It's over the counter.
Not
It's
even
not
on
even.
the list.
It's not even like Tylenol or anything like that. Deschedulization is almost like a form of just decriminalization.
Got it. And your answer was concise on that. It's nice to see you. Thanks for coming in to see us in our new incarnation. Nathan Dean joins us each week at this time now. That's a promise from Bloomberg Intelligence. He's U.S. Policy Senior Analyst. This is the guy who all of the clients call, the terminal readers, when they want to know this stuff, when they're actually making decisions on investments. And we get to borrow him once a week here with his great team at BI backing him up here in Washington. I'm Joe Matthew in the nation's capital. We're going to assemble our panel next. Rick Davis and Jeannie Shanzana were coming in after we get you up to date on world and national news. For that, we turn to Nancy Lyons in the Bloomberg 99.1 newsroom here in Washington. Hi, Nancy.
Hey, thanks, Joe. Illinois' election board is keeping former President Trump on the state's primary ballot. Today's decision comes a week before the U.S. Supreme Court hears arguments on whether Trump's role in the January 6th attack on the Capitol disqualifies him from the presidency. Israel is coming under fire for conducting a raid today on a hospital in the West Bank and killing 3 Palestinian militants. A hospital official says the Israelis came in disguised as civilian women and medical workers, and no gunfire was exchanged, indicating it was a targeted killing. The Palestinian Health Ministry is condemning the raid and is calling on the international community to pressure Israel's military to halt such operations in hospitals. The Biden administration's current approach to Iran is not working. That's the assessment from former NATO Supreme Commander James Stavridis following the Iranian proxy attack that killed 3 U.S. soldiers in Jordan over the weekend. Admiral Stavridis is arguing for a Goldilocks approach.
Cyber attacks, better intelligence collection, going after Iranian assets, but not inside Iran yet. We can still go after the Iranian Revolutionary Guard at sea, ashore. They are training, organizing, equipping, and directing Houthis, Hezbollah, the Iraqi Shia who have killed our American soldiers.
Stavridis was a guest on Bloomberg Surveillance. Neuralink, a tech company owned by Elon Musk, says it's implanted a brain chip into a human for the first time. Dr. Leah Kroll is a neurologist and assistant professor at Temple University.
This would be a major game changer if it were to be proven to be safe and effective.
Kroll says she can't wait to use this type of technology. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
News. I'm Charlie Pellet. 1240 on Wall Street. Stocks trading mix right now. Dow Industrials, they are higher, holding on to a gain of 38 points right now, up by about 0.1%. S&P, NASDAQ 100 index, all in the red right now. Throw in the Russell 2000 as well. Right now we have got the S&P down 7, drop there of 0.1%. NASDAQ down 115, decline there of 0.7%. Russell 2000 down 18 points, drop there of 0.9%. 10-year yield 4.07% with a 2-year 4.37%. Gold up $1.10 the ounce, little changed, up less than 0.1% right now. 2,034 the ounce on gold. Bitcoin up 0.4%, 43,359 right now on Bitcoin. And crude oil up 1.4%. West Texas Intermediate now at 77.83 a barrel. Google and Microsoft will be among the closely watched tech companies reporting today after the close of trading. Russ Kosterich is portfolio manager at BlackRock Financial, and he says this batch of tech earnings are key for the equity market.
I do think gains this year are going to be more earnings driven, which means what we see from the leaders in the market, and of course that is tech and related names, is going to be a big driver on how the market does in 2024. We're constructive. We think we have an environment where nominal GDP is solid, call it 4 to 4.5%. Earnings estimates at 10 or 11% are reasonable, and tech should continue to lead on the earnings side.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Right now, both Microsoft and Alphabet are trading lower. We've got Microsoft down by 0.6%. Alphabet lower now by 0.7%. Recapping, stocks are mixed. The Dow higher, S&P trading lower. The S&P down now by 0.2%. I'm Charlie Pellet. Joe Matthew. That is a Bloomberg Business Flash.
All right, Charlie, thanks. We carry on live from the nation's capital here with a pretty scary conversation we just had with Michael Knights. This is the Washington Institute for Near East Policy. He's an expert on Iranian-backed proxies, and he says the response from the White House will not be against them. It will be against Iran directly. And it could come as soon as tonight. The president is in Florida today, a couple of fundraisers, one in Jupiter, one in Miami. We'll see what happens and whether or not he goes to the back of the airplane on the way home as we assemble our panel now. Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors, coming off a very newsy 24 hours here, and it just got a lot newsier, Jeannie, with the president talking in the driveway on his way out of the White House here for this trip to say that he blames Iran, that Iran was responsible for supplying the weapons used in this attack, and that he has made up his mind on a response. Do you have any sense of what it will be, having seen the menu of options for this president?
Yeah, a really tough decision for the president. The menu of options runs from, on the low end and to the high end. And it sounds like, if the reports are to be believed, and I don't know if they've been confirmed yet, that they have decided to hit Iran. And I think one of the big questions is, hit Iran how? Are we talking about hit a vessel, say, or are we talking about hit an Iranian interest, hit something in the area of oil, or hit Iran directly? These are very tough decisions for them to make, because as much as we need to think about retaliation for the deaths and the injuries that were caused by these proxies, horrific as they were, we also have to think about the issue of deterrence, certainly, but also what happens in the days, weeks, months, and years going forward. Are we going to get ourselves in a situation where we are in a direct confrontation or indeed war in the Middle East with Iran? So all of these weighing on the administration as they try to make, and the president specifically, a really, really difficult decision. And of course, we don't know yet what they've decided, but if it is hitting Iran, that speaks volumes out of what they've seen here and what they know.
Well, that's for sure. Rick, we haven't seen much for the sort of piecemeal approach we've taken to the Houthis. They attack a ship, we lob a missile. This has now happened 9 times, I believe. Will anything short of a direct hit against Iran make a difference?
Yeah, I think direct hit against Iran comes in a lot of different shapes and sizes, as Jeannie was alluding to. And I think Michael Knights is the kind of expert you want on this program to be able to talk about what those options are. But the bottom line is, this is a classic Iranian exercise. Push, 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 attack from all different sides, use all your carve outs, Don't put yourself in the crosshairs. And then something like this goes wrong, where whether they wanted to do it or not, they've crossed a red line. And the red line is attacking a U.S. facility and killing U.S. personnel. And they're going to now have to pay a price for that. The question is this an example of escalate to de-escalate? If we do then hit them, is there a moment where everyone says, okay, now we're even? And I know that sounds very, schoolyard, but the reality is a lot of this geopolitics is schoolyard politics. And the question is, can we get the necessary behavior from Iran by being tough here? And of course, the hawks are circling the White House. Senator Cotton, Senator Graham, Senator Cornyn, all these people want to see a hit on Iran. But in 1988, we sank the entire Iranian Navy. I mean, it wasn't much of an exercise, and the Navy's gotten bigger since then. But that was one of the tactics we used to send them a message saying, enough's enough. And after that, everyone kind of pulled back. So that's a classic example of escalate to de-escalate.
The political implications here are huge in an election year. Jeannie, you heard the line from Mike Rogers that we read a bit earlier, Armed Services Committee Chair. Biden's fear of escalation has morphed into a doctrine of appeasement. Is this going to result in a more aggressive response from Joe Biden, the criticisms that he's hearing?
I hope not. Arguably, it will. It's an election year, but I do hope not. Because the reality is, Rick was just talking about the 1980s. This issue goes back decades as it pertains to presidents and their responses to Iran and agitation by Iran. You've had almost every president, regardless of party, accused of being too weak in their responses to Iran. So this has less to do with Joe Biden than it has to do with our foreign policy towards Iran. And so I think Joe Biden has to take these specific circumstances as he finds them and make the right decision to hopefully not escalate this thing, but do respond. There's no question they have to respond, and to try to, as far as he can, keep the campaign politics of the moment out of it. Everyone is arguing, or many people on Capitol Hill, like Roger Wicker, you mentioned Rogers, arguing for him to hit that hard. But he's the president. He has to think longer term than just the November election and what this does to the United States and democracies and our interest in the Middle East more broadly than just his political future. So we hope he's able to keep that into account. And I think, knowing Joe Biden, he will.
Well, regardless the level of response here, Rick, we've got a moment. The president's got a moment on his hands. People are watching very closely to see what happens next. Wouldn't this justify an Oval Office address to a nervous public about what in the world is going on in the Middle East?
Yeah, I'm a little surprised by the White House's lack of stage management on this. First of all, you would think that the president would want to talk about this as the action is occurring. In other words, why give a bunch of notice to a bunch of bad guys that we're going to hit you this time? It wouldn't take much to figure that out. But why even give any notification until you've actually made a decision on what to do and are doing it in the process? Nothing's more dramatic than the president of the United States sitting behind his desk saying, I have now ordered, my military take action against these, despotic regime in Iran, and this is what they're going to do. And I don't know why now why would you travel to Florida to raise money doing a campaign event surrounded by hoopla when, you're about to order a military attack against, one of the largest rogue regimes in the world? The lack of sensibility about this is shocking to me.
We've only got 30 seconds, Jeannie. Do you agree on that? Should you cancel the fundraisers today?
I think canceling the fundraisers makes good sense. This is a serious moment. He should focus on it. But of course, on the flip side, they argue that he keeps up with his schedule because he can do more than one thing at a time. And so there's an argument to be made. Iran has not knocked us off of our usual schedule, and we will respond with force regardless.
Rick Davis, Jeannie Shanzano, their thoughts ahead on the campaign trail while we're talking about this attack over the weekend. Let's say their names. Sergeant William Rivers, Specialist Kennedy Sanders, Specialist Brianna Moffitt, 46, 24, and 23 years old, respectively, Army reservists. I'm Joe Matthew. This is Bloomberg.
your company news headlines on Bloomberg Radio.
General Motors beat Wall Street expectations for the fourth quarter, and it expects profits this year to grow on improved sales as the American economy chugs along. GM CEO Mary Barra spoke with Bloomberg this morning about the quarter.
We had a constraint with modules. We have addressed that. We're on track for the first month, and by the middle of the year, that should be well behind us. So that's going to allow us to build many more of the existing vehicles, like the Cadillac Lyriq and the GMC Hummer EV, the Silverado EV work truck, etc. And then this year, we're also going to be launching the Chevy Equinox EV along with a Sierra EV. So we have many new EVs coming out. And so it's going to be a strong year for us from an EV perspective as well.
Indeed, General Motors shares rallying after that earnings report. Right now, we have got GM shares up by 8.2%. Ford shares, other automakers taking part in the rally as well. Ford up now by 2.5%. Stellantis up by 3%. Tesla, higher little change. Tesla right now up by about 0.2%. Big job cuts being delivered at United Parcel Service, planning to cut 12,000 jobs, and it will explore the sale of its Coyote truck brokerage business in moves that CEO Carol Tomei is taking to offset soft demand and higher union labor costs. Shares of United Parcel Service now down by 7.1%. JetBlue, among the other companies reporting earnings this morning, it is evaluating deeper cost cuts, delaying aircraft, and reworking its flight network in an effort to return to profitability in the near collapse of its planned purchase of Spirit Airlines. JetBlue shares down now by 5.1%. Those are our top company stories at this hour. I'm Charlie Pelletan. This is Bloomberg.
You're listening to Balance of Power with Joe Matthew on Bloomberg Radio.
Joe Biden is in Florida raising money today, as we've been discussing, but that's actually not the fundraiser we're watching all that closely. Nikki Haley is the one with the fundraiser to watch here. We told you this was coming. It's the 30th of January. This is the day she sits down with the whales, right? We've got some pretty big names here. Druckenmiller, Kravis, Langone. I could go on, making us wonder how long this race could go if she keeps getting money. And are these never Trumpers? I guess they are. Donald Trump just last week threatened to blacklist any donor who goes into the Nikki Haley camp. And so we reassembled our panel to talk a bit about what's happening on the campaign trail, because it's really come down to a donor battle, it seems. Rick Davis and Jeannie Shanzano are back with us. Rick, what are you hearing last couple of days in Republican political circles here about her ability to stay alive? Because it looks like everyone's showing up despite the threats from Donald Trump.
Well, we know what she's been reporting, which is every time Donald Trump attacks her on something, she raised $1 million on the internet. So that's a pretty good income raising. And we know that back in early December, she had another large fundraiser in New York City with kind of who's who of Wall Street, hosted by Campbell Brown and Dan Senor. And they raked in $500,000, which at the time was singularly the biggest fundraiser she'd ever done. She's had some limited success. In other words, she's now one-on-one with Donald Trump, which is better than she was in December, but she still hasn't won a primary, and yet home state advantage right now. So I would say that this has got to be 10 times that number to really make an impact for her downstream, because we're now facing 16 state Super Tuesday, which you can burn a lot of cash during that week.
10 times that number. Jeannie, how important is this meeting today for the way forward in this campaign? It's going to come down, it seems, to cold, hard cash.
Love it, because the whales don't seem at all frightened by Donald Trump. They are not put off at all. In fact, they are going in strong. Love to be a fly on the wall for that. She's raised $4 million in the last week. So this thing is far from over. Sounds like they are not going to be deterred. She is raising hand over fist. And Donald Trump's got to be salivating as he's losing money to all of these charges he's gotten found guilty of in court.
Are you surprised by this, Rick, or is this what you expected? There were questions just last week about whether they were going to go through with this meeting following not only Donald Trump's threats, but her losses in Iowa and New Hampshire.
Yeah, I think it was a legitimate question coming out of, New Hampshire as to whether or not she was going to continue to prosecute the campaign. She made that loud and clear last Thursday that she was staying in through Super Tuesday. She set an expectation. She's been reporting additional fundraising. And she's making very good appearances on television and on the stump. People are starting to see a candidate they can grow to like. And I think that has given her enough momentum to be able to certainly pull off this next round of primaries in South Carolina. And we'll see where she goes from there.
Fascinating. How about Joe Biden's work ahead this evening? I guess it's built in when you're the incumbent, Jeannie, but this is an expensive one, up to $250,000 at these two fundraisers. He's not getting any votes in Florida while he's at it, is he?
Yeah, but I love it. Going right into Republican red territory. He's not far from Mar-a-Lago. Maybe he takes the trip there. This is exactly what he should be doing. He should be going and confronting Donald Trump where he lives, and he's going to raise a lot of money doing it, and talk about the economy, which, of course, Nikki Haley hitting Donald Trump on tariffs as well. So she's also hitting him. So he's having it both ways from these two candidates in the next 24 hours.
Begging the question when he's going to really start putting the money to work here. That's going to be millions of dollars tonight, Rick. Is he holding it all for the general?
No, he'll spend some of that money in the primary. I mean, some of it comes in as primary money, which means you got to spend it in the primary, and some of it is general, which means you can't spend it until the general. So he's going to manage that money as it is. And look, he's already ramping up his advertising and his schedule. It costs a lot to fly Air Force One into a political event.
Yeah. So, Rick Davis and Jeannie Shanzano, hour 2 of Balance of Power starts right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
President Biden says Iran was responsible for the deadly attack on U.S. forces in Jordan, and he has made up his mind on a response. Welcome to the fastest show in politics with breaking news from the White House as the world waits to learn that response, with criticism now coming from both sides of the aisle. I'm Joe Matthew in Washington, joined by Kaylee Lyons. Kaylee, it's great to see you. I missed you yesterday. We've got some stuff to figure out here as the president heads to Florida to raise money.
He has to raise money, which just speaks to the fact that every decision he makes now is political, because he is running for re-election. He has to take that into account as he decides the appropriate response against the attack in Jordan that killed 3 U.S. troops. The president, when speaking to reporters today, says he does not think we need a wider war in the Middle East. That's not what he is looking for, but he also wants to hold responsible those who perpetrated this attack. And as you said, Joe, he says Iran supplied the weapons to the people who did it.
Yeah, we're going to talk to Hagar Shamali about this coming up. A voice of authority on this, former director for Syria and Lebanon at the National Security Council, and someone we've learned a lot from over the course of this process here, with much more to follow later this hour, Kaylee. But this is our top story today as we try to figure out the way forward here in Washington and Wall Street, for that matter. Why don't we check in with Charlie Pellet before we get the ball rolling here in politics? An update on trading from New York. Hey, Charlie.
Well, hello there, Joe Matthew. Hello, Kaylee. We have got the Dow higher right now. S&P retreating from yesterday's record, but still holding above that 4,900 mark. Down 10 points right now. 49.17 on the S&P, lower by 0.2%. Nasdaq down 137, drop there of 0.9%. And to be sure, we've got the Dow holding on to a gain now of 0.1%. 10-year yield 4.08%, with a 2-year now yielding 4.38%. Gold lower a little change, down 13 cents the ounce to $2,033. Bitcoin up $222. That is an advance of 0.5%. Bitcoin now at 43,400. West Texas Intermediate crude up 1.5%, 77.94 a barrel. Big earnings after the close of trading. Bloomberg Radio and Television, we've got you covered when we hear from Microsoft. That stock lower ahead of earnings, down 0.7%. Also after the bell today, we will be hearing from Alphabet, parent of Google. And right now we have got Alphabet shares down by 0.8%. 1%. Job cuts at UPS, United Parcel Service, down now by 7.2%. Rival FedEx delivering a loss now of 1.3%. So again, recapping, we are looking at a mixed day for Wall Street. Off records, S&P still above 4,900, lower by 10 points now, down 0.2%. I'm Charlie Pellet. Joe and Kaylee, that is a Bloomberg Business Flash.
Right, Charlie, we appreciate it. Welcome to Bloomberg Balance of Power. Kaylee, the president has just touched down in Florida. There were some questions about whether he should have stuck with the schedule today, knowing that there could be a response coming against Iran or its proxies as soon as tonight.
Yeah, we don't actually know the timing. We don't even know what that response ultimately will entail. We just know that he has made a decision about what the response will be. And actually, Admiral John Kirby, the spokesperson for the NSC, was briefing reporters on the plane to Florida and said it will be a tiered response. So this isn't necessarily just something flies, tonight or in whatever day the administration chooses, but we could see multiple steps to this retaliatory process.
Dare we say a laddered response. We spoke with Michael Knight a little bit earlier on Bloomberg Radio, Kaylee, and this is someone who knows Iran's proxies as well as anyone. He predicted here on Bloomberg Live that we're done with escalation. There's nowhere further to escalate, and that the U.S., he believes, will strike Iran directly, and he thinks it could happen as soon as tonight. That's a pretty incredible prediction to consider what the response to that might be, and I wonder if we might see the president. Where's the Oval Office address at a moment like this?
Well, if we indeed see a strike like that, then surely he would have to address it in some form. It's interesting, though, that he would characterize that as not an escalation when we haven't actually had a direct strike on Iranian territory in decades. So if we did it this time around, that certainly would, at least from a lot of the conversations I've had, bring this conflict to a much different level than it is right now, when basically the U.S. to this point has only engaged with Iranian proxies, not Iran itself.
It would be remarkable, and to his point, it would draw a response. I wonder Hagar Shamali's thoughts on this, the former director for Syria and Lebanon at the National Security Council, founder of Greenwich Media Strategies. Hagar, it's good to see you. Thanks for coming back to talk to us. What's your thought on this? What should be the response from the administration?
Well, there are three levels of options that the administration could pursue. And by the way, I'd add, when I was at the White House, one of the things that was very common is that the Defense Department lives to do contingency planning. So they have plans for all sorts of scenarios of this kind. And they likely had something in the can. They had options that were laid out, pros and cons of those options. And the thing that the Biden administration has to achieve here is to send a message to put an end to all this aggression coming from these Iran-backed militant groups, while not escalating things into a full-scale war, and also protecting the rest of our troops and the U.S. presence across the region. We have 2,500 troops in Iraq, 900 in Syria, and we have a number of bases across the Gulf and elsewhere, and that is not including our U.S. embassies and diplomatic personnel. So there's a lot here, a fine line he has to walk. Now, in terms of the options, he could go very tough, and very tough I would put that would include any kind of strike or action within Iran's borders. That would be something like weapons depots, airports, perhaps leadership, the Islamic Revolutionary Guard Corps stations, things of this kind. Then you have a second tier, if you will, something like Iranian presence across the region instead of targeting Iran within the borders, meaning sinking its warship in the Red Sea or other vessels in the Gulf, things of that kind. And then at the lowest level, I would put heightened attacks, perhaps simultaneous attacks against those Iran-backed militant groups in Iraq and Syria. But the administration has really already done that. And by the way, if they only do that, Iran won't care about those kinds of strikes. So it needs to be a level above.
Yeah. Well, yeah, at the end of the day, Hagar, isn't this what Iran will care about? Because it's not just about retaliating for the attacks we've already seen, keeping in mind that, sure, this was the first deadly one that occurred in Jordan a few days ago, but we've seen more than 150 against U.S. troops in the region since October 7th. It's also trying to deter, make sure that future attacks don't happen at all. How can you actually deter Iran and its proxies if you don't go after Iran itself?
Well, yes, you make a point at the end that's very valid. You have to go after Iran in some way, shape, or form, whether it's related to its leadership or to its money. And I mean, these are the things they care about the most. And also its reputation, how it looks publicly. They need to see a message that indicates to them that the U.S. is not afraid. These dictators and thugs don't understand the language of democracies. It's not the same. So we should, in my opinion, we shouldn't be afraid. to strike Iran, but we shouldn't be afraid, or Iranian targets in the region, because that's the only thing they understand in order for them to take the United States seriously, to know that if they dare respond to that the U.S. has no fear in escalating further. And so those are the kinds of targets that you could see. They could also pursue other announcements, like saying that the nuclear deal is off the table, for example, but they are going to have to hit Iran. One last point I would say on this is that while Iran may not be behind every single execution of these attacks from these Iran-backed groups, these Iran-backed groups across the region wouldn't exist if it weren't for them. They fund them, arm them, train them, they give them technical assistance and intelligence. And also, on the flip side, Iran has the ability to tell them to cut it out. So that's why the message has to be at Iran.
Okay, so how about, with all of that said, Hagar, how about all of the above? What odds would you put on an all of the above response to make a point from this administration?
If I had to place a bet, I would say that their response would probably fall somewhere in the second tier. But it could go either way. Second tier meaning certainly an Iranian target, an Iranian high-profile target. There are Iranian leaders of the IRGC who are based in the Middle East. They have vessels and diplomatic embassies, and they have IRGC offices and bases inside the Middle East. Those are not the same as Iran-backed militant groups across the Middle East. So that's where I would expect an action to take place. And as Secretary Blinken has said, we expect this to be long-term. And as you said, it'll be tiers. That's normal. It's not going to be just tonight or tomorrow, whenever this happens this week. There will be multiple steps. And the reason the administration's conveying that message is to say, it's not just going to be this. There is more to come, and we're going to keep you on your toes, wondering what will be the next step.
And of course, this is a decision that the president is making or already has made. We're just waiting to see executed on. But can the U.S. really make this kind of call in isolation when a lot of the strikes it has been carrying out against Iranian proxies have been done in concert with the United Kingdom? Obviously, there's the wider maritime task force in the Red Sea, and the consideration as well of Arab allies like Saudi Arabia, who've been very reluctant to further provoke Iran proxies like the Houthis in particular because of the attacks they have seen from those groups. How does the U.S. need to think about the wider picture here and the other countries at play?
I find the Middle Eastern leaders, all of them, including the Saudis, have been very weak, in my opinion, in pushing back on how Iran has messaged their views since October 7, how the Houthis have been behaving. The Houthis in particular, the Saudis themselves waged a 9-year brutal war against the Houthis. So for them to come off as weak as they've been, I find to be quite a disappointment. And listen, they have their own interests, of course. They're trying to manage their own public opinion while still advancing their national security and economic interests. So I can see where they're coming from. But the U.S., when it comes to a situation like this is an instance of self-defense, and the way the U.S. views it and the White House views it, and this is, by the way, why the White House won't need congressional approval either, is because not only was this an act of self-defense, but whatever the response is specifically meant to eliminate the threat posed to U.S. presence in the region, which is why President Biden can take this decision as Commander-in-Chief without consulting Congress, maybe consulting, but not waiting for congressional approval. And also, he is not likely to consult other Arab allies because it could leak. And I'm sure you've seen the administration has been deliberately very vague on who even conducted the drone attack in Jordan, which Iran-backed group, where was it? We don't know if it was Iraq or Syria, and that's by design because they don't want anybody to be on guard. They don't want that militant group to have their missile defenses up or anything of that kind. The element of surprise is critical, and so if they consult anybody, I would assume it would only be the UK or anybody in what's called the Five Eyes, which is the group of 5 English-speaking countries who share intelligence.
You talk about the modeling that you would have been doing at the National Security Council in your time working for the Obama administration. To what extent is proportionality modeled? We keep hearing that we can't do this forever, responding to every drone attack with $1 million cruise missile. How do we manage this new age of warfare?
Yeah, I mean, the proportionality is an important one and it's very important to the United States, the U.S. government. assess proportionality very carefully, and that comes for any war. And I believe, by the way, for example, proportionality has to do with deeming how big a threat, how large is the threat, how significant is it to the national security of the United States, its foreign policy, its economy. And when something is deemed a significant threat, then that's what determines whether or not you go after that threat, what the collateral damage might be, and how you go after that threat. And there are threats that sometimes the U.S. doesn't go after because perhaps the collateral damage is too big for a threat that is not actually that significant. Something like this is very significant, right? Killing U.S. soldiers, something that results in killing U.S. soldiers, is significant. Now, I've heard some say that there have been 165 attacks since October 7 from these Iran-backed groups, and that this was the 164th, and that they just got lucky on their end. And I don't mean to use the term lucky on us. It's devastating, but on their end. And that might be the case, but regardless, it's a red line. We knew that with this situation and how precarious it would be, that this could be, there's a risk of something like this happening. And so when it comes to proportionality and you have U.S. soldiers who've been killed, and you're facing that threat, the proportionality is going to be assessed. There is no threat they're not going to go after. The only thing that they're going to make sure of is that there isn't a massive civilian death.
Well, speaking of civilian casualties, Hagar, that of course is very much in focus when it comes to the root cause of a lot of this escalation and the way we have seen things intensify in the Middle East, which is the ongoing war between Israel and Hamas. And we know that happening in Paris in recent days, conversations still ongoing, are talks to try to reach a ceasefire agreement in exchange for the release of hostages that are still being held in Gaza, stopping hostilities for at least some period of time, especially considering the Houthis say that they are acting in support of Hamas, of Iranian proxies. If we could see an agreement like that, could that help ease not just what's happening between Israel and Hamas, but what is happening more widely in the region?
I'm so glad you asked this question, because I think there's a lot of misunderstanding about the connection between the aggression pursued by these Iran-backed militant groups and what's happening in Israel-Gaza. So obviously, what's happening in Israel-Gaza and what's happened since then and since October 7 has resulted in a massive increase in these attacks that we're seeing from these Iran-backed groups, militants, the Houthis, all of them. But their claim that they're doing it to fight for the Palestinian mission or cause, or that they're doing it to protest against the war and to protect Palestinians is a lie. The reason they do this is in part because anytime there's instability in the region, whatever it might be, they use it as an opportunity to create more trouble. And the reason they do that is not only because they're troublemakers and they like to do that, but because it's how they gain legitimacy and notoriety. And reeling in a big fish like goading the United States into a war for them is massive. It would allow them to fundraise further, to recruit further, to get more notoriety publicly, to be back on the map, to have Iran look at them like the darling, and so that is why they pursue this type of behavior, and it's why they don't really care about goading the United States into a war, because they have nothing to lose. It's not about whether or not they'd win. They'd obviously lose. It's about putting them on the map. And so if you have an agreement in Paris, and by the way, I'm hopeful that they'll get to some kind of agreement, though I don't expect it to result in a permanent ceasefire. I would expect these attacks to continue without a strong response from the United States. Like, if that response is not strong enough, then I would see these kind of low-level attacks continuing, and that's likely because there won't be a permanent ceasefire. But even if you had a permanent ceasefire, we've seen these attacks for the last few years. It's just been at a lower level. They just always heighten when there's something that goes wrong, when talks between the U.S. and Iran fall, or when things happen in Syria. I mean, they go up and down.
All right, Hagar Shamali, thank you so much, as always, for joining us. We always appreciate your insight on these topics. Thank you for your time. And Joe, it's important to hear from the likes of Hagar. As I've heard recently, in just the last 24 hours or so, this idea that the Houthis may cool things off if there is indeed a ceasefire with Hamas, but maybe the line is not actually that direct, and these proxies have other incentives here.
That's right. You wonder about the political incentive here domestically as well. President Biden being criticized by both sides of the aisle, and he needs to flex to show, to Hagar's point, that the administration is not afraid.
Yeah, a lot of people trying to paint his administration as weak on Iran. So it'll be interesting to see how this moves forward.
That's for sure. We'll have a lot more ahead on Balance of Power. This is Bloomberg.
Bloomberg World Headquarters. I'm Charlie Pellet. We've got the Dow Jones Industrial Average pushing higher right now. We are at the highs of the session, up 95 points right now in the Dow. That is a gain of just about 0.3%. S&P, NASDAQ 100 index, all trading in the opposite direction. S&P right now is lower by 5, drop there of 0.1%. 49.22 though on the S&P 500 index, retreating from a record there. NASDAQ lower by 150 points, down 0.7%. As for the Russell 2000 index of small cap shares, also lower, down now by about 0.9%. 10-year at 4.08% with a 2-year that's now yielding 4.37%. Gold lower a little change, just about flat on the day right now at $2,033 the ounce. Bitcoin up by 0.3%, 43,307 on Bitcoin. West Texas Intermediate crude oil up 1.5%, $77.93 a barrel on WTI. JetBlue Airways among the companies out with earnings this morning. JetBlue shares are lower by just about 4% right now. JetBlue is evaluating deeper cost cuts, delaying aircraft, and reworking its flight network in an effort to return to profitability in the wake of the near collapse of its planned purchase of Spirit Airlines. Spirit, meanwhile, up by 4.8%. Again, recapping, the Dow pushing higher, best level of the day right now, up 101 points, up by about 0.3%. S&P lower, down by about 0.1%. I'm Charlie Pellet. Kaylee and Joe. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you very much for the check on the markets on this Tuesday. Welcome back to Balance of Power.